All right, thanks, Bobby. Appreciate it. So Bobby's in the control room helping us out today, and we'll be helping answer questions from YouTube. If you are joining us on YouTube, make sure to like and subscribe. It helps a great deal, and we appreciate it. Again, welcome to today's Trader Summit. Good morning, Jeff. Good morning, Bobby. Good morning, Horo RH, Sanjeev, O, Anton, Ghana. Welcome, everybody. We're glad to have you here today. Let's go ahead and get started. This morning, I am going to kick us off by reading an exciting disclaimer. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines for interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So we're not here to tell you what to trade today. We're just here to give you some instruction, teach you about the markets and how some of these can apply to you. So let's go ahead and jump in. The first thing I'd like to do this morning is thank our sponsors. So we have a few great sponsors today, the CMT being the first of them. The CMT, or the Chartered Market Technician Association, is a great organization that helps traders understand the intricacies of the market. They offer a lot of different education on risk management, systems development, portfolio management, and applied behavioral finance. So make sure to check out the CMT. We'll be hearing from Tyler Wood today, who is part of the CMT, also Martha Stokes, who is part of the CMT. So some great presenters coming through from the CMT. We'd also like to thank Stocks and Commodities Magazine as a sponsor. They have been around for a long time, helping provide insights to the markets to traders through their publication and traders.com. You can claim your free issue by registering at metastock.com/traders-summit. If you're already here in GoToWebinar, you've already registered that way. If you're on YouTube, you can register through metastock.com/traders-summit to get your free copy, and also register for other free items being given away by each of our presenters. We are Metastock. We are the hosts of today's seminar. We're excited to have you here. We are a winner of Stocks and Commodities Reader's Choice Award for 30 years. That needs to be updated right there. And we're going to talk a lot about Metastock and what it can do, market scanning, back testing, forecasting. I'll be talking a little bit about that later today. And you can get an extended trial at metastock.com/traders-summit, 3 for 1. Well, let's go ahead and introduce our first speaker this morning. Of course, our first speaker really needs no introduction. Steve Bigalow is one of the foremost experts on candlestick charting. We love having Steve in the room because he really gives an amazing take on the markets, what's going on with the markets, and analyzing candle patterns in a way that's different than a lot of the other presenters you'll see who talk about candlesticks. Because he has these great multi-bar patterns that can really help you identify strong trends and combine them with indicators to help you get the most powerful setups. So Steve, are you there?
I am here.
Wonderful. Let's see. I can see you. I can hear you. Let me make you the presenter. All right. You should have that control now.
Let's see. Did we get to the right screen?
First time we did it.
Is it there?
It's there. I can see it. Looks great.
Okay, great. All right, well, welcome everybody. Yeah, I'm usually put first in the agenda, mainly because there's two major facets of candlesticks. One, when they work on their own merits, they're a very informative, very powerful trend indicator. And two, you're going to be seeing a lot of good trading techniques before the end of these the Metastock sessions. And if you put candlesticks on your charts, it makes you see their techniques that much more clearly. So the first question I usually ask is, how many people have seen my presentations before? Y for yes, N for no. That'll give me an idea of how much in detail I'll go into each chart. Anybody? Whoops, Kelly, I don't see any answers coming in. Is that me? Oh, there they go. Okay.
Yeah, here they come.
Okay. All right. So for those of you that don't know me, I, by accident, came across candlesticks over 35 years ago, back when nobody knew about candlesticks. It wasn't that there was anything secretive about it, just nobody was paying attention to it. Since then, I've written 3 books on how to use candlestick analysis effectively. So what I discovered through the years is out of the 50 or 60 signals, there's only 12 signals you really need to learn. We call those the 12 major signals. The reason for that is they are the ones that show up 99% of the time, and they're the ones that create very effective price moves. So just learning these 12. Now that's 6 longs and 6 shorts, meaning 6 bullish signals and 6 bearish signals. So this is effective whether you are a trader or a money manager, that it gives you a whole new perspective of what moves prices. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's what candlestick analysis is. It's the graphic depiction of everybody buying and selling during a specific time frame. So the Japanese rice traders have very simple philosophies. If you see a sell signal in the overbought condition, get ready for a reversal. Now, I use stochastics for overbought and oversold, and my stochastics are 12-3-3. I also have moving averages on my charts. The 50-day simple moving average is the blue line. On another chart, you'll see the 200-day simple moving average. The reason we have those on our charts is because every major money manager around the world uses those to make their decisions. We're not using that to make our decisions. We're using those moving averages to see what everybody else's decisions are. So we have things that show us when it's time to sell and when it's time to buy. Now, I've got some of these out of order. So, and these are the things that we're going to go through today. For example, morph. This is a kicker signal. Kicker signal opens here and closes here. The next day or the next time frame, they open at or above the previous day's open and goes the opposite direction. That tells you the investor sentiment has been kicked in the opposite direction. We also have what we call our best friend signal. That's a doji hammer type day, and they gap it up. This tells us when there's high probability reversals, and not only a reversal, but the magnitude of that reversal is going to be extremely strong. So we use what we call 2+2 analysis. This is one of the major patterns, a fry pan bottom. You could see that you couldn't trade this one way or the other because it's just junky trading. But here's what we call a trend kicker signal. It opens here, closes here, creating a dark candle. For those that are new to candlestick analysis, if it opens and closes below where it opens, it's going to create a dark candle. If it opens and trades above where it opens, it's going to create a green candle. Doesn't necessarily mean the price is up or down on the day, it just tells you what's happening after the open. So we know the trend kicker signal is one of your strongest signals. We know coming out of a fry pan bottom, if you see a breakout, you're going to have a very strong price move. So we've got the 200-day moving average. We've got the 50-day moving average. But here's the most important moving average right here. This is the 8 exponential moving average we call the T line or the trigger line. The T line has Fibonacci characteristics. It acts like a natural support and resistance level of human nature. I always put this on the front end of our charts because this is the most comprehensive slide. If the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame, showing you what's going on in investor sentiment, and the T line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful trend analysis system. Now, the reason the T line is so effective is it gets rid of your emotions. It counteracts human nature. Before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. But when candlesticks came along, I said, well, this is making sense. So I can hold on to something until I see a sell signal. But when I added the T line onto my charts, it gave me a whole different perspective. That if I don't see a sell signal and a close below the T line, it gets rid of that fear factor. The fear factor is, if I had a profitable trade before candlesticks came along, what was my biggest fear? I needed to take profits when I had profits because, boy, would I sure look stupid if I let those profits go back to a loss. Now I can at least comfortably watch the trend and say, I want to stay long until I see a sell signal and a close back below the T line. So here is one of the strongest truisms about candlestick analysis. If you see a candlestick buy signal to close above the T line, you have an extremely, and I stress this word right here, you have an extremely high probability that an uptrend is in progress. Same thing on the downside. If you see candlestick sell signals and a close below the T line, you can stay short until you see that candlestick buy signal and a close above the T line. What this does is it eliminates that, emotional trading decision. Say, no, boy, I've got a big profit and this might be a reversal signal. I better take profits. Well, until it closes above the T line, you don't take profits. This is what greatly improved my probability of being in a strong trade. So again, that same scenario. If you see a candlestick sell signal and a close below the T line, you have an extremely high probability that you're in a downtrend. That becomes very effective, especially if you're in a profitable trade and you're waiting to see when it's time to take profits. So here's the basis of candlestick analysis. If you see a reversal signal and a close above the T line, you don't have to do any analysis until you see a sell signal to close back below the T line. Same scenario on the short side. Evening star signal. It's a big candle, a day of indecision, and if the third candle closes more than halfway down this candle and it closes below the T line, you can start thinking about going short, and you stay short until you see a buy signal and a close above the T line. Now I say time frame. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart. Right now, I'll trade commodities during the day off the 10-minute chart. Most of my positioning is swing trading stocks, which means I'm using the daily charts. So if you're a longer-term investor, you might use a combination of the daily, weekly, monthly. They all work and they all look exactly the same. This chart right here could be a daily chart, a weekly chart, or a monthly chart, or it could be a 1-minute chart, 5-minute chart, 10-minute chart. So this is how we can use scanning softwares like Metastock to pick up the high-powered trade setups. So the best friend signal is very simple. If you see a doji, especially in the oversold area, followed by a gap up, the reason we call that signal your best friend is because it has an extremely high probability you're now in an uptrend, number one, and number two, the magnitude of that move is going to be extremely strong. So another simple analysis, if you're in the oversold area and you see a very strong reversal signal and a close above the T line, if I've got 10 positions on any given day, my analysis lasts maybe 3 seconds. Look at this and say, well, we're above the T line, above the T line, above the T line. Whoops, a possible sell signal, bearish engulfing signal. So now it's my strategy. If it opens lower and starts trading below the T line, I take profits. Otherwise, you continue to hold this position. Again, this is an extremely high probability scenario. So anytime you see that best friend signal, especially in the oversold area, you can start buying. That best friend signal is telling you you're now in another strong wave. The bigger that gap up, the more compelling it's illustrating there's been a drastic change of investor sentiment. Oops, I forgot to reiterate what Kelly said. If you've got questions, feel free to ask as we're going along. I'll try to answer them as fast as possible. So now what happens is we know the signals, we know what the trend should do, and we know what type of patterns occur in that trend. So this one is a J-hook pattern. Wave one, wave two, and kind of a J-hook. But what is very important or compelling to identify a pattern is, notice they could never close it below the T line. Is the T line one of the indicators available? Yes. On Metastock? Yes, Jim. All it is the 8 exponential moving average. You put it on your chart just like you would the 50-day simple moving average or the 200-day simple moving average. So this is all just analysis of identifying what moves prices. Again, prices move based upon investor sentiment. We're just identifying what the Japanese rice traders have illustrated over the last 400 years as being very high probability trade setups. So anytime you see a doji gap up, especially down here in the oversold area, the probabilities are extremely strong that not only are you in an uptrend, but you're going to be in a very strong uptrend. So we have what we call 15 top ranked signals and patterns, which are already now built into the add-ons for Metastock. Now, once again, this is nothing more. You don't have to be a sophisticated technical analyst to understand what's going on in candlestick analysis, because the signals and patterns are already telling you what's going on. So again, if you're a trader or managing money, what the whole concept of candlestick signals and patterns tell you is what's going on in investor sentiment, so you have a much stronger degree of accuracy of knowing what's going on in a price trend. So Weight Watchers not too long ago, look at the doji gap up. It's continuing its uptrend. Same scenario on the downside. This is what we call observe the obvious, because what indicators do most people watch? They're watching to see what's happening at the major moving averages. So if you see a bounce back up to the 50-day moving average in the overbought area and see a doji, there's another rule out there. It's called the doji rule. And that is the price will usually move in the direction of how they open after a doji. So if we've had a doji up here and the next day they open it lower, the probabilities are pretty strong. They're still heading lower, which becomes very strong evidence that the 50-day moving average is acting as a resistance. You can short this one again. Doug, I think Kelly's going to illustrate that when I get done of how you use the Metastock scanners. All right, so everything that we recognize is that prices move in patterns. The Japanese rice traders illustrated that hundreds of years ago. Now, as you can see what's happening in Rivian, big downtrend. They bounced it up, but you can see how they've rolled it over. And then on a couple of trading days ago, you had a doji gap down. That tells you there's a lot of selling force, which means you're probably in wave one, wave two of a bearish J-hook pattern. And look where the gap down occurred, right here at the last support level. When it went through that, there's still high probabilities or a lot more downside. So the J-hook pattern is one of the patterns in our add-on, because there's three basic J-hook patterns. The J-hook itself is a strong price move, and then it pulls back, and usually pulls back to our indicator, the T-line, and then the J-hook, wave three. So we know there's some very consistent results of a J-hook pattern. That wave one and wave three are going to be approximately the same. Now we've got two chat rooms on our website. I've had a website up since 2001. We teach people how to use candlestick signals and patterns effectively. We've got an option trading room and we've got our regular room. But this allows us to make decisions with much more confidence and a lot higher degree of accuracy. That if wave one and wave three are the same, and we can see there's a J-hook pattern, now we can do option strategies where we might be buying calls right in here. And as it moves up in the pattern that we expect, now we might add some spreads up here, inexpensive spreads, that if we're paying 60 cents for a spread, but if the pattern works like it's supposed to, that 60 cents moves to $5, which also is being enhanced by the original calls that we bought. So the J-hook pattern is where you see a strong uptrend and a pullback. Now look where this pullback occurs, right smack dab on the T-line. So we could either be buying here. This is a doji sandwich. This is another pattern that we have on Metastock. Doji sandwich is merely a bullish candle followed by a doji. And now we use our doji rules. The price will usually move in the direction of how they open after a doji. Well, if it opens positive, we've got double confirmation. One, we know that this candle right here is likely to be the same as this candle right here with the doji sandwiched in between. And two, it tells us the T-line's acting as support and starting the next wave. So we could either be buying here or buying here after it's broken out through this level, because when it breaks out through this level, what's our simple observation? Wave one and wave three are likely to be the same. So the J-hook pattern, pulling back to the T-line. This is why the T-line is very relevant. The T-line is relevant because nobody has the T-line on their chart. It acts exorbitantly strong as far as indicating when a reversal or a support level is acting. So look at our best friend signal that started this uptrend, broke this downtrend, started the next wave. Then we had indecisive trading back to the T-line. And then notice our kicker signal, again, one of the strongest reversal signals. So when that kicker signal occurred, our assumption was, well, we're in an uptrend. So where would our likely target be? Well, if this is wave 1, wave 3 is probably going to be up here. That's where you start looking to take profits if you got in again on this trade. So the J-hook pattern supports off the T-line. See what else we got here. Supports off the T-line, and when it breaks through this level, I think this is working right now, that you're now in wave 3. Yep, okay. Now we have also what we call a J-hook plus. A J-hook plus is identifying a J-hook, but it's doing it right smack dab at a level that everybody else is watching. This is called a left-right combo. Anytime you see a doji in conjunction with a signal. So you can see there was a doji followed by a bullish engulfing signal. This is one of your strongest reversal signals, called a left-right combo. The left being this little jab, the right being this big roundhouse right, telling you our next wave is going to be the same magnitude as this wave right here. So again, this is not rocket science. If you just put candlestick signals on whatever trading technique you're using, it's going to dramatically improve your ability to see what's happening in that trend. So the J-hook plus is very simple. Look at your little kicker type signal, pulls back right smack dab to the 50. Now, anytime you see a doji, remember what that represents. That tells you there's indecision between the bulls and the bears. So they're trading indecisively at the 50. If they open up positive, the T-line rule says, well, they're going to be trading positive. That tells us what? Wave 1, wave 2, where's the next likely move going to be? Up here. So this is a clear illustration that prices move in patterns. Not because they're patterns, it's because human nature works the same way time after time. So here's even another more compelling J-hook pattern. They come up right to a resistance level. And you can see it's been acting as resistance. Then they pull back, but notice what they couldn't do. They couldn't close it below the T-line. So we could be aggressive buyers. If we took profits here, we could be aggressive buyers right here. Because what do you think everybody and their brother is watching? They're watching to see what's happening here at the 50. We could be buying aggressively. Now, the nice thing about candlestick analysis is not only do the charts tell you when to get in, but they also tell you when to get out. I'm sure every single one of you have heard that you're supposed to cut your losses short and let your profits run. I've heard that for over 45 years, but I've never heard anybody tell you how you cut your losses short and let your profits run. Candlestick analysis makes that very simple. If I was buying here, what would I be expecting? A bubble breakout, strong price move. But if I bought here and then it closed back here, what's it telling me? The 50 is still acting as resistance. That is not a good trade. Close it out. So the old cut your losses short, let your profits run. That's exactly what candlestick charts tell you. When something isn't working, you get right back out so you can move on to something that has better prospects. So anytime you see that failure at a resistance level that everybody else is watching, and look at our spinning top. A spinning top is just a bigger body doji, but it still represents indecision. When they started trading positive, where do you think the next target was going to be? The 200. Now, what type of pattern is this? Well, there's our J-hook plus. Notice how it hovered right here at the 200, followed by a bullish engulfing. So if this was wave 1, or if this was wave 1, wave 2, wave 3, now this becomes wave 1, wave 2, wave 3. So there's extremely high probability trade setup confirmation. Remember, when we looked at a fry pan bottom, it was kind of a rounding bottom that was very junky. You couldn't trade it one way or the other. What we're looking for is coming out of that rounding bottom, and look at your best friend gap up. And what did your best friend gap up do? Gapped up right through the 50. We're looking at this setup where everybody and their brothers watching to see what's happening at this level. The fact that they gapped it up as a best friend, the implication number one is there's more upside out of your best friend. The implication coming out of a fry pan bottom is that there's more upside. So this puts you in a situation where instead of thinking, well, I'm chasing after something, it's telling you this is a strong reversal. You want to start getting into it. So this is my rhetorical question. When you see a fry pan bottom and it's breaking out, do you always get big, huge price moves like this? The answer is obviously no. But the probabilities of being in a situation like this is extremely strong, because this is what is telling you is building up that fry pan bottom with the expectation of a fry pan bottom price move coming out fairly strong. So Electronic Arts, there's your fry pan bottom. Where did it break out? Right here, that level everybody is watching. Again, everybody else is watching to see what was happening at the 50. We're watching to see if this pattern is breaking out, giving us this strong price move. This one is still in operation. So the fry pan bottom has expectations. This big, strong price move. The dumpling top is the opposite. It's a rounding top with this type of expectation, a strong move to the downside. So what we're doing is we're identifying what human nature does. The candlestick signals have proven results. They are the results of the Japanese rice traders' analysis over hundreds of years. I always point out the fact that the Japanese rice traders did not become wealthy because of candlestick analysis. They became legendarily wealthy. And they became legendarily wealthy on the most boringest trading entity in the world, rice. But it was not based upon price movement, supply and demand. It was based upon what was going on in human nature. Cat, you're not making this any better. So here's one of your strongest reversal signals, the kicker signal. Again, it opens here and closes here. The next day, it opens at or above the previous day's open and trades the opposite direction. This starts a very strong price move, or the expectation of a very strong price move. And how long do you hold on to a position like this? Until you see a sell signal and a close back below the T line. Again, this is not rocket science. This is just identifying what the Japanese rice traders have provided for us over all this time, or I guess last 400 years. Works just as well on the downside. If you're in an uptrend and they're gapping it down below the previous day's open, if you're in this position, there's only one thing you want to do: close out that position immediately. Because logic says if you're in an uptrend, they shouldn't be gapping down, especially in the overbought area. Close it out. There's been a drastic change of investor sentiment. Or if you see that setting up, you can start shorting this with much more confidence, because that's telling you there's a strong force to the downside. So whenever you see this type of situation, we call this a trend kicker signal. Notice how your trend has already started. There's your fry pan bottom, breaking out at the 50, closed or open here, closed here. And the next day they gap it up at the previous day's open and goes the opposite direction. The trend kicker signal itself tells you there's still a lot of bullish force. Number one, Number two, it's telling you the 50-day moving average is not acting as resistance, which is what most people are watching. And number three, what do we expect coming out of a fry pan bottom? A strong price move. And how do we identify it? By seeing a very strong individual candlestick signal. So anytime we see a high probability trade setup, this one was just a recent trade. Notice it failed right here at the 50. And then look at your little trend kicker signal coming back up through the 50. It gaps up. What's that telling us? Wave 3 is in progress. Where do we think the next target is going to be? Now, knowing what these patterns are showing us gets rid of that flawed investment philosophy of people saying, oh yeah, that's a good chart. I'm going to wait for it to pull back so that I can get in at a better level. There's two flaws to that analysis. One, if we see a bullish chart pattern, we want to see the bulls still taking control. If they're pulling it back, what's that implying? But there's not a lot of bullish sentiment. You shouldn't be in it. Or two, the immaculate entry strategy, that if it pulls back to where you think it's time to buy, that as soon as you buy it, your immaculate entry philosophy says it's going to turn right around and head back up. That's wishful thinking. What we're looking for is bullish confirmation that if this is wave 1, this starts wave 3, we know where our high probability target is. So I always tell people, we're not trying to buy at the absolute bottom or sell at the absolute top. We're trying to get that fat part in between. The more correct trade ratio, or the higher your correct trade ratio, the higher your compounding effect is going to be. So there are trades where you have a strong price move, but where do you get in? Do you buy here? Do you buy here? Do you buy here? Well, because candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame, this becomes a very easy trade. You flip to your 10-minute chart. You might be buying here, you might be buying here, you might be buying here. You might not be buying here, may not be buying here. But now you can see what's happening again. It's taking it back up. This is a double doji setup. This is your doji sandwich setup. You could be buying here, buying here. So you can get into a position when you've had a big intraday move, knowing that if I bought here, maybe I'm taking profits here from my day trade. Whoops, I can see that they're starting to buy again. I might be buying here and holding on till the end of the day. Same thing here. Remember our rule, the T-line rule. Oops, I didn't tell you the caveat to the T-line rule. You can buy a buy signal if it closes above the T-line. You can get ready to sell when you see a sell signal to close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back down and test it. So on a chart like ALLK that had a big price move, it's very simple. Look at your T-line rule. You started moving too far away, there's your doji. And we get ready to take profits on a day trade situation, because if it opens positive after a doji that far away from the T-line and starts trading positive, where do you take profits? Well, if they come back down through the open, you're probably closing out the trade. Or at worst case scenario, if it comes back down through the doji low, you're closing out the trade, because where do you think the next likely target's going to be? At least back to the T-line. Again, this is not rocket science. Human nature works the same way time after time. You can use the signals to tell you when something new is coming into a sector. You can see on GFAI where it broke out of this little fry pan bottom. You can see what the activity was after that. So whether you're a trader and you're trying to get into the big price moves, or if you're a money manager, you can start analyzing what there's new interest coming into this sector. Maybe I should start investigating what's going on in that sector. So anytime you see a chart, look at your left-right combo in the oversold area. There's your uptrend. Look where your sell signal, your hanging man, doji. And where did it pull back to? Right smack dab, bounced off the 50, couldn't close below the T line. So if you took profits up here, I used to, if I ever had a profit in a trade before candlesticks came along, I was just happier than a pig in doo-doo. But if I took profits somewhere up here, I wasn't going to get back in, because they sure weren't going to trick me to get me back in and then turn it around again and take some of my profits. At least now I know what happens in human nature. So there's our bobble breakout. But if I closed out a position here, I'm buying back here, because what do I expect? Wave 3 to be the same as wave 1. All this does is gives you a good, strong framework of what's going to happen in a price move based upon historic results. So our recommendation today on CYH was based upon, look at your little J-hook pattern setup. Look at your best friend signal that gapped up on Friday through a level everybody else was watching. What's our expectation from this? More upside. Now, that's also going to be a function of the market. Obviously, if the market was opening down 200 points, we're not going to jump in. Right now, the market is wildly exciting. It's up 17 points. I don't know where the NASDAQ is. But anyways, this would show us that if we were starting to, or the market was acting strong, we could be buying because of this signal right here. So,
Hey, Steve, I've got a YouTube question if you wouldn't mind answering that.
Don't mind it, I'll go right ahead.
Back a chart or two, you were looking at BSM, and someone was asking what the white light gray line is on that chart.
Oh, this gray line right here, this is the 34 EMA. So the nice thing about candlestick charts are the most relevant factor of the chart is the signal themselves. So I could take everything off this chart and have a buy signal in the oversold area. That changes the probabilities that we're, and the Japanese race traders have a very simple philosophy. If you see a candlestick buy signal in the oversold area, the probabilities are an uptrend starting. If you see a candlestick sell signal in the overbought area, more than likely there's a downtrend starting. So that is the most important factor on a candlestick chart, is the signal. Anything else that you put on the chart should enhance the probabilities of being able to analyze whether that buy signal is working. So the T line is the most effective. Then we have the 50 and the 200. On some of my charts, I have the 3 exponential moving average, which works in conjunction with the T line. I've also got the 34 on here that works relatively well. So anytime somebody says, well, put the XYZ indicator on your chart, well, you can. And if it doesn't enhance making money, take it back off. The more simple the chart is, the more you're still basing your decisions on the candlestick signal. How many waves could be traded before it gets extended? That doesn't matter. You're not trading waves. Now, if this is wave 1, and this is wave 2, and this is wave 3, well, if this comes way up here and takes profits and pulls back, now this becomes wave 1, wave 2 and you're starting to watch wave 3. Again, the most important factor is what's happening. When is it time to buy and when is it time to sell? So these type of charts say, well, it's time to buy because there's your best friend gap up, your stochastics curling back up. How high could this go? Have no idea. I'll hold on to this if we buy it until we see a sell signal. What is the purpose of the 34 EMA or came from? James, it's just one of those indicators. Some people like to have the 20 simple moving average. The 34 works reasonably well. If it didn't, I'd take it back off, but you can see the 34 kind of acted as a support level here. So what I don't want to have is a cluttered up chart. I want to have it fairly simple so that the signals become the most relevant points. So the condition is candlestick pattern, 8 EMA, and overbought, oversold. Can this be filter in FizzWiz? I guess so. But what we have done, and I'll let Kelly go into that in more detail. Jeff Gibby and I started working together, well over a decade, maybe a decade and a half ago, to start putting our formulas on. So Kelly will show that not only does it tell you what the signal is, but then if you want to have a description of that signal, it gives you, it shows you what's actually happening. Ask him, please. Oh boy, I don't have the links here. Victor, the book, the first book, I've written 3 books. The first one was through Wiley and Sons, but the second book, High Profit Candlestick Patterns, is the meaty one. It shows you the signals and patterns. And now it's on Amazon, but it's like $98. If you go to our website, www.candlestickforum.com, and go to products and services, it's $55 there. Meaning to use these to generate scans. Yes, those scans can already be applied. And again, this is what Metastock is, and our information makes it very simple. Not only does it identify the signal and pattern, but it also explains what that signal and pattern is. So if you're in the learning process, you're recognizing the signal and pattern and then having it described to you. So candlestick logic is very simple. It shows you the signals that tell you when it's time to buy. So if you're seeing a candlestick buy signal, like a trend kicker signal and a gap up, you can stay long, and using the candlestick philosophy or the candlestick rights traders philosophy, where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. The reason I became so good at candlestick signals is, even as a stockbroker, I often thought, how come when I told everybody to get out of a position that looked bad, it immediately turned around and went the other day? Or as soon as I got everybody into a position, it turned around and went back down. That's because investor sentiment works the same way time after time. So candlestick charts are fairly easy to utilize. Tells you when it's time to buy and when it's time to start taking profits. And the reason for that is, unlike most technical analysis that suggests when things are going to be working, candlestick charts tell you what is actually happening in candlestick signals. On CYH at the bottom of the J hook, can you discuss the candle? Oops, let me go back to it. I don't want to use up too much time because I want to let Kelly show onto at the bottom of the J hook. Can you discuss the candles close? Oh, but look how close it is right here. So if you were looking at this and you saw it kind of pull back, where was it to the T line? It was just right there. Then you had a bullish engulfing signal, then a doji, then a gap up. So basically you're seeing this kind of trajectory settle out right in here at the T line. And now the buyers have come in with great strength. So we're not looking at this as analyzing this, because up until this point, you probably wouldn't even be looking at this chart. But from this point, where your best friend signal, now you look back and say, wow, I had a kind of a J hook right here at the T line, up through the 50, look for more upside. Breakout, uptrend, gap up in the overbought condition, moving away from the T lines, start looking to take profits. Do you have an extensive course to master? I do. If you, again, go to our products and services, we've got dozens of training videos that show you how to use the 12 major signals, how to recognize the patterns, when to get into a trade, when to get out, when to take profits, how to use stop losses. And our membership at the Candlestick Forum is we've got a chat room that's open all day long. We usually have let's say 130 to 150 people in the main room, another 25 in the options room. And it is a constant flow of people that know what they're doing or have been around for a while, describing or indicating which charts are setting up the best. And if you're in the learning process, if somebody puts a symbol in and says ABC is doing a J hook pattern, and you look at it, you might say, well, what is a J hook pattern, or how do you identify that? You're going to get answers right away. I usually come in 2 or 3 times a day to analyze stocks. And then on Monday nights, we have a full training session for members. Thursday nights are open to everybody. So it gives you a good idea of what information we're looking at. Again, the information we're looking at is not conjecture. It's telling you what people are actually doing. As a matter of fact, we've got a 2-week free trial. This allows people to come in and see the logic behind candlestick analysis. So I don't know whether I can get that over. Kelly?
Yes, I can post it in the room, so everybody can click on it.
All right. So anyways, we've worked with Metastock, Candlestick Forum and Metastock together now for, I want to say, well over 15 years. And it's one of your most comprehensive softwares that basically demonstrates when the strong signals and patterns are setting up and describes them. So with that, if there's any more questions, let me know.
Yes.
Otherwise, I'll let Kelly describe how the software add-ons work.
Steve, can you go back 1 slide just so I can get the link correct? I'll type it in, but I wanted to make sure I got it right. Okay.
And if you have any trouble, you can always email Abraham at candlestickforum.com. Hey, Steve said we could do a 2-week free trial. So again, I'll reiterate the reason I'm usually put first in these sessions is no matter what trading technique you're looking at, if you apply candlestick signals on top of your chart, it greatly enhances your visual ability to see whether that technique is working or enhances the ability to see that technique working.
Let's see. I'm just looking at YouTube to see if there's any other questions. It looks like the question is this going to be recorded so I could come back and review the awesome content? Yes, on YouTube, just click on the same link that you're on, and that'll be the recording. And then lots of great feedback about you, Steve. A great presentation. Steve Bigelow's the master. We love Steve. Awesome stuff. Thank you to Steve. As always, Steve, amazing and awesome stuff.
All right, well, thank you. Okay, I'll let you demonstrate how the add-on works.
Perfect. I will go ahead and take that. Let me jump over here. Let me take back control from you. And then, Steve, I'll go ahead and dismiss you so we don't close the room up. Thank you again for your time, Steve. Much appreciated. And thank you for great content once again.
Thank you. Thank you, everybody.
Okay, let me share my screen. Okay, sorry about that. Just making sure that you're seeing my screen, which it looks like you are. Okay, great. All right, well, let's talk a little bit about the candle profit systems for just a moment and what it contains, because there's a lot of great content inside the candle profit systems. And let me just, before even doing that, let me just talk a little bit about what Steve was talking about in Metastock, where you can actually see the candle patterns identified on the charts with his candle profit systems add-on. So here I'm just looking at the Dow, and he was talking about we're kind of having an exciting day on the market. It's looking pretty good so far. And you can see that Steve's system here is identifying a bullish engulfing pattern. So what's great is, as you look at a chart with his add-on, it will actually go through and identify all of his major patterns that he's identified. And right on your chart, you're going to be able to see what's going on with them. And even better is it's kind of like having Steve right next to you, because what you can do is you can come into this expert commentary, and it's going to tell you exactly what it is you're looking at on your chart and how to trade it and how to analyze it. So this is what's fantastic. So we have actually a couple of things going on here. We have a bullish engulfing, but we also have an inverted hammer. So the inverted hammer is the more powerful one right now, and that's why it's displaying this. So an inverted hammer pattern has occurred on the current bar. The inverted hammer occurs during a downtrend. So we can start to see that downtrend coming in. We can see the market pulling back. This pattern is a sign of bullish reversal, particularly when it occurs at a major support or resistance level. As with most candle patterns, traders should look for confirmation on the subsequent bar. Okay, so we can quickly identify what's happening. And if I wanted to go back to any of these patterns, I could just click on them to see what's going on. Now, what I want to do is actually talk about how you can actually scan for these patterns and pick up on current patterns. This is a question I think that was being asked by Doug earlier on how to actually do that. So let's go in, let's hop into Metastock here, and I'm going to go into the Explorer. Now, Steve has a bunch of different patterns that he scans for. So I'm going to search for CPS here. That's the candle profit systems. And you can see these are all broken out by his different setups and patterns. So I'm just going to show you an example of the Doji Dynamite, just to show you how that works. And I'm going to scan the S&P 500 by selecting that down here. And then I just start my exploration. And what it's going to do is it's going to go through the S&P 500 and identify ones that are giving patterns right now. So actually setups right now. So let's see what we actually get. So let's see, just some questions. I'm trading in India right now, not US market. So Metastock will work on the India market. We provide Indian data, and you can do all the same analysis on the Indian market versus the US market. It'll scan and do the same things. This is not Meta with the buy and sell scan. So this is Metastock that we're showing how to use it to buy and sell. So let's show you here. So this is a bunch of the different doji patterns here. We can see there's no doji tops, no doji best friends, but we do have a doji sandwich. We do have the doji sandwich, bullish. Okay, let's open up Amerisource here. And what this will do, this will actually show us that doji sandwich right on Amerisource. So you can see I scanned it. I found that opportunity, and it will highlight it right on my chart for me. So I can see the doji sandwich here. I can then come in and I can view the commentary again. And it tells me the doji sandwich is a result of consistent aspects of human nature. It provides an extremely high probability result. The doji sandwich occurs after the initial reversal signals have been identified, and the doji sandwich indicates a more potential upside. Take advantage of this trade, should look to target resistance. Okay, so you can see it's really easy. It's going to help you scan for signals. It's going to give you that advice right on your chart and how to use all of Steve's setups. So let's jump back over here. I'll just show you, these are all the multiple day patterns that it identifies, all of his price patterns, power signals, J hooks. Here's all of the single bar patterns that Steve identifies inside of this. And then, so it includes 6 explorations, 1 expert advisor, 3 layouts, and 36 different patterns that it will identify on your charts for you. So this is normally $499 to go with Metastock. So you buy, if you have Metastock, you just buy this as a one-time purchase. It's normally $499. You can get it for $399. We're also offering a training boot camp that Steve has put together. Someone is asking about great training that Steve offers. Well, Steve worked with us to put together 10 hours of training on his most powerful candlestick patterns. When we initially talked about it, it was going to be a 6-hour course, and it ended up that Steve worked really hard and put together 10 hours of training. So we put together this great training course with Steve. It covers market trend analysis, identifying the most robust candlestick setups, successful trade entries, when to close a trade, and what indicators to work with to trade and take profits. So lots of good stuff. So this is from Steve and a 1-hour bonus video with Jeff Gibby. This is normally $899. You can get it for $449 as part of the webinar special. And all you have to do is go to metastock.com/sales chat or call 800-882-3040 to talk to one of our sales representatives. And we actually have a training package that's a combo of the add-on and the training package that Steve put together. So it includes the Candle Profit Systems 2.0, the training boot camp. If you don't have Metastock, you want to try it for a month, we're going to offer you a free month of Metastock RT and Zenith data. Unleash the Power of Metastock, which is a great training book and video that we offer. Normally $13.98. You can get that for $6.98 today by calling 800-882-3040, visiting metastock.com/sales chat, or go to metastock.com/candlestick-forum-D. Okay, so that's how to access that. I'll put those links up in the chat in just a moment. But first, this is the action pack for today. We have lots of great speakers, as I've mentioned, coming through today, and we have lots of great products being offered by these presenters. So you can get Steve Bigelow's CPS plus the training, the GoNoGo Complete, 3 months of RMO ATM, which we're going to talk about next, Anne Marie's Target Rich Trades, 3 months of Learn Metastock, 2 years of Stocks and Commodities Magazine, and Unleash the Power of Metastock. Normally $5,500. You get it for $23.92. And you can get that at metastock.com/summit deal. All right, let's once again thank our sponsors. We're going to thank Stocks and Commodities Magazine. They have been a sponsor of the summit and our conferences from the beginning. So we'd like to thank them. If you are on YouTube and you haven't registered for the summit, you can register at metastock.com/traders-summit to get a free copy of the Stocks and Commodities. And if you spend $300 or more today on any of the products, you'll get a complimentary 2-year subscription to Stocks and Commodities. Okay, let's go ahead and jump to our next presenter. Our next presenter is Rahul Mohindar. If you haven't listened to Rahul speak before, you're in for a treat. Rahul is so good at helping traders understand the intricacies of the market. I've been working with Rahul for 15 years now. I've known him for 20. And every time I listen to Rahul, I learn something new about the markets. Rahul is often featured on different TV shows like CNBC, CNBC in India, CNBC Awaz, just helping and talking about the markets. And I know you're going to love what he has to say today, talking about volume, I believe. Rahul, let's go ahead and bring you on. You there? Let's see, Rahul. I can see you're in the room, but I cannot hear you yet.
Okay, let's hope you can hear me now, Kelly. How are you doing?
I can hear you now. You sound crystal clear, and love hearing those tones of Rahul.
Fantastic. Well, likewise, I think you're right. 20 years. I was just trying to resonate back into how long we've been associated, and it's amazing.
It is amazing. It's kind of crazy. Well, let me make you the presenter here. So you should see the option to go ahead and share your screen now.
Absolutely.
All right. I am
see the presentation.
I am seeing your presentation. You are sounding good. I can see everything. Let me go ahead and get out of your way.
Thanks, Kelly. So, friends, today you're up for quite a treat. I see that there's a wonderful lineup that Kelly's put together and the entire team has put together for you. And I think one of the reasons why Viratech and myself are so committed, to Metastock is because of this passion they've always shown to educate users. And there are a lot of people who try and sell you softwares, try and sell you a newsletter, but I think it's the follow-up education, the hand-holding that all counts. And I'm a great fan of the way Metastock does that delivery, because it's not just a product, it's an experience. It's a product that's backed by solid support, training. And I think that's what we at Viratech also do. Is to try and deliver to you not just an add-on or not just an indicator, but I think the entire suite is only going to shine for you, is only going to make money for you when it's bundled in with the right kind of training, the right kind of education. And, this is something which I've been very passionate about myself. I've been fortunate to travel across the globe with Scott, Kelly, Jeff, and I think we've spoken at various different conferences, events, where I've showcased how you can use the inbuilt RMO inside of Metastock to your advantage, no matter what time frame or symbol you trade. I myself personally talk to you, with an experience of over 20 years in the markets, and myself, I am a real life trader, investor, someone who does derivatives, including options. So, I really speak to you trader to a trade. I'm not someone who's out there just putting out newsletters. Yes, I do appear on Bloomberg, CNBC, etc. That's more in terms of, just commenting on the market. But again, I really enjoy trading for a living. I really enjoy investing in trading the markets, and essentially I focus on the US as well as the Asian markets. But again, I could clearly say that it doesn't matter if you trade FX, doesn't matter if you trade commodity. There's a lot of scope. There's a lot of potential. I've obviously dabbled and looked at various symbols, and I can tell you what I'm trying to share with you today is something very easy, very candid, something that you can go back and use, right off the bat. So I've always talked about the RMO, which is inbuilt of Metastock, and a lot about my ATM. And you'll find a lot of webinars as well, which I've done probably even on YouTube on the Metastock channel, where you'd be able to see what the ATM is all about. So today I'm going to dive into the elements of volume which we use in the ATM, and how you can really hone your entire trading strategy and make this a little more solid for yourself. Because in my opinion, what's happening to a lot of traders is we're focusing a lot on the trend. And I think I always say this, that there are three cores in trading. There are three cores in your system for that matter. One is you need indicators that detect the trend, detect the direction. And when I say detect the trend or direction, I mean short term, medium term, long term. And I think the RMO does a beautiful job right out there. And then we have to look at trade management. So once you take that trade, right up to points like what's my stop, what's my trailing stop, how do I hold this trade through? Because managing that trade is very important. And at the same time, managing one's mind is very important. And the best way to manage one's mind is by having solid methods and models where we know that this is how we're going to trail our stop and this is how we're going to trade to a trading plan. And finally, I think the one underdog, the one element which is kind of looked very briskly is volume. Whereas I think volume does three very big things. As I've pointed out, detects reversals, can help you detect a breakout, and at the same time confirms your setup. You've often heard, this sentence that if price goes up with volume, that's a good signal. Or if you get a breakout and that's coupled with good volumes, that's a more valid breakout or a more confirmed breakout. Yes, that's true. But if you start reading deeper into volume, I'd like to put it this way, that volume is equal to number of shares traded in some people's opinion, or the number of transactions. In my opinion, volume is equal to money. Volume displays the actual money that's flowing in into that symbol at that price. So if volume is equal to money and money is what you're chasing, we're really missing the plot if we're not making volume a high priority indicator for ourselves. So I'm here to share with you what we are doing within the RMO ATM add-on, within the suite that you're using with volume. And if you could just focus on these elements alone, where you could take your trades with volume. So the first one is the SWI. The ATM stands for Automated Trend Modules, in case you're new to this, and it really complements the inbuilt RMO. And the first one I'm talking about is the Strength Weakness Index, or SWI. That's what I mean by SWI, Strength Weakness Index. How do we gauge strength or weakness? So when I say that the SWI really uses volume as its essential ingredient, what I mean is if price goes up with volume, that's a confirmation of the uptrend. But if price goes up without volume or with a declining trend in volume, that really isn't a breakout. It could be what we call a fake out. And that's my worry, is do you have an indicator which tells you that just because price is going up, that's not good enough? You really don't have the volume or the money backing you, which is what is going to create maybe a sideways zone or a fake out. So my whole goal with the SWI is to measure this movement of price with volume, to measure that when the price goes up, how is the volume going up? And when the price comes down, is the volume accelerating or not? So similarly, if the price breaks down or goes down, if the volume increases when the price goes down, that is an indication that this sell is a solid sell and a more accurate signal, because it's got the backing of volume or money. So what I'm trying to tell you is use the SWI, which is the single line across the chart. This red line that you see, which dissects your chart, is what I call the SWI, or the Strength Weakness Index. This updates in real time for those of you with Metastock Zenith. But for those of you with the end of day, obviously it will update with your end of day data as well. The blue shaded bars indicate that the price is above the SWI line, and the red shaded bars indicate the price is below the SWI line. So if price is below the SWI, we expect weakness. And mind you, the only indicator which it is using is that, is the price going up with volume, or is the price going down with volume? It's the only indicator. The volume is the key indicator in the SWI calculation, and that's the measurement which it's using. So yes, I cannot apply the SWI, let's say, on an index. But if you, let's say, traded the Nasdaq, you can of course apply it on the QQQs. Or if you traded, let's say, the Nifty in India, you can use it on the Nifty futures. But don't use it on the spot symbol or the index symbol, because that doesn't carry volume data. Because SWI is pure volume; it's hardcore volume. So when you see blue colored bars, and when you see that first one, that's an indication to go long just on volume alone. I know a lot of us are using price-driven indicators. Everyone's using averages. Everyone's using stochastics. Everyone's trying to use, bar formations, candle formations. All that's great. I'm not trying to run that down. But at the same time, we're not, elevating volume to that importance. We're so stuck up with the price-based decision-making processes. I tried to give the SWI to users to give them this clear insight, because otherwise you're measuring oh, let's look at price went down 3 days. Did the volume also go down or go up? Manually doing that relationship is little difficult. And this balance of volume is very well judged by your SWI. In fact, just 2 weeks ago, we did another webinar, which was on the Metastock channel as well, where I talked about Tesla. And if you look at the right hand side of Tesla, that's around April 10th, April 11th, where Tesla got into a phase where the SWI moved down. And mind you, this is an intraday interval. And you can see, that signal came in at about $185, where you saw Tesla move into a red colored bar and break those SWI levels. Today, we all know we're below $160. So, it's quite fascinating how even on an intraday interval, and what you're seeing is, for that matter, a 5-minute chart even. Look at the signal you got back in April 10th, where you got the buy, which, takes off the blue bar, nice and solid run up. So just a take on volume, like for example, at sell, just volume alone. Now imagine if you couple such a powerful indicator in the SWI with all the other tools that you're using. I'm not saying SWI is your holy grail, but I'm just trying to tell you, look, today volume is not really a very heavy component in our analysis. We need to make that a little heavier. We need to make that a little more important. And if you use the SWI, you're making this happen so easily. Why is it called the ATM, Automated Trend Modules? Why is my add-on called that name? It's clearly because of the fact that it is automated to this degree that trend detection should be a visual experience. So when you see the color of the bars as red, and you see that the SWI line is above, it shows weakness. For example, this is Alphabet or Google. If you could look at this is a 30-minute chart. From March 15th to March 24th, we had all blue bars. This entire run up, all blue bars. Or for that matter, the first half of April, all blue bars. What This was so easy. It's just a visual experience. I mean, it didn't take me any drawing of lines, putting a value. It's self-optimized. For example, when you put an average, users have to look, okay, should I use a 30-period average? Should I use a 200 average? Should I use the 50-period? This is self-fitting. It just auto adapts to that symbol, because not every symbol can work off a static value. So automated trend modules is about not only giving you more efficient and easy results, but it's also about being tailor-made to the symbol that you're trading. And I think that's something which you've got to remember, that when you're looking at the ATM as a suite, volume is one component. We definitely have the RMO bit, and we have the breakout catcher and all, which I'll talk about briskly. But volume is something we are marrying in very strongly. So here's again a chart of Citigroup. Again, I'm just taking a few extracts from past data, but you can see that even on intraday intervals, how the SWI is reading those trends. So for example, look at the first blue bar that occurs somewhere in the middle of the chart. The reason why it's probably given you a breakout and marked it blue is maybe it's seen this spike up of volume. Maybe it's seen that, okay, the turn is true and the breakout is true. It's backed with money. This whole reading of, is this fall with big volumes versus this breakout? This whole relationship of volume and price movement is so well intertwined within the SWI. And one of the great benefits of Metastock is they have the expert advisor, and you actually have the commentary which comes out for you. You can put your pointer at any bar, at any date, at any time, and see what the SWI suggested. So this is the expert advisor commentary, which is also inbuilt. This is further coupled with a scanner, of course, so that you can find stocks where I've got the first red or the first SWI signal or the first blue buy signal. So all of that is kind of available to you within the ATM SWI. So that was the strength weakness index. Let's talk about price and volume breakouts in a slightly more combined fashion. And the breakout catcher is one of those indicators which I'm going to use. So the breakout catcher is very easy to use. If you look at the color of the bars now, this is being derived based out of the breakout catcher indicator. This is a price driven indicator. So for example, if I see a blue colored bar here, that's an up breakout. If I see a red breakout, red colored bar, that's down breakout. Again, a blue bar, up breakout. So let's try and help you understand which is more valid. So the minute you get a buy breakout, I'm going to look on the top. This is called the zone detector, the green histogram that you're seeing on the top window. That's called the zone detector. Now, the zone detector is either at a value of 0 or it's a value of 1. What I want to make sure is I'm going to try and follow signals which are at a value of 1. Now, if I look at this buy, for example, somewhere around the 15th of March, where I've got the blue bar, what's the zone detector? The value on that date is value of 1. So that indicates that the zone detector is in hyperactive mode. When I say hyperactive, the volume and volatility is also favorable. So therefore, this buy breakout is more valid. Whereas compare this to the blue breakout, let's say over here around the probably the 10th of March or so, you got a blue bar, but what's the zone detector at? It's at 0. So in other words, it's at dormant mode. So we are not trying to act on signals which are in a dormant mode. We want to take the trades which are in a +1 level on the zone detector. Now, mind you, we have a full manual which explains these setups. We have a class which takes you through. We have a master class series too. So it's not very difficult to understand. As the name suggests, I'm going to keep reminding you, automated trend module. It's about automation. It's about being sophisticated, yet at the same time very visually easy, something which you can look and decide. So there's no rocket science to, okay, if I'm right now at the current levels, I'm on blue bars, and therefore I'm not going to be looking at where to go short. I should continue holding positions. So where I would kind of come in and say that, how do you decide which are the better ones? Obviously, you want to take the first breakout. So after a series of blue bars, it's the first red bar, which is the first breakout. Or after a downtrend or a series of red bars, it's the first blue bar in the chain where I'm looking at a buy breakout. And right at the bottom, you'd see on the x-axis, we even marked that strong and weak. Now imagine this is a price-driven indicator. How do you couple it with volume? You bring in the zone detector. If you want to bring in the SWI, that's one more level of sophistication with volume. So the zone detector, just to recap for you, has an active mode when it's at a value of +1. When it's at 0, we're at dormant. And it's hyperactive when you have these fluorescent green histograms also. That's an indication that both volume and volatility are kicking in your favor. So we call that the zone fill. Those green histograms, the lime green histograms, those are the zone fill indicators and the zone detector both together. So just remember, 0 means dormant, avoid trading no matter what signal you get. Take it with a pinch of salt, be a little careful over there. In fact, you could apply this to any study you do. Suppose you're someone who's got a nice hold on the stochastic. Well, you don't want to take the trade if it's in dormant mode, or whatever study you enjoy doing, or you've been very used to, or you've tested success with, and you're looking for a refiner tool. I think the zone detector and zone fill fit into literally any such indicator. So the way I'm going to use it is, let's look at the first blue circle on my chart. We've got a red colored bar indicating a breakout catcher sell. I'm just going to look up and see that the zone detector is hyperactive. That's a confirmation to the down move, and I'm going to take a sell below that low, right? So we always recommend selling below the low because that's where you get confirmation. If you get blue bars over here and the zone detector is at a value of 0, we're not going to take it, right? So look at the 3 red circles. All those 3 buy signals or sell signals have all occurred when the market was in dormant mode. So we want to avoid trading the dormant. If you look at the far right of this chart, where you got the blue bar, the blue circle, that's the buy signal. And if you look right up, you got the zone detector moving into hyperactive. So it's a lovely way to kind of confirm the breakout catcher with the zone detector and elevate its performance. So the breakout catcher is price driven, yes, but where the zone detector helps you is, if you've got a blue colored bar, you see it's dormant, I am not going to take that buy. If I've got a red colored bar here and I can see the zone detector at a value of +1, I am going to take that sell. It shows you that there's no money here. It shows you on the red one, there is money, there is volume, there is volatility. So that's what helps you crystallize and filter out a lot of trades. So the zone detector, whilst it looks very easy, presented very easily, I can tell you there's a lot of legs that has gone into the ATM. In fact, when we do an update on the ATM, we have to really look at, have we elevated to a point where it's really adding tremendous value to you. For example, if I've got today the ATM 3.0, from a jump from version 2 to version 3, it's not that I have to do an upgrade every 6 months or every 1 year. It's not something like that. There's a passion for quality. I speak to you trader to a trader, investor to an investor. I mean, I'm not a stockbroker, I'm not an advisor, because I know what goes into the science of trading. I lived through that same experience psychologically. I know what it feels like to have a bad trade, to have two bad trades in a row, etc., etc. So when we build the ATM, we always thought of the fact that how is the trader going to handle it from that entry exit stop? How is he going to handle loss? Things like that. So if you go through the squares over here, the rectangles rather over here, you can see the three rectangles which I've got are all signals which are valid because the zone detector is at a value of +1, right? And all those three have worked out. If you look at the three circles, on the contrary, those are invalid. And thankfully, we didn't take trades over there because when you got the signals dormant, when you get the signal dormant, even here when the first blue comes, remember the first blues come here, that is dormant over here, right? So you can really understand that when you're getting these trades, you've got the zone detector working as a wonderful filter for you. And mind you, I'm sharing with you examples not just on US equities. You, I mean, this, for example, I think uh, is an Australian stock, the NAB. This what I showed you prior to it is US market equities. So here's a chart of Dell in the heydays. So I've got a ton of examples here. Now, this is Apple 2023. If you look at the performance for the last 3 or 4 months, just on a simple chart over here, if I combine this whole concept of breakout catcher, let's go with over here. The first sells back in December. Okay, that sells valid. You get a nice, drop over there, good 8-9% probably. This buy, I'm going to be suspect. But the reason why you could probably consider the buy is you got at least above average volume. So what I like to do is the breakout catch has given me a buy. The zone is dormant, but I think what you can clearly see, the SWI has given it a go ahead. And that's where I say that if you have at least the SWI with you and you can see some above average volumes, you may still be willing to go. Look at this sell over here, this red colored bar. Why am I not taking this sell? Neither has the SWI given me a go ahead. In other words, it's not broken the SWI line. It's still dormant over here. So the zone is also not a go ahead. And if I look down at volume, that's not even at above average. So on all counts, I'm not taking the sell. So the buys are more qualified, but not the sell over here. So even a buy like this can be taken because the SWI helped you kick in. The volume above average helped you kick in. Now, this is by default. These templates are by default. Like, for example, right up to the moving average on the volume, we use a 50 period over there. That's automatic, right? Now, if you look at combination, how we're using volume, that's what matters. I think a lot of people, what's happening is we're not using volume in totality because we've kind of gotten so heavy into trying to trade just purely based off price-driven indicators. Now, it's not like we don't have price-driven indicators, but I think today's session is all about showing you the RMO ATM is a complete system. It has price-driven indicators as well as volume-driven indicators, as well as a scanner to back you up and find those trades for you. We're not going to expect that, oh, you're going to sit and go through every stock. So the best part about the Power Screener, you've got a separate application which auto scans for you. You don't need to write any Explorer. You just need to run the Power Screener, and that literally gives you live alerts as to where you've got new trades and signals without your having to program anything into the Explorer. So we'll come to that. But counter trend indicator is another study, another ATM counter trend is another template that we've built for you within the ATM suite. And this indicator is there to deliver a signal as and when the price breaks out of a key volume area. When I say a key volume area, sometimes what happens is the price gets into a gestational phase or a consolidational phase where price is just locked into a range and the volumes are nice and thick in that range. And the minute you break out of that range, that's where I want a buy or a sell stamp. So one way is to look at the value as +2 and -2. That's how it looks on the indicator. It's very simple. But I think where you'd like to see it is when you apply the template, you will get buy and sell stamps just like this, right? So this is a chart of Google, and I'm looking at a 65-minute interval. And in case you're wondering, oh, why am I looking at 65? Usually I should look at a 30-minute or a 60-minute or a 2-hour chart. Well, there's a science to it. In the US markets, we trade 390 minutes. If you are looking for 6 bars, so in other words, if I divide 390 by 6, you get 65. So I've just dissected it that way. The problem is a lot of people want to use round figure. It's like for the Indian markets, if you're looking at the Indian market, which trades 375 minutes, you want to use a 75-minute interval because that dissects your market into 5 bars. So if that's what you're aiming for, if you want to dissect, let's say, Google into 5 bars, it's a 78-minute time frame. Everyone is chasing these round figure time frames, which drives me crazy that we're not even thinking. Just because there's hourly over there, let's go click hourly. We have to remember, if you're going to use a wrong base, you will get wrong results. Theoretically, it's incorrect to use an hourly chart when you trade 390 minutes. If you trade 390 minutes and you use an hourly chart, always remember, you'll get 6 bars, which are hourly bars. There'll always be 1 bar, which is a 30-minute bar. So put some thought into it. So I get into those details in my master classes as well. And, Kelly will probably talk about when the next master classes and how you can make use of those sessions too. So again, we want to make sure that when you use the counter trend signal, you get these buy and sell stamps. Now, let's not go like a robot and say every buy I'm buying and every sell I'm selling. Let's understand the science to it. Let's understand where we want to do this. Obviously, we want to do the first signal. And in this case, the first buy was probably end of February, where you got the buy signal. Now, I want to make sure that, after the buy, we not only cross the high of that bar, maybe get past the moving averages, and then you see, okay, that's solidified. So like you got a sell here, breaks the low of that bar, starts breaking the average, and then that solidifies. You get a buy over here. Maybe let's not be as rash as buying there. You could wait for that moving average to click through, and you get a confirmation. So where it helps is if you get this odd sell over here, if the low is not broken, no question of taking the trade. Even if the low is broken, didn't go below the average. So here you got to sell, lows broken over here somewhere and broke the average, you rotate it into a sell. The buy. So it's amazing how even on something like Google, you've been able to, have such a wonderful performance. And you've literally got data from the last 2 or 3 months in front of you, and you can see what it's doing. And this is all volume at work. This is all volume data which is being used. We're not using the price data. We're trying to see where the volume got locked in and when we're breaking out of those volume zones. So the counter trend indicator, one of the beauties of the ATM, again, at the cost of repetition, automated trend modules. Why is it called ATM? Because it's automated this whole equation of finding out where that volume clustered up, what's that price zone, has it broken out of that price zone. I just need you to be a good viewer and a refiner. I don't need you to get into, heavy duty analysis. The great thing is computers can do that today. I've grown up in a family where I've seen my dad do charts by hand, right? We've seen graph paper after graph paper being stuck. I've seen those days of the facet machine. Now, let me tell you, we don't appreciate what we've got. We've got so much of data crunched in, so much of calculations and customization happening today. We're not even scratching the surface in terms of taking or exploiting the potential of the program. So I keep telling, Kelly and the team, you've got too many indicators in Metastock. You got 200 of them. It's a bit like going into a buffet where you have 200 dishes. It's very hard to choose. And at the same time, when you try and mix too many things together, you don't really land up liking that buffet, right? So I think what I try to do is more from a practical trading standpoint, what I use, what I trade, and I try to build that in for users, and that's what I think is going to help you, whether you trade end of day intervals. And I've taken a whole plethora of examples. I ran through some on a 5 minute. I went through a 65 minute. I showed you an hourly, right? This is a daily. So here you've got more signals. So don't just look at blind buy and sell. It always is better that you see, okay, after a rally up, I'm looking for the first sell. After a drop down, I'm looking for the first buy. Bring in that average if you want. Help, focus in terms of what you're going to do. So what's the filtration that is necessary? Let's recap that. Consider buy signals that are preceded by a downtrend. So in other words, let's go back to a chart. We have a downtrend over here, and that's a buy signal. So we want to consider this. We want to go above the high. Okay. So let's move back to that. Consider buy signals that are preceded by a downtrend. Consider sell signals likewise, which are preceded by an uptrend. Because counter trend, in other words, counter trend indicator. Why that name? Because it's trying to spot reversal for you. I told you this on the first slide, that one of the important things that volume does for us is helps us find out market reversals. Additional signals in the same direction act as a confirmation. And what I mean is, do not place additional trades. What I mean is, you may have a series of buy, 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 continuing. We are not so interested in that. Our excitement is that first signal, that first counter trend indicator, because that's the most meaty. That's the one with the largest potential. So if you have a setup where you've got a sell, what kind of filtrations do I like to use? I like to see that, below the low needs to be happening. For example, I've got a sell over here, the low is broken, yes. But what about this buy, where I've drawn the two rectangles? Why am I not buying above this? Because the high is not taken out. The high is not taken out. I need to see after the buy that you actually get past the high. Why is this one okay? Because that high is taken out, right? You can further filter this even better. Now, like for example, I don't like to use an average uh, each time, because what happens is there could be a different average which works better for a different stock. So, this is QQQ, and this is again a 65-minute interval I'm using. And you can see over here, why is this sell, valid? Because it's preceded by an uptrend. Where would I really like to sell? What I want to see is after the sell comes in, we want to go, close below that low, and then get two bars, which are what I call seller's bar. Now, what's a seller's bar? Simply put, it's a bar which has a lower high and a lower low. So you see lower high and lower low. So these two bars, you see the lows are declining as well as the highs. So if you have a pattern like that, you want to sell below the low. So I'm taking out the moving average now and saying, I'm just going to look for, if I've got a buy, now notice over here, I've crossed the high and I've got two bars after that buy, which are higher highs and higher lows, right? So I'm going to take that high out. So see how the filtration comes in. You've got a sell over here. It closes below the low, but after that, I don't have two bars which are lower low and lower high. For example, here, the high is higher, right? Over here, the low is higher. So I need two bars in sequence which have lower high and lower low. That doesn't happen. Similarly, over here, you got a sell. The low may break down, the closing has happened. Here's the point where I've got two bars in sequence where I've got lower high, lower low. Break the low, only then I'll go short. The most recent one was around 314. We want one close below that. That didn't happen. Well, of course, a little later it did, but again, didn't follow up into a sell because you didn't get the two sellers bars. I mean, this is an extract of a chart, I think until about a week ago or 2 weeks ago, right? But it's the same chart. If you continue, you'd notice we had only one solitary bar that closed below 314, I reckon, and subsequently it didn't fall up into two lower lows. Well, so here you are. I mean, this is filtration to another degree where I said I'm even not using the average. All I'm using is I got to sell, get one close below that low, and then I want a pattern of two sellers bars. In other words, what are sellers bars? Two bars with a lower low, lower high. So if I've got a buy, I want one close above the high, two bars in sequence where I've got higher high, higher low. So that's my own filtration. Now you may say, look, should I use the average or that? Whichever one you think is easier to you. There's no inefficiencies if you used an average that way. There'll always be, I find this more visual and I find this more appealing to me. which is why I use this. Let's look at the core RMO trade model. And let's just give you a gentle reminder. This is inbuilt inside of Metastock, the RMO oscillator. And I want to remind you the beauty of the inbuilt RMO, which came into Metastock, I think, back in, I'm guessing, about 2010. You have the RMO, which handles all three levels: short term, medium term, and long term. So it analyzes the short term trend, the medium term trend, and the primary or the long term trend. And what we're trying to do is trade in the direction, because what's going to happen is it always starts with a short term signal, then it rotates into a medium term signal, then it pushes into a primary trend. And once the primary trend is in force, you're keeping on looking at continuing trading in the direction of that primary trend. So the RMO system is also quite complete. And the reason I'm giving you this gentle reminder is, uh, friends, there are a lot of people who say, let's look at a daily and a weekly and a monthly. Someone starts looking at a 5 minute, then he's confirming it with his 15 minute or 60 minute. I come from a school of thought where I say, look, if you got a system, trade the same stock on the same time frame 10 times in a row to conclude that it's 7 out of 10 correct, right? You saw what I did. I showed you the last 7 or 8 signals on, let's say, a chart of Google or Apple. You have to have that consistency, same stock, same time frame, same amount of money you're deploying. That's when you realize, okay, this is my accuracy. The problem with us is we keep switching the stock, or we keep switching the time frame. And this is very important, because often I've seen traders, they bought because the signal was on a daily chart, but when it didn't work out, they said, doesn't matter, we'll take this home with us, the weekly is still okay. And later on you say the monthly is still okay. The fact of the matter is, most of us don't use the higher time frame for confirmation. We are using it more for solace, in terms of justifying what we did wrong is still okay, right? And that's not what I want you to do. And why am I saying this? Use a system which checks the short term, medium term, and long term, and the RMO does that. It does that whole marrying of checking what is the short term, medium term, and long term looking like. So let one template do that for you, rather than you having to jump into various time frames. Have that strength of sticking to one time frame. So the arrows are the short term buy signals, the blue colored bars are the medium term, and at the bottom you have RMO bullish written. That's the RMO oscillator. RMO standing for Rahul Mohindar oscillator. That's the long term trend. And at the bottom, you see RMO bullish. That means a long term. So notice the short term signal is the arrow. The bar color is your medium term. And finally, the long term. So if you look at the sequence, first came the short term buy, then came the medium term. But it's only at this vertical line, with the two vertical lines, where you can see all three are in agreement. I have the short term, medium term, and long term aligned. This is what I call a three-dimensional buy, or a 3D buy. And this can also be beautifully scanned for. So you want to trade when the short term, medium term, and long term are in an aligned position. And this is where you come together. Similarly, for a sell, if I'm looking to sell, where's the first red bar? The arrow. And where did the RMO go negative? The RMO is the oscillator on the top. If you prefer looking at the x-axis at the bottom, that's the red ribbon. That's the first sell signal. So that's RMO negative. So notice all the three verticals that I've drawn have the alignment of all three: short term, medium term, and long term, right? You got the arrow, the bar color, and the oscillator. And the best part is, even this one is the reason you need to pay most importance to this one. This is the first time the RMO has gone from a bullish to bearish. So we call that the first breakout. And that is your most potential signal, which we want you to work with. Now look at the RSI, for example. The RSI worked as a big disturbance to me in my personal trading. I saw, look at the chart of Apple, for that matter. From 2020, we've just been one way up all the way into 21, 22. What are you doing with the RSI? You're saying negative divergence. Price is making a new high each time, but the RSI is not. So you're calling it negative divergence, and that's worrying you. But whereas the RMO, right from 2016 till today, is bullish. And that tells you that, look, you didn't lose track of it. You just tried to focus on where I'm going to get blue bars and buy arrows and buy the equity, right? So this is again a classic example of where the RMO overtakes standard indicators. You'll have the MACDs and RSIs oscillating and curling in and out. All I'm trying to tell you is, look, friends, if the RMO, the primary trend is up, let's not bother about the short-term down move. Let's bother about where can I get the blue bar and the buy arrow. Trade in the direction of the stronger force. That's where we will tend to win. Now, even these trades should be substantiated by volume. So you could use things like the zone detector. So when you look at the theory versus real world, I always say in theory, you'll be drawing trend lines like this. In the real world, sometimes you can't draw a trend line. So in other words, there's a lot more smoothing that we need to do. And the ATM does that for you. So when you look at the RMO looking at the primary trend, it's because why are we trading in the direction of this primary trend? It's because of the increased odds of winning. We're trading in the direction of the stronger force. Because think of it, the river's going upstream, and you're going to try and find the little short-term down moves and try and go downstream. You're going to get stuck at some point. You're going to be having a tide which will topple you over. So let's make sure that you trade in the direction of that primary long-term strength. So right here, when you look at it, you are really looking for where I get the arrow, the blue bar, and the RMO all aligned. And each time you want to see that I cross that. For example, look at the red bar here, the red bar here. Why am I not selling below this? Because the RMO is bullish, right? But I think where you can elevate this is, how do you find these trades? When you see the power screener, we actually have a scanner which runs in real time, which will mark this for you. So in other words, you have a live scanner going tick, 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 tick right through the day. If you're on the real time, and if you're an end of day, no worries. It still shows at your end of day, and it gives you RMO 3D buy, where all three signals have aligned. And if you have an RMO 3D buy with two arrows on the side, that tells you it's the first time that it's aligned. So an RMO 3D sell with an arrow is the first time you got to sell. In other words, the first time from bullish, the RMO is rotated into a bearish. So the beauty is the scanner is truly next level. It even has a voice alert. It will actually say it, buy on Apple or RMO 3D sell on, Intel. So it's going to, as the signals come up, it's going to actually talk to you. It can give you an email alert. It can auto sort for you. And it's literally a hands-free experience. So we also have the explorers. I totally understand and appreciate that a lot of us have been used to the lovely explorations which are available inside of Metastock. And if you're a fan of the explorer, you can certainly use the integrated buy and sell scanners and what I call the super filter scan, where you can find these opportunities. Now, what is the super filter? The super filter is the next thing which I designed with the RMO ATM 3.0, where I said we will shade these colors now into four. If you look at the bar colors, there's a red, there's an orange, there's a light blue, there's also a dark blue. So four colors to help you understand how this market is positioned. And the super filter, the RMO work to a static value. The super filter is a dynamic value. Let's explain that. If you used a 10-period average on all the stocks, some stocks it may work great, but not all. But there could be a certain stock where, if I used a 18-period average, that was better. Or one stock where if I used a 83 period, that was better. It is doing that tailor-made fitting, right? So when I'm looking at the super filter, what I call the ATM RMO template, that is called the super filter. You are really looking at four shades. So in other words, here, this RMO that went up, I am not going to buy this because I've got orange color. It's still bearish. Orange and red are bear colors, light blue and dark blue are bull colors. So it does that filtration for you. If I've got a red signal over there, fantastic. You want to go take a sell on it, right? But if I've got a buy on the RMO and it's still orange, I'm not going to take it, right? So if you look at the way it irons out for you beautifully, and this is the NASDAQ 100, and you can see it right across 2 years of data, you've really just been on the right side of the trend. You've only focused on buying and right up to the Q4 of 2021, and then 2022 you had the full sell setup. And you can see there's not even one area where you've gone into a buy. Even the blue bar that comes in over here doesn't cross the high. My point is, look, essentially you're on the right side of the trend. Detecting the trend is so easy and efficient. It's not just about having a tool that detects the trend. Look at how well it's detecting it. Look at how much it's keeping you in that direction of the trend. And this is evidence. This this data that you're seeing is not going to change. None of my arrows will ever shift despite it being optimized. I'm never going to erase a red color and make it a blue. There are programs out there which do that. Unfortunately, it's a very unscrupulous world. And I think what I try to make sure is, despite it being an optimized system, I'm never going to shift or change arrows or signals. So the beauty is, if you've seen a blue colored bar, it's always going to stay blue, right? And obviously it should, because that's how you traded it. So look at the efficiency with which you're directionally correct, right? Most of the time, 9 out of 10 times in this case, and this is the index, which is very representative of how we've performed, tells you the story. Let's look at another sideways patch. I like to take the parts which are slightly murky. In this phase where you had 30, 40 bars, where it was struggling to get into RMO, bullish, bearish, bullish, bearish, it was a big fight. If you had the ATM RMO, the same orange bars tell you don't waste your time buying, just stay short. So the beauty is that this ATM RMO super filter is a refinement, is an improvement, is an adapted, is an optimized RMO, so to say. So you're much better off using the super filter, because that is also filtering out the old RMO, the inbuilt RMO, because it's tailor made. It's tailor made to the symbol that you're looking at. So that's the beauty about the ATM RMO. It is really generating the best possible result for you. For example, the RMO didn't turn into a sell up till here, but the red bars came in, not even orange, red. That indicates you can start getting out, at least start going short a little bit, right? Because the red is a super filter. That's the, that's the supreme one. So you want to see how this clearly irons out all this area where it goes RMO, bullish, bearish, this whole patch. It's all clean, nice and blue. So think of it this way. The ATM arm of the super filter can speed up and slow down. And the best part is this also marries in pieces of volume data as well. So, sticking to that theme, that we have the super filter, which does an efficient job of trend detection, but we also have a scanner where you can block sort. In other words, when you just auto sort, this is the power screener. It's automatically doing this. You can get all the stocks which have light blue and dark blue. So the minute you look at the screen, you can see 60% or more are light blue or dark blue. There are just a few of them which are in that orange and red mode. It just shows you how it can block sort. And now imagine you're putting in even another tool called volume breakout. So within the power screener, this is how your console looks. This is an application that you get. You click on the icon and this is the application that opens up. You can make your custom stock list. You can set it to time frames and symbols you want. Add as many indicators you like. So here we've got a high volume scan where it can find out those stocks where suddenly volume is creeping in. So in this case, I've written, look at bars to compare the last 5. I want the highest volume compared to the last 5. You may even say that I want it, certain percentage above moving average. I want it 20% more than the moving average of volume. So it would auto detect where the volume is flowing in. And again, just to caution, this is not live data. I'm just trying to take an extract to help you understand how it will look. So volume breakout will also come in and tell you where exactly the market is rotating in terms of money. So having said that, I must end by saying that, look, to conclude, identification is very important, and the power screener does a meticulous job of it. There is no scanner out there in the world, if I could put it that way, which does what the ATM power screener does it. You need no programming. You don't need to write any Explorer. You don't need to run any Explorer. It's always running. All you need to do is set a symbol list. It even can help you weight it. When I say weight it, you can auto sort it. The colors, light blue, dark blue, tells you the weight. Dark blue is the best buy. Light blue is not as good. Then management. Now we haven't talked about tools like the trend decider, etc. There's more to the suite of the RMO ATM, but that whole trend decider suite or the SWI will help you even manage that trade. Will help you manage that trade because you will know where to take your profits. So for example, if I'm running a nice long position and the SWI is shifted, I clearly understand the volume balance is shifted and I can take profit. So we talk about this as a complete system, a system that not just uses price, but also uses volume, a system that focuses on not just identifying, but even putting a weight to it and helping you manage those trading setups. So to recap, we are looking at a rule-based approach with the RMO ATM, something that works both on end of day and real time across various time frames. And I say focus on being adaptive. Now, what do I mean by adaptive? It's adaptive because it is tailor-made literally to the symbol that you're using. Some stocks need a particular value to be working, some need a different value. Based on the price and volume action, it is working to the best possible scenario. So scanning is its real strong point. And of course, as I told you in the beginning, we must have a system that uses breakout models, counter trend models, and volume models, because that's what goes into creating a complete system. And that's what the aim of the ATM is. And last but not least, we have to make sure that it's backed by the right education so that you can truly exploit it and benefit from these indicators. So it's backed with several videos. The manual is quite thorough, and of course the upcoming masterclass, which Kelly will also probably talk about, is another area where you could really have great access to. But just to recap, we've got all the explorers inbuilt, all the templates inbuilt. We got 35 different fields on that power screener, but really 7 core strategies on the ATM that I explained to you. The strength weakness index, the super filter, the counter trend, the breakout catcher, RMO2. These are the various setups that I discuss. And as I told you, you have this go-to screen where you get all of these alerts so that it always runs and you never miss that trade. So that's a quick roundup, a fairly fast one, I must say. But hopefully you get the essence that the ATM Power Screener is an absolutely solid, complete tool, and hopefully should help each one of us in our trading endeavors, be it short term or the long term. Over to you, Kelly. I'll leave it open for questions, and probably
Yeah,
leave it to you to round up how
actually,
users can benefit.
we do actually have a couple of quick questions if you have just a moment.
Sure.
First question. Somebody was asking when the next masterclass is, and I will cover that in just a moment. But the next question is, what is the moving average parameters that you use on volume?
So, Doug, we have a 50-period average that we're using by default, and this is inbuilt into the RMO trade model template and the various templates that we provide to you. So it's a 50-period average of the volume that's being used.
Okay, perfect. And then Doug was also asking, what happens when the market is oscillating rather than trending? And I think he was talking, you were just a few slides back on that one.
You're absolutely right. And I think this is the biggest problem. When the market's trending, it's fairly easy for most of us. And I think there are two very big benefits with the ATM. The zone detector helps identify if the market is dominant. If it's a low volume area and it's an area which is likely to be sideways, we would not be trading there. So that's one way that we could help ourselves in those dormant, untrending modes, if I could put it that way. Another way is the SWI, because that too is going to marry in volume and see that is it a legit breakout or not. So I think both things combined, it can definitely be used that way.
And then another question from Kamalesh, can it be used with candles instead of bars?
Absolutely. Take your pick, candles or bars, it's the same thing. It just depends what you're comfortable with. For some people, candles, speaks much more because it talks about various patterns and formations. But for me, I've been very used to bars, and I can read those patterns from the bars. So again, it's a very personal choice, and there's no taking away from the fact that you could certainly use it with candles as well.
Agreed. Yeah, and I know over the years we've had that question a lot, and you've always said the same thing. Take your pick. Yeah.
Yep, I don't switch up.
Let's see. Okay, hold on. I'm just going to make myself the presenter here so I can talk about the masterclass. But Rahul, thank you for coming in today. I'm going to go ahead and dismiss you from the room. Thanks for coming in.
Thanks again. Thanks, everybody.
let's see, let me do this. All right, and then let me share my screen here, make sure. Okay, so let's go ahead and talk about what Rahul was talking about in the master class. So there's definitely a few different things that Rahul is offering today, and he's really focused today on his RMO ATM. Now, there is the RMO that's built into Metastock that comes with every version of Metastock, and that's called the RMO. Then there's the RMO ATM, which is his add-on that he developed that to further take the methods he developed with the RMO and give you even more. So here in the RMO ATM 3, you get the Power Screener app, the Breakout Catcher, the Counter Trend Indicator, the SWI, which is the Strength Weakness Indicator, the Trend Decider, and the RMO Super Filter. And we've talked about a few of these today and how you can actually use them in your trading. So what he's going to do and what he's been talking about with his masterclass is he actually has a 3-session masterclass coming up where he's going to be diving into all of these different methods around the RMO and how you can use them in your trading. So the first one coming up is on May 20th at 10 a.m. Eastern. So this is going to talk about the core breakout models within the RMO ATM. So you're going to be talking about breakout detection, detecting if it's a fake out. So when you have those sideways markets and kind of how to avoid that, picking more refined trades with the RMO ATM super filter, and then reading momentum with the Trend Decider suite. So that's number one. On that same day on the afternoon, he's going to cover elevating volume integration. So Rahul talks a lot about volume. He understands volume very, very well. So he's going to talk about the integration of methods of the RMO ATM CTI and SWI. So that Strength Weakness Indicator. It's really cool. If you haven't used it, I highly recommend that one. And then understanding a multi-time frame trading approach and then trading options. So those 2 sessions are on May 20th. And then the next Saturday at 10 a.m. Eastern, he'll talk about trade detection, integration, and trade management. So how to set your price targets, re-entry opportunities, and final thoughts on how to grade your trade and synergize signals. And I love that that concept of grading your trade. How good of a trade is it going to be? What am I expecting to get out of it? And Rahul will really show you some good in-depth details on how to access that. So then you have the RMO ATM 3 module, which he goes through and talks about how to apply all of these. So first of all, the RMO ATM itself is normally $129 a month or $13.95 a year. So you can actually get it here as part of the promo today for instead of $129 a month, you'll get it for $99 a month. And then you get to keep that promo rate forever as long as you keep paying the $99 or $10.69 a year. So to get that, you can call 800-882-3040 or visit metastock.com/saleschat. Now, he's talked a lot in detail about what's included here. So again, $129 a month, $99 a month here at the webinar. So go ahead and contact sales to get hold of that. Now, here's the good part. Here's the way to get it with the masterclass. So the masterclass bundle package is the way to go here. So you can normally $886 for all of this, but for $497, you'll get 3 months of the RMO ATM and the masterclass. So that's for $500. You'll get those 3 masterclasses and 3 months of the RMO ATM. So you're basically with your RMO ATM, you're basically paying for it. So the RMO ATM monthly subscription for 3 months, then $99 a month after that, and then the 3 live training classes included. Plus, you will get that all those recordings on your metastock.com account, so you can go back and re-watch them. So to get that, go to 800-882-3040 or visit us at metastock.com/saleschat to take advantage of that. You can also get this as part of our summit deal. So the summit deal includes Steve Bigalow CPS Plus training. So that's that 10 hours of training from Steve Bigalow and the Steve Bigalow add-on, the GoNoGo Complete, which is what we're going to talk about next with Tyler Wood. The 3 months of RMO ATM Plus training, Anne Marie's Target Rich Trades, 3 months of Learn Metastock, 2 years of Stocks and Commodities Magazine, and the Unleash the Power of Metastock workbook and videos. Normally $55.22. You can get that today for $23.92. So you can go to metastock.com/summit deal 800-882-3040, or metastock.com/sales chat. Before we bring on Tyler, I would like to thank our sponsors. This time we're going to be focusing on the CMT, or the Chartered Market Technicians. Bob, if you just want the masterclass, just chat with sales. They'll give you that pricing there, or I'll chat it to you here in just a minute after I'm done introducing Tyler. So the CMT is our sponsor of today's seminar. And if you haven't heard of the CMT is a great organization. They deal in teaching people the essentials, I would say, of the market. So they talk about risk management, they teach quantitative system development, portfolio management, and applied behavioral finance. These are all aspects that are critical to trading, and risk management, how to develop your own systems, how to manage your portfolio, and how we should be acting, how we should react to the market. So what I'd recommend here, go to cmtassociation.org, call 646-652-3300, and let's actually introduce Tyler Wood from the CMT, who's going to be talking to us today about GoNoGo, which is a system he developed with Alex Cole, which is a fantastic system. I love this take of GoNoGo, which is basically a play off of NASA, and how NASA will actually say, well, are we go for launch, or are we not going for launch? It's a great way of analyzing the market. I'm going to let Tyler talk about it. Tyler, you there?
Hey, Kelly, how you doing today?
I am so good. Are you a little lonely just by yourself today?
It's just me. The great part of having a co-founder of a company is that we can sort of tag team. And both of us tend to be a little bit busy, but today it is my turn to spend an hour with you all and talk through sort of a disciplined, responsible approach to trading. Kelly, thank you so much for having me, and I really appreciate not only the introduction to me as a co-founder of GoNoGo Charts, but as Kelly mentioned, I've spent the last 12 years working with the CMT Association. I'm the managing director of CMT Association and also co-founder of GoNoGo Charts. So it's a busy week in CMT land. We're hosting our 50th anniversary symposium in New York, beginning in just a couple days. So lots to look forward to.
You are busy then. You are busy.
I can sleep next month. It'll be fine.
Yeah, right. Well, thank you for taking the time with your busy schedule to be here with us. I've given you the presenter rights. I can see your screen. Let me go ahead and get out of the way for you.
Fantastic. Thanks so much, Kelly. And thanks to all of you for joining this. If you've seen GoNoGo Charts presentations before, I'll do a little bit of review, but today we're going to talk about something a little bit different, and that is embracing volatility in the markets. I know this last year and a half has not been the easiest for a lot of investors. Predominantly, Alex and I work with the institutional community. So folks who are portfolio managers on mutual funds, or the trading desks on interest rate swaps, or currency desks, or even equity traders, as well as research analysts around the world. And it was just a few years ago that we developed this partnership with Metastock and wanted to bring some of those lessons and those tools to individual self-directed investors and traders. So we're going to talk about how, yes, it's been a little bit difficult in this recent market, but there are some ways that you can remain objective, to not get whipsawed in and out of all of your positions, and to in fact embrace that volatility. So let's dive right in. I'll be talking fast. Be sure to throw some questions in the chat box as I'm rolling through these slides. But Aristotle says we are what we do repeatedly, and this is a lesson that Alex and I have taken from trend-following investors around the globe, and that is, if you are going to develop a system, a set of rules by which you will operate as a trader or an investor, you can look to all sorts of other analogies about using a checklist to your advantage. So Alex has a teenage son. Thankfully, I'm not quite there yet in the family years, but he's trying to teach Dylan how to drive. And before Dylan even sets foot in a car, he's doing the classroom stuff. And you go through this checklist of all the things you need to prepare for before you pull out into oncoming traffic, right? Got to make sure you're wearing your seatbelt. Have your foot on the brake before you put it into gear. You check your mirrors, et cetera, et cetera. Well, as traders and investors, we can think about our own set of rules, our process, if you will, as a checklist. And so when we are developing a weight of the evidence perspective, do I want to get involved in this to the long side? Do I want to take the trade? We want to see that all conditions are go for launch. As Kelly pointed out, we borrowed some of this from NASA. And when we're thinking about putting billions of dollars of hardware into space, we want to make sure that all of the conditions are in our favor. Well, as technical analysts, if we're going to participate in a trend, we don't look to one indicator. We look to many, many, many indicators to make sure that all of those conditions are in our favor. We're seeing that confirmation, and probabilities then get stacked on our side. Same thing to the downside. If you're trading to the short side, you want to look at that checklist of requirements before you would place a short trade. Arguably, perhaps even more important, as it's very, very difficult and choppy down the short side. All right, so we could look at traditional technical analysis, Dow theory. We could look at some trend lines. We could look at all sorts of tools on our chart to get a full weight of the evidence perspective on whether that security is trending. Well, what Alex and I learned over the years, going through the CMT program, sitting with some of the best analysts that you all watch on CNBC and Bloomberg, the first thing for technical analysts is that you could just eyeball a chart and see if indeed it is trending in a certain direction, right? So we can see a series of higher highs and higher lows. This chart is moving from the bottom left to the top right. Well, that's great in retrospective, right? We can look back at any chart and say, oh yeah, we should have got in right here. So we need a system to automate that. When is the trend actually taking place? So you look to some of the books about the turtle traders. If you're not familiar, Richard Dennis took some inexperienced folks and taught them how to trade very successfully. In fact, later this week, Jerry Parker, who has become a friend, is going to be speaking at the CMT's 50th anniversary conference. And I talked with Jerry just last week about how simple those trend entry requirements were in the original turtle traders. So they use something called Donchian channels, and it just tracks when there is a new high and when there is a higher low in price. And you have that automated process to tell you when something is trending higher. Well, that's great. Of course, many of you are going to put some moving averages on your charts, maybe 2 or 3 of them. You could also use something like Bollinger Bands, which gives you a 2 standard deviation range around that average. We know from Bollinger Bands that a widening of the bands, we want to trade in the direction of the break. That can signify a new trend breakout. We could look to something as well as like volume to confirm what we're seeing in the price action. Do we have heavy volume on those up days or up periods of a move? We could also, of course, add moving average convergence, divergence, a MACD, or many other indicators to our chart. Now, this is a very simple checklist. There's not much on here, but we know that we've probably all seen some charts like this. Heck, I've even made charts like this, because as you start learning about technical analysis tools, the indicators, the studies, they're incredible. And the men and women of Wall Street and Dalal Street and Bay Street who have created these tools, we're really onto something. They're capturing information from the market that helps us understand not only the psychology of the other investors, but what's happening in terms of supply and demand relationships. Now, the problem with a chart like this is that we begin to reintroduce all of the subjectivity, all of the emotional biases that we have as traders. If you have enough squiggly lines on your chart, you can convince yourself to take the trade or to not take the trade, right? You don't have an objective opinion at this point. You have too much analysis paralysis on your chart. You could be stuck looking for more confirmation from all of the indicators and never actually get involved in the trade. You might miss too much of the move. You might miss getting out when you should because you're waiting to see further confirmation. So Alex and I, a couple of years ago, brought this idea of combining the weight of the evidence, combining many, many, many indicators, far more than what we showed on that simple trend identification example. And we want all the information, but we don't want the clutter. We want clean, clear charts so we can see price action. Well, we developed GoNoGo charts to do exactly that. It crunches all the numbers, does all the computation in the background, and gives us a simple color-coded GoNoGo trend that identifies whether we are in a bullish or a bearish environment. If the security is a go for launch, we're going to see these blue and aqua bars. So blue being our strong form, aqua being our weak form of a go trend. In a no-go trend, we're going to see purple and pink bars, purple being strong no-go, pink being weak no-go. And then at these periods of transition, sometimes you'll see amber bars. That's when all of the inputs of the system are in their neutral territory. And we're great fans of the life and works of Jesse Livermore, who said, there's a time to go long, a time to go short, and a time to go fishing. So if you're looking at a go-no-go trend chart, it's as simple as a go, a no-go, or go fish. And that could be a bar or a candle, whatever you prefer. And we're so proud of this work, we decided to just give it away for free. So right on Metastock, for all of you users, you can apply the template of go-no-go trend on any of your charts. And all I would ask is that if you're using it and you're liking it, just let us know. What time period are you trading? What kind of securities are you trading? Has it changed your process? Do you use it alongside other forms of analysis? Do you do classical pattern recognition, right? We're big fans of the work of Edwards and McGee and these folks pre-computers in the 1930s who understood a lot more about how markets move than I think a lot of us youngsters do today, because they really had their nose in price data minute by minute. You might use Fibonacci extensions and retracements. You might use all sorts of things. Let us know how that's working out for you. And for those of you who haven't tried it, I highly recommend at least apply that free template and take it for a spin. All right, so what are we really looking to do today in this session, but also as trend following investors? Well, we want to participate in trends, but we don't want to forecast. We don't want to anticipate what we think is going to happen. There's a lot of that. We're all surrounded by it. In fact, it's thrust into our faces through our phones and our TVs and our computers every day, where talking heads on financial news media are telling us about whether or not the Fed's going to hike one more time. And they've been talking about that for a year now. Whether or not bad news on the economic front is good news for the stock market. Whether or not we can anticipate further supply chain disruptions and higher inflation. Whether the war in Ukraine is raging on. All of that is conjecture, and it's news, and it's important, but it is not what should guide your trading. You need to remain objective and focus on what's actually happening. So we want to remove doubt. We want to remove confusion. We want to remove uncertainty from the process. I mean, heck, we saw all of those regional banks blowing up. And here this week, as earnings are coming out, we're seeing there's actually a lot of strength in banks, right? Pretty contrarian view given what we're seeing in the headline news. But if we just pay attention to price, we can stay on the right side of those trades. So this is all about acting without emotion. And I'm going to just illustrate this point really quick with some data from Terence Odian, who's a Berkeley Haas School of Business professor. He and his fellow researchers in the behavioral finance realm studied a lot of data. They looked at 360,000 day traders over a 15-year period. And what they were after was trying to figure out how many of these folks can last through the long run, how many can be successful over time. And so go ahead, throw it in the chat or shout it out at home. We can't see you or hear you, don't worry. What percentage of these 360,000 day traders do you think lost money over the long run? The answer is E, 87%. That means less than 1/3 of 1% made money year after year. It's kind of dark data, Tyler. Thanks for bringing us all down on a Monday morning. All right, let's do a follow-up question. So again, same team of researchers, Terence Odian, Berkeley School of Business. They're looking at 43 million individual trades, currency pairs, across 15 different currencies. And now my question is, what percentage of those 43 million trades were profitable? Okay, so we know over the long run, most fail to make money over time. What about the individual trades? Well, here the surprising answer is that over 50% of the trades were profitable. So they have a strong win-loss ratio, right? We know they have a disciplined process for figuring out direction. We know that they understand what they're trying to trade. Why do so many lose money? Well, the answer lies in their position sizing. And it lies in how they manage risk, right? The average loss per trade, these red bars in the histogram, far outweighed their average profit. The reason behind that also comes from, or at least the language to describe it, comes from behavioral psychologists. Amos Tversky and Daniel Kahneman wrote a book in the 1970s about prospect theory, and they went on to identify a number of behavioral heuristics. So this is evolutionary psychology. This is the human brain taking shortcuts based on, 15,000 years of our existence. We stay with the herd. We anchor to recent information. All of that was described in their early works, and many other wonderful academics have built upon that. But prospect theory, the core of that very first work that Danny Kahneman and Amos Tversky came out with, said that we experience far more pain in recognizing the loss than we experience joy in recognizing the win. So this is our human psychology. How does that translate into your trading account? Well, it means that you are much more reluctant to lock in a losing trade, to admit that the market went against you, that you didn't get it right, you were wrong, you needed to close that position at a loss. We hesitate. We don't close the position because maybe it'll come back to break even. Maybe we have such high conviction in this trade, it's going to come back in our favor, and we don't want to admit defeat. I'm here to tell you that is not defeat. Trend following investors love their losers. Jerry Parker will tell you on stage on Thursday, you got to love your losses. That's where you learn. That's where you know your system is working, if it can identify quickly what isn't going in your favor. And then the reverse, right? Sticking with your winning trades. I've talked to so many PMs, and you ask them, in panel discussions on stage in front of a huge audience, hey, can you describe your worst trade ever? They love that question. And they all say, sometimes the worst trade was, I got involved in XYZ stock, I took it for a 30% gain, and I missed the other 300% upside move. I thought it was over. I locked in the profit. Right? They're focused on their book for the month or their quarterly gains, and they miss the multi-year run. And that's what we all fall victim to as traders and investors when our emotions take over. So to get mathematical for just a second, right? We've got 4 options with every trade. We can have a small win, great. We can have a huge win. Everybody's looking for those. We can have a small loss, also great. Or we could have a huge loss. And that's the risk of ruin. That's the end of your portfolio. That's the end of your career, if that's what you're in. So when we look at this this graph, the expectancy formula tells us that along this efficient frontier, every trading system along this line is going to break even. So let's just pick on this little bullet point here. This is a 50% win-loss ratio, meaning we're just flipping a coin, right? Stock A, should we buy it or sell it? Flip a coin. I don't care. No practical discipline or edge to your trading strategy. Just flip a coin. Well, you could still be profitable so long as your winners outpace your losers 2-to-1. And somebody like Paul Tudor Jones is happy living right over here in a 4-to-1 profit ratio. He can be wrong 80% of the time and still have a profitable hedge fund, because when he finds those winning trades, when things are working in his advantage, when the momentum is on the side of the trend, then he can really lean into those. He can press his bets. He can scale up the position size and get those really outsized gains. Okay. All right, let's keep moving. This is Mark Abraham, a famous, or perhaps new to you, trend following investor. And he said that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether stock moves up or down. And that consensus is revealed by analyzing price. Here's what I'm going to share with all of you. Whether you use GoNoGo charts or any other technical tool, and there are amazing tools all over Metastock, you don't have to have a deep understanding of the technology, of the industry, of the company, of the management team, of any of those fundamental factors to be an investor in a company. And case in point, I don't know the first thing about distributed ledger technology. I don't understand the lower level protocols. Ask me what an NFT is. I'll probably give you a garbage answer. But I can participate as an investor because there's price data. It's freely traded. I can see what I need to see as a technical analyst. Same thing with biotech. Same thing with emerging market bonds. You can invest anywhere And you don't have to have insider information. You do not have to have a deep understanding of the industry or the management team or the company that you're investing in, because all of that information is represented in price. The market itself is a fantastic fundamental investor. The market will do all of that research for you, and we can participate just on the basis of price. Now, we can do that as long as we maintain a clear, clean, objective view of what we're looking at. So this just came from one of our recent client meetings. This was a little while ago, but I had to grab the chart, right? There's nothing wrong with the process. The client had an objective checklist of what they were looking at to decide when to be in and when to be out of a trade. So this is a weekly look at Facebook, Meta, right? And we can see somewhere around here, it's falling, right? We entered 2022 and mega cap tech stocks rolled over. Okay, great. And they've got, percentage price oscillator. They've got some breadth indicators. We've got different inputs to what we looked at in the beginning. Well, let's just look at Facebook on a GoNoGo trend chart. Well, sure, it was down in 2022, but wouldn't it have been great to get out in the fourth quarter of 21 and to have just a very simple, oh, it was go, and now it's a no-go. I don't want to hold no-goes. I never know what's going to happen on the right side of the chart, what's off to the right. If I'm sitting right here and I get a no-go bar and I'm out, I avoid everything to the downside. And if it's a no-go bar for a little while and we come back into the trend, great, I'll buy back into the stock. That's easier said than done. Emotionally, that's very difficult. If you just sold, even at a small loss, to buy back into that company, it takes really objective tools to force you to follow that trading plan. But that's exactly what GoNoGo charts were designed for. So get out a little earlier, have a little cleaner message than maybe something that looks like this. I mean, late September, late fourth quarter, you can't even tell that that's in a downtrend. I can't even see price action on that chart. And I'm not making fun of our own client, but that is exactly what most of us are working with, is a chart that delivers analysis paralysis and too much clutter. All right. We believe at GoNoGo Charts that multiple time frame analysis is critical. And it comes all the way back to the OG technician of the West, Charles H. Dow, 130 years ago. No computers, tick data coming off the paper from the exchange. He's an editor of the Wall Street Journal at the time, and he's observing what's happening with market participants. So many evergreen lessons from Charles Dow that still persist today. The confirmation between the industrials and the transports, we can look to a lot of his lessons, but multiple time frames was one of the clearest observations that he made. Now, he's an accomplished nautical sailor. He said there are 3 periods in all markets, and that you have a primary trend, and that is like the tides of the ocean. It is unflappable. That is driven by expanding gross domestic product. That's driven by the underlying fundamentals of the companies, the new technologies, those factors that are not tied to human behavior. That's what's driving our primary trend. But of course, we know that price action doesn't move in a straight line. We see areas where it gets way above or way below that primary trend. Now, that's our secondary period. He said that's like the waves of the ocean, and they're pretty steady. You can work with those. You know how they're coming in, and you can observe them very clearly. This is where a lot of technicians have really made hay, is to understand that human emotion can depress prices well below the primary trend and then extend them well above the primary trend. And of course, it oscillates above and below. That minor period, which Charles Dow called the ripples on the surface of the water, that's where we're going to see that intraday action, the more fickle, the more human emotion-driven price action as people are reacting to news of the day and incoming fundamental information. So with GoNoGo charts, we believe that all tools, whatever study you are looking at, if it's worth its salt, it's going to work the exact same way on any time period, on any liquid security. And that's what GoNoGo charts do. So we were looking at a weekly basis before. We were looking at a daily basis before. Now we're looking at a weekly chart of the S&P 500. So this was our big bull run in 2021. Here's our bear market of 2022. Even those highly volatile relief rallies on a weekly basis, if you're a long-term investor, maybe you're rebalancing your portfolio once a month, you look at the weekly, you're not getting involved in equities right here. this relief rally was just that until proven otherwise, right? So we want to stay out of no-go trends. We had this period where there were lots of neutral amber bars, go fish, if you will, as the market was trying to figure out what direction we were taking. Of course, on the daily time frame and shorter time frames, these are strong blue bars in each of the rallies. But here on a weekly basis, we are now in a strong go trend. We're right up at prior highs. We're going to have some resistance to work through. But in 2023, we entered the go trend, and now we have strengthened to a strong form go. Well, that's what it looks like on the weekly basis. Let's take a look at the daily basis. Of course, more fluctuation. Shorter term traders are going to get out at neutral and no goes and come back in at go trends. And right now on a daily basis, we're at a weak go trend. Remember, I talked about that overhead resistance. We're at prior highs. We're going to see some supply issues come into play where bulls are going to have to be really demanding to shift the tides. And this range-bound market that we're in is pretty clear on that daily chart. But if we know that we're in a go trend on the weekly basis and we're in a go trend on the daily basis, then we might take our entries on something shorter, like a 60-minute chart, in which case we know the primary and secondary trend are in our favor. We're aligned. So when we go down to that minor period, we're going to time our entries much faster, right? We're going to get in on go trends on this 60-minute chart. And maybe we don't exit until it's a no-go on the daily, right? That is up to your own trading discipline, but we always encourage all of our clients and any investor to consider multiple time frames. Even if you are trading the 60-minute, when in doubt, zoom out. You got to pull up the daily and the weekly to understand what's going on. Now, I also mentioned this should work the same way on any security, and we are close with John Murphy, but also Marcus Katsanos and other authors in the CMT curriculum that have helped to quantify some of the intermarket relationships, and they've built off of the great John Murphy's early works in understanding what those correlations look like and how intermarket forces can affect our equity space. If we are predominantly equity traders, that's great, but we need to pay attention to these other markets because there's a ton of useful information. So let's just do, this is a multi-chart layout. We could look at a couple of global macro markets to understand what we're seeing broadly and the characteristics of the market that we're trading in. So equities, we just said daily basis, we're in a weak go trend. How about T-bills, right? US government treasuries, we're in a weak no-go. And that's treasury bond prices going down inverse to treasury bond rates going up. So that explosive rising rate environment through the bear market of 2022, that's what was happening, right? Bonds sell off, rates go up. Big headwind for equities. Okay, US oil, right? The inflation narrative. We've had a very choppy chart on the weekly basis, and Alex and I like to look at this on a weekly time frame. But that recent break below the downward sloping trend line, and I know you're just following my laser pointer here, but you can sort of imagine it with your eye. You annotate that downward sloping trend line connecting all of the lower lows. We broke well below that, signaling that, you know, for classical technicians, maybe we were off to the races on the downside. Maybe oil was going back to, you know, the 2020 pandemic lows where people were paying others to take barrels of oil off their boats. Well, fake out, reversed, and we're back into a weak go trend on oil. Bitcoin, still humming along. We saw that basing and in fact hit the low just about the same time that Sam Bankman-Fried got some handcuffs and went to court for the FTX blow up. We've been off to the races ever since. So some interesting resilience in the cryptocurrency market. Interesting note on a relative basis, the top four by market cap are actually outperforming the S&P 500 index and have for the last several months. So here in 2023, we're back into cryptos and risk assets are attractive to investors. We're still in a weak go, a lot of pullback, but we're right at an area of support on Bitcoin. Gold, nobody's friend, though all the textbooks told us to expect a flight to safety. Again, that's the conjecture. That's what we think we know about the markets. All we can trust is what's actually happening with price. Gold is back in a go trend. We're in the weak form on the daily basis right now. But on a weekly closing basis last Friday, gold hit an all-time high on the weekly basis. And so we're looking to see some further upside huge cup and handle formation that if you guys watch our weekly GoNoGo shows, you've probably seen us talking about that as well for well over a year. That's a big base. And of course, the US dollar, right? Strength in the US dollar, obviously a headwind to emerging markets and some of the other assets that are dollar denominated. Right now, we're seeing weakness. We're back into a strong no-go on the US dollar. All right, so that's great. We've got a macro level perspective. We take a top-down approach to our analysis. Maybe you don't want to do all that homework yourself. At GoNoGo Charts, for all of our institutional clients, we offer subscription research. You can have access to that too. Every Monday, we write a note called Flight Path, and this is exactly what it does. We take a top-down approach, looking at the asset classes, then getting under the hood of the S&P 500. We'll look through all the sector groups. We'll look into industry subgroups within the leading sectors, and then down to individual names for trades that are working out. That's on Monday mornings pre-market, and then on Saturday, we try to practice what we preach, right? You got to step away from the trading activity and do some analysis at the end of the week. Step out to a larger time frame. That's what Launch Conditions is for. It's a huge chart pack with a lot of longer form GoNoGo charts and some heat maps to help us understand the context, the broader context of what we're trading in. Now, what Flight Path often does is take a look at those big macro pictures. You're going to see our insights, but of course, we can't take credit for all of it. We meet with our clients all the time, and Alex and I try to do just as much listening as talking because these are very smart folks. And so we listen to a lot of what they are saying as well and see what is confirmed on a GoNoGo chart. So back in May, we were talking about the inflection point for the US dollar. And that's really what Flight Path is there to do, is to just help you understand the context. Okay, congrats. 28 minutes and 50 seconds in. We're at the 50-yard line. Everybody grab your coffee or your tea, take another swig, grab a fresh sheet of paper, turn over your notebook, and away we go again to the second half of today's presentation, where we're going to talk about the complete suite of GoNoGo tools. So remember, that was all just the trend indicator. That's all free on Metastock. I hope you check that out and use it. Everything that I'm going to talk about next is available at metastock/GoNoGoA. You can also shoot us an email, info@gonogocharts.com, if you'd like a copy of this slide deck today. All right, so let's talk about what a complete technical analysis picture might look like. Obviously, trend is our most important indicator. Price is not a derivative of anything. That's actually what's happening, and that's where we really want to keep our eye focused. That's what we've been talking about in this first half of today's presentation. I want to spend some time talking about the GoNoGo oscillator, our icons, and the GoNoGo squeeze. And we've added one single panel to the bottom of the chart so that as a trader or an investor, we can have a complete picture of what's happening in terms of trend, what's happening in terms of momentum and volume, and also volatility. And these are the four core areas that we think are really pertinent to making any trade decision for you and your portfolio. So let's dive right in. Same concept as before. We can look through a myriad of different momentum tools in the technical analysis library. I'm sure there are many different ones in your toolkit that might be in some of our clients' toolkits or in our own. I'm going to breeze through this slide. We don't have to talk about everything on here, but what we know is that there's power in a weight of the evidence approach, but we don't want all that clutter on our chart. So what we're doing is we're taking a combined momentum indicator, compute everything in the background, and then we're going to spit that out right here. It's going to go from -6 to +6, right? So we've only got 13 values, counting the zero line. So we're simplifying, we're bringing down the level of complexity. We can see what is overbought and what is oversold, very, very clean. So if you're familiar with using an RSI or any other momentum oscillator, this is going to work in the exact same way. We can find those periods of extremity in overbought and oversold markets. We can also look for divergence between the oscillator and price. Here is a bearish divergence example, right? Price makes a new high and the GoNoGo oscillator makes a lower high. Well, that's damning evidence and a leading indicator of sometimes what becomes exhaustion in momentum turns into a correction in price. Alternatively, a bullish divergence where we see price making a lower low, but the oscillator making a higher low, meaning we had great selling enthusiasm, heavy momentum on this down move. we reach the penultimate lowest price, and we don't see the same kind of enthusiasm amongst the sellers, amongst the bears, right? So the selling is drying up, so to speak. We're losing steam in our momentum oscillator. That's all a divergence is telling us. Now, we've also incorporated volume into the GoNoGo oscillator, and on Metastock, that's displayed as this little ribbon along the bottom. What we care about is relative volume. So over a look-back period, when we're seeing high relative volume, we're going to see this dark blue ribbon appear right under the GoNoGo oscillator. So that tells us we got heavy volume in this downside move, but momentum's drying up. All right, that's a quick view of how you would use it just as a traditional oscillator. What's unique about GoNoGo charts and what many others have written volumes about, Connie Brown, who's going to be at the CMT Symposium next week, Andrew, sorry, I'm going to forget Andrew's last name. I'm so sorry. Others have written extensively about using momentum oscillators within a trending security. Connie's work largely coming from the lessons of George Lane. That's a great history lesson for those of you who are out there. We can think about trend following investing on this chart in a very simple way. We want momentum resurging in the direction of the trend. As a trend follower, I'm going to have much higher conviction in a price move when it's confirmed by upside momentum. So what Connie really dug into was, okay, if we're ranging between, let's say, 80, which is overbought, and maybe coming back down to 50, which is an objective neutral level. Well, if it gets to 52 or if it gets to 48, is that still at neutral? Do we move into negative momentum? We want to take all of that subjectivity out of it, but use the same lesson. So when all of our inputs on the GoNoGo oscillator are at 0, it's going to come down to the 0 line, and where we are in a go trend, we would expect to find support, meaning momentum might dry up, right? We might have some trend exhaustion, but we don't want to see enthusiastic selling. We don't want to see negative momentum if that trend is to hold. So we can see objectively every time it reaches the 0 line and finds support, momentum then resurges in the direction of the trend. So I'm going to give you a quick anecdote. When I was first learning this stuff, I finished my MBA program, strictly fundamental analysis. I get to New York and I find this organization, CMT Association. Ralph Akampora spends a lot of time in the office, and I start to ask him questions, and he spends hours and hours and hours with me. He's a very generous human being. And Ralph says, Tyler, let me tell you about momentum. All right. If you're holding a baseball in your glove, Ralph's from the Bronx. Everything with these guys is baseball. You're holding a baseball in your glove. When you throw that baseball up in the air, the fastest it's going to be moving is right when it leaves your hand, right? And then it's going to reach the apex, the highest point that you've thrown it. It's going to slow down, and it's going to come back to your glove. Okay, if you catch it, what are you going to do? You're going to throw the ball again. The game of catch continues so long as you catch the ball. Now, in the GoNoGo oscillator, when it comes back to 0, we're catching it in our glove, and the game of catch can continue. It's not a sell signal just when it gets to the top. That just means that momentum reached an extreme, and it's going to come back. Now, if Tyler drops the ball, butterfingers that I am, and we see negative momentum, it breaks below the 0 line, then we're going to see trouble for this trend to persist. We've got negative momentum in an uptrend that won't last long. That's a leading indicator and a major divergence of potential trend change. All right, last piece. What I want to talk to you about are the icons. Now, when that interplay between the momentum oscillator and the price panel is happening, we use data visualization to just trigger in our minds exactly what's happening. So we use these little green icons, these little green circles, to tell us about trend continuation in an uptrend, right? So when we're in a go trend and we see momentum come back, test the 0 line, and take off back in the direction of the trend, we get these trend continuation icons. That's our signal to pyramid into the position, maybe scale up our position size to stick with the trend, right? Because again, we don't know what's happening on the right side of the chart. Is this the beginning of the end of this move? Is this a trend reversal, or is it a consolidation before a trend continuation? That is the sweet spot that all trend followers want to identify, and that's what we try to do objectively. Now, the traditional use of the oscillator means that when we reach an overbought extreme, we might see price struggle to go higher for a period. This is an intermediate or short-term sort of counter trend correction arrow, where we might see price consolidate or even contract a little bit given the recent gains. So that's our data visualization with GoNoGo icons. And here in the last section of our talk today, I want to dive into volatility, and I want to dive deep because we are right in the midst of it. This is sort of that calm before the storm. We've seen very quiet markets. Got 20% of the S&P 500 reporting earnings last week. There should be more volatility, but we're right at those inflection points of overhead resistance. We're seeing very low volume. We're seeing sort of that volatility contraction. Now, there are a lot of indicators out there that have helped us understand this idea that from volatility compression, we can predict volatility expansion, right? Where you have that period of tug of war between buyers and sellers, where price ranges narrow, where volatility is compressed, then we see a breakout from that volatility, and the direction of that break is critically important. So Bollinger Bands, Keltner Bands, you guys can name many more, where the idea is to identify those areas of compression and use them to our advantage. So here's just a quick look at international seaways. We're looking at Bollinger Bands, right? So where the bands become narrow, we see the Bollinger Band width indicator coming lower. Where the bands become narrow and then it starts to trade the break outside of those narrow bands is what we want to pay attention to. So we want to trade this to the downside because price broke down from the Bollinger Bands. How about up here? We saw the bands narrow. We saw Bollinger Band width become pretty low, and then price broke out to the upside, widening the bands. We want to trade in the direction of the break. These are phenomenal tools. John Bollinger in our CMT Association monthly podcast, Fill the Gap, my colleague and I, Dave Lundgren, had to ask him, how did you even come up with this idea? And in the late 1970s, volatility was a fixed number for securities. And it could only change if something was moving from a micro cap to a small cap to a mid cap to a large cap. But it was believed, investors worldwide believed that volatility was just a number, a fixed figure for all companies. It's like saying the world is flat, right? We know that's not the truth, but it was John Bollinger who really dug into this first principle of the market to understand that you could use something like Bollinger Bands to aid your trading, to improve the directionality and the way that you trade the markets. All right, here's the same Bollinger Band squeeze on a ETF proxy for the dollar index, UUP, and we look at this every week in our research. So US dollar, many points of volatility compression and breaks, right? Compression and breaks. Well, that's all fine and well. And in fact, when we add the Bollinger Bands as yet another indicator on our price panel, now I really can't see what's going on in terms of price action. I certainly can't do any of the classical Edwards and McGee look. I can't even find areas of support and resistance, really. And we've added another panel below that, so our chart is ever more complicated. What we decided to build was the GoNoGo squeeze, where you have that same concept of compression and expanding volatility, but you do it all in the same one panel below the price, and it doesn't distract our eyes from seeing price action. So follow with me. We're in a no-go trend, right? Prices are coming down, and the range of price action is narrowing and narrowing. We've had heavy volume through those big down moves. We've had negative momentum. Oscillator keeps coming up to the zero line, getting rejected. We see momentum come back, surging in the direction of that no-go trend, more and more negative. Comes back up to test the zero line here and gets stuck. It rides the zero line. GoNoGo oscillator doesn't move anywhere. We build this grid. This happens automatically on your chart. The grid climbs to its max point, and then it can even be elongated the longer we stay in this squeeze territory. So our price range narrows, momentum hangs out at zero. We've got this compressed volatility, and all else being equal, this is a no-go trend. we expect to find resistance at the 0 line, and we would expect that to move back lower, negative momentum resurging in the direction of the trend if this no-go was to hold in place. But in this example, we've got a break to the upside. The break to the upside in the GoNoGo oscillator is our indication, a leading indicator of trend reversal, right? Max squeeze, and at the point of the breakout, that's where we know that we're, moving off to a fresh go trend, right? We've got positive momentum, and then the trend change follows. All right. So just like squeezing a tube of toothpaste, eventually the lid pops off and it can be an explosive move. We can see high velocity moves coming out of these breaks. All right, everybody still with me? Now, here's another example going back to international seaways, right? Remember we saw some volatility compression and then we saw the break. Well, right here, September 2022, we saw the max squeeze build, it's elongated, momentum was at 0. And our price range contracted. When it broke back up to the upside, we saw strong trend continuation. So this go-no-go squeeze can work in two ways. We can see trend reversal or trend continuation. Either way, we know that it's a very important moment on the chart where bulls and bears are deciding the directional future of the security. So international seaways, that's our late September into early October period. Help me. Can you find the late September to early October squeeze? And how about with this Bollinger Band width? Is this the full compression, or do we need to wait till it gets down here? What about back here? At what level is it fully compressed, and should we be looking for the break, right? That's a more difficult way to look at volatility compression. Very simple on this chart, but when we have our complete technical view, that can add a lot of clutter. Let's do another example of the US dollar. Here we are, late September and October of 2022. Squeeze, little blip, right back into the squeeze. And this is a trend reversal example where we saw the price range was very high and then narrowed, and then we see the break below 0. That's a leading indicator of the trend change to follow. It's a quick retest, and we retest the 0 line on the oscillator, break back down to negative momentum, and we're off to the downside. Let's take a look at that on our problem chart, right? What time period were we looking at? Late September, early October? Show me where that is on this chart. I'm not sure, right? I'm not sure on this US dollar chart where we are seeing the informative break of the volatility compression. Okay, so that's our go-no-go squeeze. Let's do a couple of examples here in real time. This is a recent daily chart of Apple where we saw compression. We saw a squeeze break to the downside. If you're particularly risk averse in setting your rules, you might say that any break below 0 on the oscillator, you just want to get out. You can always buy back in. Here we had this shakeout, came back to test the 0, and then broke above the 0 line. These trend continuation icons are our chance to get back involved or add to our positions. All right, let's do another example. Here's Facebook again. Squeeze, 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 trend reversal, right? We see the uncertainty, we see the narrow range bound activity, and then the decisive break out of a max go-no-go squeeze. We see the trend continuation icon, and all the way up, we're at overbought, overbought, overbought extremes on momentum, right? As Ralph said, that doesn't mean the baseball game is over. That just means we've thrown the ball as high as we can for the moment. Gap higher, and here we've got a squeeze that breaks below 0. Again, another shakeout for weary investors. We break back above 0, trend continuation icons. We can get right back into the trade, and that's a couple of examples. In addition to the weekly research that I mentioned before, we also do daily ideas for our premium subscribers. Lots of these go-no-go setups that we pull out of MetaStock's screening tools that I'll talk about in just a moment. But I want to use some of these examples from our daily research just in illustrating sort of what it is that we do, right? We're looking for strong go-no-go setups. We send those every weekday morning. So here we are, Arista Networks. looking for support within a go trend as the GoNoGo squeeze builds. Now, when you're looking at a GoNoGo chart, there are only 3 questions you have to answer. One is, what color is the trend? Are we in a go trend or a no-go trend, strong or weak form? Where's the oscillator at? Positive or negative momentum? Is it overbought or oversold, right? Trend, momentum, and then is there anything happening at the 0 line? Well, let's do a few of these together, and you can shout out the answers at home. Right here, we are looking at a daily chart of Arista Networks. So where is the trend at? You can type it in the chat if you'd like. We're in a weak go trend. We've got these aqua bars, all right? Where's the oscillator at? Right down here, we're at -3. And is there anything important happening at the 0 line? Well, yeah, the oscillator just broke out of a max GoNoGo squeeze to the downside, right? We had a go trend in place. Momentum is positive. We come back to test 0. We see trend continuation, back to positive, come back to test 0. And now there's a real threat to this go trend where we've got negative momentum. Could be a shakeout, certainly. Your rules might say you just stick with the trend, price is most important, or you might look to lighten up your position, maybe sell off half. Those are your trading rules, but we try to provide a complete technical view of every security. All right, let's do another one. Cigna Corporation, max GoNoGo squeeze. And we've got this coming out, which date? End of 2022. So from our daily ideas, we're in this max squeeze. And look at this chart, okay? Cigna Corporation. We have, you can shout it out. Where's our trend at? Strong no-go conditions, purple bars. Where's our oscillator at? -2. And where is there anything important happening at the 0 line? Well, yes, absolutely. And in fact, it's been happening over and over and over again. In this downtrend, right, we became a no-go after the break of a max squeeze to the downside. So just think about the life cycle of the trade. If you can't see the right side of the chart, if you're over here on the left and you're looking at this go trend, we had positive momentum. We come back, we get a squeeze, we break back positive momentum, continuing to go higher, we come back here, we're testing the 0 line, we've hit these highs, and we break lower. That's our leading indicator that there's real trouble for this go trend. Negative momentum, volume picks up, comes back to test 0, right? We see another compression right here, but it's rejected, and over again. So here we're at that inflection point. For those of you who trade to the short side, trend following works in both directions. And so if you are initiating a short position, you're going to look for these GoNoGo icons in reverse, right? So I talked about green circles in a go trend. You're just going to look for these red circles in a no-go trend, meaning momentum is surging back in the direction of this downward sloping no-go trend. All right? Let's do another example. We've got a no-go for United Health Services as a trend begins. These are all posted up on our website under Premium Research if you want to go back and double check anything. But here we are. We've been in a go trend. We've come back to test 0. Multiple squeezes built in rapid succession in this choppy range-bound territory. And here we have the decisive downside break and the change to a no-go trend, heavy volume to the downside. We came right back up, built the max squeeze, and here we are back in positive territory, back at a strong go trend, right? So there's only 3 questions. Where's the trend at? Where's the oscillator at? And is there anything happening at the 0 line? Now, Alex and I understand trading is not the full-time occupation of everybody who's watching these seminars, and we know that it is very time-consuming to go through 3,000 charts every morning looking for GoNoGo setups. So what's fascinating to me about the way that Kelly and the team at Metastock implemented GoNoGo charts was that they added these incredible tools that basically just put Alex and I right over your shoulder with you. So when you pull up a GoNoGo complete chart, we've got Metastock expert commentary, which is going to tell you exactly what's happening on the current bar. It's going to give you our interpretation of answering those questions and explaining exactly what you're seeing in terms of the visuals. That is a powerful way to use GoNoGo charts. And it won't take long for you to understand these things in immediate succession. But if you ever want the referral, the expert commentary is built right into the tool, right there on Metastock. The other thing is that trading can be very time consuming. So instead of clicking through 3,000 charts every morning, we might just want to set our scanner and screen the market for the setups that we're most interested in. You might enter all of your portfolio holdings and just run that screen every day to see, how things are holding up. Are they still in trends? Get some alerts if they break out of those go trends into no-goes. You might screen down to just a certain dollar amount per share. You might look at securities within a certain cap frame. Maybe you only want to trade mega caps. Maybe you want to steer clear of anything outside the S&P 500, or maybe you want to look at the whole Russell 3000. All of that is up to you, and you can set up Metastock explorations using every GoNoGo criteria. Maybe you're looking for just the trend continuation icons within GoTrends as your opportunity to get into something that's already been retested. Those are really powerful additions that the Metastock team built in the implementation. We've been really excited to see all of that. I've got a couple more examples, and then Kelly, I'll hand it back to you in just a minute to answer any more questions. Here we have Ross Stores, dressed for less, certainly much less. This has been in a strong no-go trend. Those share prices are down. Let's do the three together. Where's the trend? It's in a weak no-go. Where's the oscillator at? We're at 0. And is there anything important happening at the 0 line? Yes. We've got an extended GoNoGo max squeeze, trying to understand if this is a trend reversal, perhaps, because we got a little positive momentum. We're testing 0 from above. Could be an early indication of some positive feelings for Ross Stores. All right, let's do one more. We've got, this is ADP. This is actually in the industrial sector of the S&P 500, the XLI ETF. It's a business support services company called Automated Data Processing. Now, we've been in a strong no-go trend, right? We've had negative momentum. Every time we test the 0 line, we get rejected. And here we are. We've been riding the 0 line for an extended period in this max squeeze. Let's round them out together. We've got a weak no-go in those pink bars. Our oscillator is at 0, and we have built an extended max squeeze. So is this the time for a long-form basing pattern, perhaps, or maybe another trend continuation? The point about GoNoGo squeeze is that we look to the direction of the break to decide our trend. We do not try to forecast or predict or be crystal ball future tellers about what might be in store for ADP or any other security. We just listen to the message of the market and try to react responsibly. So Kelly, that's all the prepared material that I brought with me today. If there are some questions from the audience, I'd be happy to take them, and you can let me know.
Yeah, actually, we have some pretty good questions here. So the first one from Ken is he wants to know if this works for stocks and commodities and ETFs and other tradable instruments. Absolutely. You might be trading 1-minute cash settled butter futures. If that's your game, GoNoGo charts is going to work exactly the same. If you're just rebalancing your portfolio and it's the equity portion is just an index of S&P 500, it's going to work the exact same way. So yes, GoNoGo charts work on every security over any time frame. And the last piece that I'll mention when we're talking about multiple time frames, so if you're looking at weekly bars, the chart is created live. So during the week, as that bar or candle is being formed, in a highly volatile week, like this bar may have started in aqua, right? But we had a very heavy week, and so by Friday we ended and we're in neutral. Once that period ends, the bars are never changed. There's no alteration after the fact. So when you're looking at a chart, where we take our trade signal is at the end of the period. So if you're trading a 5-minute chart, at the end of that 5-minute period, you have your signal and that's locked in. You can certainly enter earlier if you wish, but I just wanted to point out if somebody's looking at a monthly bar, a weekly bar, it is being calculated live during that period. And I like that you added in that it works on any time frame as well, because that's always the next question is, does it work on any time frame as well?
I know I used a lot of daily and weekly data in this presentation. but we have a lot of clients who are scalping E-mini futures on very short time frames. So if that's your time frame, you might be placing your trade decisions on those 1 minute bars, but I'd encourage you to maybe look at like a 60-minute as your longer time frame, and maybe a daily as your primary trend of the market, so that you understand sort of the directional drift that you want to be trading in.
Let's see. So next question is there a key available for the GoNoGo candle colors?
Oh, yes, I had it right up on screen at the beginning. The very simple answer is this. So we've got blue bars for that strongest go trend condition, the most bullish. Aqua bars is still in a go trend, but the weaker form. And we built some sensitivity into the model so that you can see areas of pullback and consolidation within trend. Amber is the neutral or go fish bar, in Jesse Livermore's words. Pink is our weaker bearish color, the no-go. And then purple is the strongest no-go directional bearish trend.
Perfect. Okay. The next question is, if in the Explorer it looks for current opportunities, or if it's only just showing recent trends.
So in the explorations, you can set your time frame, and Kelly, you can help me on this if I misstate anything. You can set your time frame to whatever you want. So if you're looking at 15-minute candles, great. It'll signal to you when new go trends are popping up on 15-minute bars or candles. If you're just screening on, like weekly basis, maybe you don't trade that frequently, it's going to calculate those go-no-go conditions on that weekly time frame, not on your intraday. So it's just up to each individual preference onto what time frame you want to be trading, and it'll screen for you according to that time frame.
No misspeaking there at all. That was perfect. And it actually, just to reiterate it, when you get that result in the Explorer, it's going to be on the current bar. Now you can go back and tell it you want to scan on a different bar, but when you're scanning on current market, it's going to give you results on that current bar. And I'll show an example of that here in just a moment.
Awesome. Thanks, Kelly.
Let's see if we had anything else come up. Great presentation. Somebody wants to know if we can bring up NQ 1 minute. I can bring that up here in just a moment.
Oh, that'd be perfect. Yeah.
And let's see. And that looks like it's it for the questions. Now, I do want to say I learned 2 things today. One, there is a great joke that goes for Ross Dress for Less when it's trading much less. I like that. I giggled for about 30 seconds after that one. And the fixed number on volatility. I didn't realize that was a thing way back when. That was very interesting. I don't know how people could trade off of that. That's mind-blowing.
There are a lot of folks who are coming to the CMT conference this week that lived through the last inflationary environment, traded through the last inflationary environment of the 1970s, and I'm not too ashamed to say that my birth top-ticked the bond market. I have been in a steady 40-year secular downtrend in interest rates as the bond bull took off. Sorry, I bottom-ticked the bottom market, but it's shocking to me. There are some things that you can't even imagine how they got through a trading day without the technology we have today. And then there are some things that are just evergreen, right? Like,
yeah, that's true. It's weird. Some things just go forever, and other things are
right.
How did they live that way?
How did they live that way? So thanks to all the hard work of men and women who put together a VIX index and helped us understand what volatility was. It's incredible.
Okay, well, great. Well, thank you so much, Tyler. I'll take over as presenter here so I can go in and show how to do that exploration and get current results. And also I'll bring up that chart.
Wonderful. Thank you, Kelly.
And thank you. I'll go ahead and dismiss you so that way we don't accidentally close down the room.
Sounds great. Excellent. Right. I'll see you all soon. Take care.
Thanks, Tyler.
Bye-bye.
Okay, looks like we are back here. Let me make sure that I am sharing my screen. Okay, yes, we are sharing my screen. So the first question, I'm going to go through a couple of quick things. I'm the next presenter, so we can actually just take a moment on this. I'm going to take off my headset because I don't need it for a few minutes. Okay, so let's pull up NQ 1 minute chart, and then we'll do an exploration. So we'll just do the NQ. We will do the continuous contract here. So if you're not familiar with the NQ, that is the NASDAQ E-mini. And this is with the, of course, the GoNoGo expert attached to the chart. And there you can see the 1 minute. Now I am looking at a delayed chart, Al. So, but this is what it looks like on that 1 minute chart. You can see here where it triggered the go, and then we had the go trend continuation, and then our bars changed color to the strong go, and off we go. So you can see that continuation, and then you can also see the reversal here. So it's actually, it works really, really well. And of course, we can come in here and go view expert commentary. And as Tyler said, you're going to just see exactly, it's like having Alex and Tyler right over your shoulder and giving you that information. Bob's question was on the Explorer. So let's go back to the Explorer here for just a moment. Let me close this. And let's go to the Explorer. So Bob's question was around when it scans, does it scan on the current bar, or is it just looking for recent trends? So if I come in here, there are the GoNoGo scans. We can look for the icons, the squeeze, or the trend. And if I look for trend, and we'll just do the S&P 500 to show you here. So if I start the exploration, it'll go ahead and run through the S&P 500, and it's going to see if it can identify any current trend reversals. Now, there's a couple of ways to use GoNoGo as a trading system. One, you can use it as a system in itself, or you can use it as a confirmation. So if you have other indicators that you like to trade with, I love pairing GoNoGo with other trading indicators and kind of looking for that confirmation. So there's multiple ways to use it, and that's what's great about GoNoGo and what I like about GoNoGo. Okay, so here you go, Bob. So this is our current goes, our current no-goes. So if I were to come in here and rank on this, and then let's just open Centene here. So you can see it pairs instantly, and there is that current go that we just looked for. Let's go for Dover here. Okay, and you can see there's the go. So it's only going to scan for that current bar and what we're looking at. And if I was to do any of the no-goes, you can see there's the no-go. So it is looking at that current bar and showing you that. So I know that was your question on how that works. So there's a great example of that. Now you can, again, scan for the different icons. You can scan for the squeeze. And this is what's great about the Metastock Explorer. I love it. It's my favorite tool in Metastock, but it's the place I spend the least amount of time because it just gets me right to where I need to go. You're not actually having to spend time going through lots and lots of charts. And that's what's great about it. Al, you're welcome. Happy to do that. Let me go back to the presentation here for just a moment. Let me just show you a little bit more about GoNoGo. GoNoGo Complete is awesome. You do have the free template in Metastock 18. Now that template only just shows you the colors. It doesn't label anything. You can't scan with it. You can't do anything like that. So you're going to get a lot with the GoNoGo Complete. So you're going to get it to label everything, give you that squeeze indicator, give you the icons and the trend identification. And here's just some quick different examples. We've already looked through all of these, so I don't need to spend a lot of time here. But what's great is how clear and concise that expert commentary is on describing what you should be doing. Because and I'm going to go into this in just a second, but it's a checklist. It really helps guide you. Let's look here. So you've got your checklist of what you need to be doing, what you need to be looking at when you're making this trade. Is it set up correctly? Does it have everything that I want to be able to make that trade? And that's what's so critical. You bet, Bob. Happy to do that. Okay, so the GoNoGo Complete is an awesome system. It's one I highly recommend you take advantage of because it can be used independently. It can be used in conjunction with other things to give you that comparison of trends and help you get those stronger signals. When Alex was talking about it, excuse me, when Tyler was talking about it, he mentioned using different things to bring it together to give you a more powerful signal. And that's where GoNoGo is great. So normally $14.95. Here at the Summit, it's $9.97, and that's a one-time cost. You can get it on a 30-day money-back guarantee. To take advantage of that, visit us at metastock.com/saleschat or call 800-882-3040, and our guys can help you learn more about what GoNoGo is, how it can help in your trading, and what you can do with it. You can also take advantage of the Metastock Summit Traders Action Pack. So this actually includes everything we've talked about so far and everything we're going to talk about this afternoon. It'll include the Steve Bigalow CPS Plus training. It'll include the GoNoGo Complete, the 3 months of RMO ATM, plus the training course, the master classes with Rahul, Anne-Marie's Target Rich Trades. And stay tuned for Anne-Marie later this afternoon. She'll be talking about her Target Rich Trades and what they are. 3 months of Learn Metastock. Kevin will be our last speaker of the day, who's going to take you through Learn Metastock and some of the things that you can actually do with Learn Metastock that are really cool. 2 years of Stocks and Commodities Magazine and Unleash the Power of Metastock workbook and videos. All that, normally $55.22. You can get it for $23.92 today as part of the Traders Action Pack. So to get that, you can go to metastock.com/summit deal, call 1-800-882-3040, or go to metastock.com/saleschat. Okay, again, thank you to the CMT for being our sponsor today. We've got a few sponsors. We've got CMT and Stocks and Commodities Magazine. First of all, CMT, great organization for help teaching risk management, systems development, portfolio management, and applied behavioral finance. And then Stocks and Commodities Magazine, they have been our sponsor since the beginning. Anybody who registers for today's event gets a free copy. And then if you spend more than $300 today, you will also get 2 years of Stocks and Commodities Magazine. You can register for that by going to metastock.com/traders-summit, and you can traders-summit, and you can register there for that and all the freebies that we have going. And of course, we are Metastock. If you're interested in trying Metastock, you can get a free extended trial at metastock.com/traders-summit, 3 for 1. All right, well, let's introduce the man of the hour, our most handsome presenter, Mr. Kelly Clement. Hello, I'm Kelly. Nice to meet you. So I am your next presenter. I'm excited today to talk to you a little bit about Metastock, what it is, how it works, what you can do with it. Here's a few of the tools we're going to talk about today. We're going to talk about charting, scanning, and backtesting. What we're not going to talk about today is forecasting, options data, global data, and news. Although those are all available in Metastock and are part of our Metastock packages. So let's go ahead and dive in and talk a little bit about what we've learned today. Now, one thing that's really interesting, when we do these summits and you listen to the presenters and you listen to the talks, one thing that I always find interesting, because it's so important, is the fact that we talk about discipline. Every presenter so far today has talked about discipline in some form or another. How to make sure that everything is lined up the way you want it before you make that first trade. Now, why would I show a pilot's cockpit here when I'm talking about discipline? Well, the reason I like to show this is because when we're talking about discipline, I like to equate it to this, because when you get on a plane and you have a pilot sitting up there in the cockpit, the first thing you want that pilot doing is you want him doing his checklist. Before that plane budges an inch, you want that checklist complete. Because if you don't, well, that's where things go wrong. I actually like a TV show called Airplane Disasters. Now, I travel a lot and I'm out in the world a lot talking to traders and doing things. And you'd wonder why someone who travels a lot would want to watch a show called Airplane Disasters. Well, the reason is I like the let's figure out what went wrong aspect of it. So taking a step backwards. So when that accident happens, taking it step by step backwards and figuring out what caused that accident. And oftentimes, if it's not mechanical, what the issue is that the pilots didn't follow their checklist. They weren't doing what they were supposed to be doing. And we can take that into trading and say, okay, well, if my trade goes wrong, I can look at it and say, well, what went wrong? Why did it go wrong? And build backwards from it and learn from that mistake. Oftentimes flying is so much safer because of all the accidents that have happened and new rules are being applied. So that's my little spiel on being in a cockpit. So here's what we're going to talk about today. We're going to talk about, one, finding the best stocks to trade, when you should get in and out of a trade, how to test your first system before you spend your first trading dollar, and how to add clarity to your trading decisions. So where we're going to start is, in normal market, there are 4 types of indicators. We have trending indicators, momentum indicators, volatility, and volume. And the question around this, let's just show you some examples here, and then we'll get into the questions around it. So our questions are, one, our types of indicators. We have trend, and examples of trend are moving averages and MACD, momentum, stochastic, and RSI. Volatility, we have Bollinger Bands and average true range. Volume, on balance volume, and Chaikin money flow. So the question is, Rahul even kind of mentioned it earlier when he talked about, well, there's so many indicators in Metastock. How do you know where to start? Where do you kind of know where to go? Even out there in the market, how do you know where to start? So if I were to pull up a chart and look at this and go, okay, well, I'm looking at a chart of Apple. Well, how do I know what type of indicator I should be using on this one? Is it a trend indicator? Is it momentum? Is it volatility? Is it volume? Should I be using Bollinger Bands? Should I be using MACD? Should I be using moving averages, RSI? Well, that's the type of question we're going to work on answering in my presentation today. So as traders, we get kind of lost sometimes, and okay, well, I'm going to have this indicator on there, and this indicator, and this indicator, and this indicator, and then we start to get into that analysis paralysis part of our trading. So let's talk about it. So one, if you do have favorite indicators, I'm going to show you how to take that favorite indicator and apply it to your trading and find if you should be trading that indicator. And then we're going to try and find the best indicators on particular stocks. Now, when we get to that portion of the presentation, I'm going to ask you 4 symbols that you would like me to look at. So keep that in mind. Don't put them in there yet. They might get lost. So go ahead and think about that, and we'll come back to that in just a moment. So let's go back to Metastock, and we're just going to start. Let's close everything here. And let's just start by looking at the MACD. We're going to use that as our starting point. Let's go back up here, and let's just open up the Dow. We'll just open the diamonds and take a look at that. So if I'm looking at the diamonds and I have the MACD indicator up here, we're not going to spend a lot of time on what the MACD is or anything like that. We're just going to kind of focus on the signals of the MACD. So the signals of the MACD are, when we have a crossing of the signal line, it will generate buy and sell opportunities for us. So if I were to go right here, that is my indication to buy because the signal line crossed above. And here you can see we're almost at a sell signal because the signal line is just about there. It hasn't crossed under yet, but it's getting close. And I can go through and I could look at all these buy and sell signals. I could try and figure out if this has performed well, but that can be a little bit of a daunting task. If I'm sitting here trying to identify every crossing, trying to look at all the moves and figure out what's happened. Okay, so there's a couple of ways I can learn more about the MACD and Metastock if I wanted to. One is I could right-click on it and go to Help, and then it's going to give me an overview of interpretation of the MACD, parameters of the MACD, how it's all calculated. I could also go into the Expert Advisor. We've been talking a little bit about the Expert Advisor today. And the expert is what generates those buy and sell signals, those trend icons, everything that we've been kind of seeing today. So let's go down here and let's just put on the MACD. Okay. And here are those, again, those buy and sell signals. So you can see when those signal line crosses, we are generating buy and sells. Okay. So what I'm going to do is I'm going to start our workflow by identifying opportunities. So we're going to go into the Explorer. Let's close this. Let's go back into the Explorer. And again, the Explorer is my favorite tool in Metastock, but I spend the least amount of time there because it just gets me right where I want to go. We're going to close out this scan. Let's search for MACD. And I have this MACD expert system. So this is going to look for buy and sell signals a few different ways. It's going to look for signal line crossovers, and it's going to look for overbought, oversold based off of the MACD as well. We're primarily going to focus on the buys and sells today, but know that it can scan for those overbought, oversold as well. Let's look for through the S&P 500, and let's go ahead and start our exploration. So it's going to go through and look for current opportunities on the S&P 500 right now and see what we have. Again, now this isn't, I'm not telling you what to buy or sell. We're not looking for trades that you should be taking. This is purely instructional to show you how Metastock works and things that you can do with it. And let's go ahead and take a look at our results here. Now, and we've rejected out 94% of the market of the S&P 500. You can see we've rejected 472. We have 31 results, and let's look at them. Okay, so it looks like I have 3 buy signals. I have Best Buy, CMS, and Monster. I have quite a few more sell signals, and then here's overbought. I have a few overbought and a few oversold as well. Now, here's my question. I have 31 results here. Well, I could take the time and go through 31 of these charts and try and analyze them. So if I were to pop open Best Buy here, and if I could make a Tyler Wood joke of, is Best Buy a Best Buy? Okay, so it's giving a buy signal. You can see that signal line crossover right here. Okay, I could go to CMS and I can take a look at that one. Okay, well, looks like it's trending up a little bit more, but is it the one I should take? Is it my best opportunity? And then I could sit here and I could go through all 31 of these charts. Now that can be daunting and time consuming. So what we want to do is we want to narrow down the field of really what we want to look at and which ones we think are the best. And we're going to do that in a tool in Metastock called the back tester. Now the back tester or the system tester, basically what it is let's compare it to maybe like a personality test. So think of it like Match.com or eHarmony for stocks, right? So what we're doing is we're saying we're taking the MACD and we're going to put it against these stocks and see if the personalities match. See if it is a trending stock, because that's the type of indicator the MACD is. It's a trending indicator. So if I can find stocks that trend and match them up against the MACD, it'll help me understand the trading. Now, I'll say a few caveats about backtesting. So we're looking at over time. So I'm going to look over a period of time to see how well these are performed. Now, if I'm looking historical, what is that? Well, it's hindsight, right? Hindsight's 2020. So we're looking in the past, we're seeing what it's done in the past, and that's 2020. But what we're saying is, if it's performed well in the past, odds are that it's going to perform well moving forward. It's an increase in our odds of success. It's one tool that we can use to increase our confidence in our trade as part of our checklist. Okay, so let's go ahead and run our system test. So we're going to find the MACD. Let's clear out what I have there. And I'm going to take the MACD expert system. And if you do have questions during the presentation, feel free to ask. I'm happy to stop and talk about whatever it is we're sitting on. Okay, so we have the MACD. And what I'm going to do, down here in Metastock, it'll always show the last exploration results. So if I wanted to go through that list one by one, or if I wanted to scan that list, it's available right there. So I'm going to look at this and go, okay, I want the MACD against these 31 stocks. I can tell it whether I want to do long trades, short trades, or both. Well, in my scan, I looked for both longs and shorts. And I'm going to go ahead and test both because of that. I'm going to look at longs, both longs, shorts as part of the test. Now here you can tell it how long of a period do you want to look back over. Well, if I'm looking over, I like to look at a long period of time. And the reason why I want to look over a long period of time is so I can actually understand how it's reacted in different markets. Because in COVID, we had this huge drop down, we've had these big reversals, we've had some market volatility. This will tell me a little bit of how it performs over time. If you just want to focus in over a short period of time, you can. But I like to focus over a long period of time. And then in here, we can come in here and we can set our trade options. So under trade options, this is basically telling the system tester how we trade. Now, if I were to come in and ask each of you how much money you have in your trading account, don't answer that question. You don't have to put that in chat, please. That's your information. But each one of you would say, I have a different dollar amount in my account, or I have a different risk tolerance, or I only trade a certain number of units at a time. All this is customizable in the system tester, and it will reflect in how you actually trade, okay? So if I'm looking here, for my example, I'm going to say that I have 100,000 in my trading account, okay? This is just an example. You may have more, you may have less, but you put in what you have, and then you can tell it a few different things. One, if you're willing to risk a certain percentage of your equity. So here I have 50%. Now, am I ever going to risk 50% of my money in a single given trade? No, I'm not. That's not a great thing. Don't put all your eggs in one basket, right? But what I'm doing, the reason why I'm putting it that way is because the math is easy when I describe this to you. So if I have 100,000 in my account and I risk 50%, what am I risking? 50,000, okay? If my money goes up to 200,000, well, I'm risking now 100,000. It's just some easy math for our demo here. Alternatively, you could say, well, I only trade 1,000 shares or 10,000 shares or 100 shares or one share at a time. You can put that here. Or you can say, I only trade $10,000 at any given time, or $1,000 or $1 million. So you can set that here as well. If you're a futures or Forex trader or crypto, you'd put it here under points only test is what you do, because they trade differently. Broker. Here you can set your margin, money market account, requirements, how much you pay in commission, because that's all real parts of trading, that money. And then finally, trade execution. So this is all the boring stuff. We'll get to the good stuff here in just a second. So realistic market prices, what does that mean? Well, realistic market prices is basically saying, okay, I got a buy signal today, but when am I really getting into that trade? Am I getting in the middle of the day today? Am I getting in the close of the bar? Well, really, the way that system testing is set up is I'm saying, okay, I get in after the close of today, which would be the open of the next bar. So that's when it's getting into the trade. Now, if I look at this, I can change that if I want to. If you have different ways that you like to look at it, that's fine. You can customize it. But this is our default. We're going to leave it that way for now. Okay, so now we're ready. We can run a system test. We can see what we want to look at. So let's go ahead and run that test. So what it's doing now is it's basically taking all 31 of those stocks and taking every trade over the last 5 years to see how we performed. And I'm done already. Again, if you were to do this manually or by yourself, and look at each chart over time, imagine how much time that would take. Okay, so this is a graphical representation of how we have done over that 5-year period. And I'm just going to expand these columns out a little bit so we can look at them and talk about what they mean. Okay, so obviously instrument symbol, we did a daily. Here's my date range. Now here's where it's important, net profit. Okay, so looking at Freeport, which was our top performing one, it had an $82,000 gain, which was 82%, 281 trades over that 5-year period. And the reason why we like to look at number of trades is because if you think about the number of trades over a 5-year period, or if we tested 1 year or 6 months or 90 days or whatever, you want to look at that to see if it matches your style of trading. Is that how often you want to be trading? So if we look at 281 trades over 1,200 trading days, we're trading fairly often, right? So that's a concept to think about. Trade profit loss. So I had 132 winners, 149 losers. So I had more losers than I had winners. So think about that. What do you think that means? If I had more losers than winners, but it was my most profitable, what does that do for me in trading? Well, it tells me that my winners are bigger than my losers, and that it probably has small losses versus big wins. So let's verify that. Let's go into some details here. So if I go into my double click will work. There we go. Okay, so this is a system tester result. Okay, so it's going to, there's a lot of detail in here. We're not going to go into all the details. I want to show you a few key components that I find really important in looking at in system testing. Okay, so here we have, this is just a quick performance report that we've already kind of looked at. Okay, so if trading this, I made 82%. If I'd bought and held it over the same period, would have been 15%. It would have made 76% with a 15% annualized performance. So we did better trading, but you can't really look at it that way because we really need to focus on the trading aspect of it. Okay, so there were 281 trades. Here's my average profit. My average profit was $2,600. My highest profit was $20,000. My average loss was $1,755, and my highest loss was $7,501. Now, this is important because if we look at this, what I'm saying in the system test is when the MACD said buy, buy it. When the MACD said sell, sell it. And if I think about that in real trading, is that actually how we trade? Probably not, because you're probably buying when the MACD says buy, and when you get profit, or even when you place that trade, you're placing a stop as part of that. So when you make that move, you may exit out of a trade earlier, you may exit later. It all depends on where your stop is and how that stop plays into it. Now, can you program your stops into the system tester? Absolutely. That's a huge part of trading, and it'd be a big miss if you couldn't put that in as part of your system testing. But I like to look at this as a perspective of, does this indicator work on its own? Does it stand on its own two legs? So here we can see that we have this, and this is just telling me how it's traded, okay? Now, a couple of quick numbers that I like to look at in system testing. Reward risk index, and it says it's 87.47%. Well, what does that mean? Well, I can just click on help here, and I can come to this reward risk index, and it basically tells me what it means. Well, this index compares risk to reward. In this index, risk is defined as system open drawdown, the lowest point of the equity line below the initial investment. Okay, so here we can see this. If it's at 100, the reward's high. If it's at plus 50, it's medium, medium. So we can see we're pretty high here. Now, I don't like the wording of this risk none. There's always risk in trading. This is just the index compared to this, the equity line is what it's comparing it to. Well, what is an equity line? Well, let's talk about an equity line. Okay, so we have these other tabs. We have orders, we have positions. We're not going to talk about these. I want to talk about equity and what the equity line is. So the equity line is basically what your money has done over time trading the MACD. So if I'm looking at this, I can see my initial investment here was $100,000. And back here, back when it first started trading with the system, how did it work? Well, it really didn't, did it? It was kind of well, this isn't working great, so what do we do with it now? If I was looking at this equity line when we first opened this up, I'd say move on to the next stock, because you want to look for ones that are performing well. What has it done since that time? Okay, we've had this kind of uptick, some small drawdowns, some drawdown here, and here we've kind of been flat. So overall, looking at this, I would say that we're looking at a system that's performed well over time. It's had some good runs here. I like it right here. If I was looking at it right here, I would say this is probably a pretty good equity line. But what's it done in recent market? It's been kind of flat. It's had this nice little run here. So again, not a recommendation, but we look at this and go, okay, maybe. It's not a clear picture. I don't love it. So maybe let's look at the next one down and kind of see how it performs. So if we go to Ameritower, okay, so our reward risk is 98.5 here. So it spent more time above that 0 line where our initial equity was. And let's look at our equity line. Okay, so now this equity line compared to the first equity line is a lot smoother. It kind of moves up and doesn't have a lot of drawdown after it moves up like the last one did. So we've had this nice run here. We did have some drawdown here. Nice run up here and nice run up here. So I like this one over the first one. Even though the first one is more profitable, this one is performing better over time. I don't have a lot of the choppiness into it that I see with the first one. Let's look at the next one. And we'll just look at a few of these, and then we'll take some other looks at this. Equity, okay? Now what about this one? Okay, and these are the questions we have to ask ourselves as traders, because typically we're sitting there by ourselves, we're doing this on our own. What am I gonna do? So if I look at this equity line, it's really kind of overall flat. But in recent market, it has performed well over the last 6 months or so. We have had some drawdown in the last little one. So maybe this one, tighter stop, might be an option. Let's go down to the other side of this. Let's actually look at these worst performers, just kind of see what's going on with those, to see how they look. So again, look at this risk reward index. Minus 95%. So this is telling us it spends a lot of time below its equity line, which tells us that it's not trading very well. Okay, so here's my initial equity. A lot of bounciness around, and here we have this we've had continuous drawdown. Okay, so if I'm looking at this from a perspective as a trader, as we all are, when I look at this and say, okay, that first or second stock had good performing equity lines over time, and then I look at this one and I say, well, this one has never traded well. Well, where's my confidence level in what I want to trade? If I go back here again and then look at my stage here, I can say these are probably the stocks I want to focus on versus any of these stocks. First of all, it took out 16 right away. These are kind of low performing. I have some high performers, so I have 3, 4 to look at right away, and then I can just jump in and identify 1 or 2 very, very quickly. Okay, so let me show another example of this. Let's do the RSI as an example. Now, while I'm doing the RSI, go ahead and put in some symbols that you would like to look at, and we'll do a back test of those and see what they look like. So that'll give us a second. While you're typing in symbols, we'll run another quick scan. Let's do the relative strength index. Let's do the S&P 500. So go ahead and throw in a few symbols. I'd love to look at a few things that you would like to look at and back test and kind of see how these can show you how this works. So again, I'm quickly going to scan. I'm going to show you how fast this process can go in looking for this. Okay, so we're rejecting out 98% here. All right, here comes some symbols. I love it. And obviously we won't have a chance to get to all of them, but we'll take a look at a few of them. Okay, so I have 10 results here. Okay, I'm not even going to open up a chart. We're going to go to the system tester. We're going to go up here and we're going to look for RSI. We'll do the relative strength index. We'll just do the last exploration result. And we'll see what we're getting here. Okay, let's look at our results. Okay, let's look at our net profit. CSX was our top performing, only 78% of the time above the equity line. But recently, it performed super well right there, had some drawdown. Then we've kind of been bumping up a little flat So maybe with tight stop on that one, CBOE global markets, look at our equity line. And see, this is why it's important to look at that equity line, because looking at that, that's a throwaway. Even though it's performed well, when did it perform well? Way back here. I don't want to deal with that one. Okay, so see how quickly we've eliminated things that we can trade and what we can look at. Are you going to when it's been trading like this lately with that much drawdown? Is this something you're going to trade? Probably not. Again, those odds of success. Okay, let's take a look at some of these symbols that you're putting in here. Okay, Roz was first with NVIDIA. Let's go ahead and put in NVIDIA. So what we're going to do now, in these other examples, what we've been looking at is we've been looking at scanning the market, finding a current opportunity, and then saying, okay, well, let's backtest it and see which of those opportunities is the best. So now what we're going to do is we're actually going to take specific symbols and put them against a group of systems to see which one of those systems performs best on that particular stock. And this is a great thing. So if you have particular stocks that you like to trade or have preferences, this is a good way to do it. So let's look at NVIDIA to start. So we'll do NVDA. And what I'm going to do for my systems here is let's use, in Metastock 18, we added in a group of systems called the Performance Systems Plus. It's a collection of 80 systems and strategies, and they're really, really robust. I'm not going to go into the history of how they're created so we can focus on looking at what you want. But they're great systems to test and kind of take a look at. So we're going to do these 80 systems and put them against NVIDIA to see which of them performs best on NVIDIA. We'll do long trades and shorts. We'll do both. We'll leave everything else the same. So let's go ahead and run our system test. And then we'll do SLV next, and then we'll do some of these others to kind of take a look at them. And this is what's always interesting to me. I love looking at it this way because it really shows that personality test coming together, because I have 80 systems here against one stock, and you can see how well some of them perform versus some of the others. So if I rank this, well, let's rank on net profit here. So I can see this on NVIDIA, this Dynamic Momentum Index 3 was the best performer. Now, again, I'm looking over a 5-year period, and this gave me 22 trades over that 5-year period. So you have to think again, does that match my trading style? Is this how often I want to trade? 13 of those were winners, 9 of them were losers. Okay, our reward index looks really good. Let's look at our equity line. That's a pretty good equity line. So looking at this, I mean, right here, we were kind of flat. But again, what's it doing right now? This is the most interesting part right now, is what is it doing right now? Okay, so I like this. So maybe what would I do now? I just forgot what the name of the system was we were looking at. The Dynamic Performance Systems, Dynamic Index 3. Okay, so let's go back to chart here, and let's open up NVIDIA. And what we can do is just go into the Expert Advisor and go down to the Performance Systems, and we can find that Dynamic Momentum Index 3, put that on the chart, and then you can see those buys and sells right there. So here is the entry, and you can see it's been in that trade for quite a long time. And then there was our short, and then that was an entry. So you can see some of them obviously don't work, and that's where a stop's going to protect you. And this may even been an invalidated trade, because you may say, well, I'm not willing to let it go down from here to here. So that's part of adding stops into the way that you trade and putting in there. But overall, it shows us that the system works very well. Okay, so let's go back to the system tester. SLV was the next one. Okay. Okay, let's do those same performance systems, and then we'll look at some other systems I like to show too. All right, so we can see that's just turning through. makes our life really easy. Okay. All right, here's our results. Okay, this one looks like we have a lot more green than we have before. Okay, 121 trades. This one is the Chandy forecast oscillator on SLV. Okay, but look at that choppiness. And this is why the equity line is so important, is that choppiness. But what I do like is that it's performing well in recent market. And just to show you kind of what happens here, if I were to look at this just over the last year and then run that same test, it will look different because we're just focusing on the last year. Okay, TSCO will be next. Okay, so you can see this difference that if we're just looking at the last year, it's actually a different system. It's the PS New Relative Volatility Index. And you can see that that's a pretty good equity line over the last year. Smooth, steady upward. I like that equity line a lot. So that's something that you definitely want to look at. So our system here, just to bring it up, PS New Relative Volatility. Let's go and let's open up SLV. And let's put on that expert advisor. Okay, new relative volatility index, and then it will just pop on those buy and sells for you, and then you can trade it. So this one trades a lot more frequently versus the other system. So again, that's something that you want to consider. Now, when I do this next test, I'm actually going to do it a little differently here. Let's see, let's do CVS. So instead of doing these performance systems, let's do some more classic indicators. So let's do, so we'll find the MACD, we'll find RSI, because you can do as many or as little as you want. So relative strength index, let's do stochastic pops, let's do stochastic oscillator, and we'll just throw on the Bora Victory. So we're going to do all these systems against CVS. Okay, we pop that open. Okay, so you can see here the stochastic oscillator. This time we only did over the last year, remember. So it only traded once on CVS. So again, does that match your trading style? Now, if it's a great trade and it's got you in a trade for a long time, absolutely, let's stick with it, right? The MACD traded 25 times. Let's look at our equity lines here. Let's look at the stochastic equity line. Okay, so it was not in a trade for a long period of time. And then recently, looks like it's been trading that one trade, and this is how that one trade looks, okay? And let's look at the MACD. Equity, okay? There'd be an equity line I'd walk away from. All right, we've got time for one more. Let's do AZTA. AZTA. And let's go over 5 years this time. And let's just do long trades. Let's kind of see how that looks. So again, customize this the way that you trade and the way that you do things, and that'll make a big difference for you. Okay, so here's our 5 systems, all profitable. Percent gain. Stochastic oscillator was our best performing system. Equity line, pretty good, but we've been out of a trade. It hasn't traded here in a while. So that's some examples of how system testing works for you. So let's go ahead and, somebody had a question earlier. I did want to show an example of this. Somebody asked, hey, could I use GoNoGo and also RMO together or other systems? So let me close this. And a good way to do that is they want to look at these side-by-side kind of thing. So what I'm going to do is I will open up, well, let's just open up CVS. We were just looking at it. Okay, so what I can do is I can apply some templates. Let's go do GoNoGo. Okay, we'll replace the existing chart there. And I wanted to do RMO. So if on the second time I'm applying the template, uncheck this replace existing chart, hit apply, and then I have the two charts side by side, and then I can use them together to kind of identify these trend reversals. So you can kind of put these things together and say, okay, yes, I have my two different systems coming together. And you can see they actually worked fairly well in giving a combination indicator here where I have the no-go there, and then all three of my RMO went against me there. So I have this double confirmation, and so you can use these in this way. And then you can also use the Explorer to do that as well. Mike over on YouTube is saying this indicator looks lagging. I'm not sure which indicator it was we were looking at when you made that comment. But some indicators do lag, and that's something that you do want to look at when you're actually trading and identifying those different things. So the Explorer. Let me show you really quickly in the Explorer how you can put multiple things together. So let's do MACD as our first example. So we'll take MACD buy signal, and then we'll do RSI. Okay, so you can see over here I have two explorations. So what I can do is use the results from the preceding exploration, and then what it'll do is it'll scan through the S&P 500 for a MACD buy signal. Once it's done doing that, it'll actually take that list of buy signal stocks and then see if there's also an RSI signal. So you can combine these things together to help you identify more powerful opportunities. And that's one thing that's great about the Explorer. And then you could go and system test it if you want to. All this kind of goes in together and makes for a very, very powerful signal. Okay, so we had 4 results giving us a buy signal. None of those also had an RSI signal. But you can see how that will work in actually applying those things and bringing those things together. All right, let's jump over to the PowerPoint here and wrap up so we can get on to our next presenter. So again, in that workflow, we looked for 2 different ways to identify opportunities. One, using your preferred indicator like a MACD or RSI, stochastic, whatever it may be, scan the market, identify opportunities, and then test those that are giving a current opportunity to see if it's a good signal. Next, we found taking something that you're trading and putting a list of indicators against it to see which ones performed the best. So there are 2 powerful workflows, and it depends on what your style of trading is to determine which one is best. So let's talk about the action pack again here for just a moment before we get to our next presenter. And in the action pack, you can get all of the systems, strategies, everything that we've been talking about today as part of the action pack. So first of all, Steve Bigelow's CPS plus his 10 hours of training. So that is available as part of the action pack. And again, Steve Bigelow is identifying those candle patterns right on your charts along with the expert commentary. The GoNoGo complete, so you can get the market scanning based off of the GoNoGo. You can get all of the different setups, the trend, the icons, and the squeeze. 3 months of Rahul Mohindar's ATM, the automated trend modules, plus the master classes that are coming up. Anne Marie's Target Rich Trades, 3 months of Learn Metastock, 2 years of Stocks and Commodities, and Unleash the Power of Metastock. So that's normally $5,522. You can get it for $2,392 by going to metastock.com/summit deal, calling us at 800-882-3040, or going to metastock.com/sales chat. Now, if there are some of these things you want to see on specific charts or you have questions about them, if you chat into sales and say, hey, I want to see how this chart looks with GoNoGo, They can actually take a screenshot for you, send it to you, and show you how it looks. They can talk to you about how you could try a lot of these items on a 30-day money-back guarantee to see if they perform for you and how well they work. So highly recommend speaking with our sales staff. They can help you out with that. Metastock.com/sales chat, 800-882-3040. Again, I'd like to thank our sponsors, the CMT and Stocks and Commodities Magazine. CMT covers risk management, quantitative system development, portfolio management, applied behavioral finance. You can visit them at cmtassociation.org or 646-652-3300. Earlier, we had Tyler Wood come in from the CMT and chairman of the GoNoGo charts, talk to us about his systems, obviously a member of the CMT. Our next speaker, Martha Stokes, is also a member of the CMT. I love listening to Martha. She has such great, unique insights on the market and how the market works. Every time I listen to her, I pick up so much of the way that the underlying fundamentals of the market work in these dark pools and how they actually influence the market. So we're in for a big treat to have Martha come in and talk to us. Martha, are you there?
Yes, I'm here.
Awesome, I can hear you. Let me make you, yes, I can hear you. Let me make you the presenter so we can see your screen.
Okay, and please turn on the camera so we can get going.
Doug, you're welcome for the presentation. Thanks for coming in. Greg, thank you as well. Okay, let's see, Martha. It looks like I can now see your screen. I don't know. Were you planning on sharing your camera today? I can't see you.
Yeah, can you turn the camera on?
Yeah, camera's on.
No, we got to turn something on. I have my IT guy here, so we're just talking to figure this out.
No problem. You are just fine.
Okay, so
It's always great if we can get you on camera. We love having you on camera. So take your time. Let's see if we can get you going. There it is. We got you, Martha. You're on camera now. Yep, I can see you. I can hear you. You sound great.
right.
I will get out of your way.
Thank you. Hi, everyone. It's great to be here today. And I'm so excited to discuss some important things for you who are day trading or swing trading. We also teach platform position trading if you're part-time and you can't work every day at trading. But there is a lot going on in this field because the SEC is doing a lot of new rules and regulations because they discovered that 95% of the people who day traded during 2020 to 2023 lost all their money or also had margin calls. So they're readjusting. Now those rules and regulations will be handed down to the brokers, and then the brokers will implement them for you. So we're going to talk about day trading versus swing trading, which is right for you for the new digital economy that we're already in. And so that's what I want to cover today. As always, I'm an educator. I don't recommend stocks. I don't do any of that stuff. So, and everything is copyrighted, and all of the charts are produced with Metastock with our custom indicators, so that you can see how that works as well. And I just want to shine my button. We are the American Entrepreneur Best of the Stock Market Education Company for individuals who want to learn how to generate extra income. This is a huge boost because he's promoting us all over as the best educational company, which we are. We've been in business for 25 years and have a stellar Better Business rating and trading pilot. So we have all of that going for us if you don't know who I am. The webinar will answer many questions and concerns about which of the two trading styles are right for you in the digital economy, the digital financial markets, which are coming right now. The professionals are already digitized, and soon you will be too. It will give you unbiased facts to help you choose the best trading style for your goals, needs, risk tolerance, and other factors for what's coming next. There are many new rules and regulations governing some retail trading styles, and this is imperative that you understand because when you open your broker account, you sign a contract. And if they come along and then in a few months and say, here's a new contract to sign, if you don't read that 20 or 30 page contract, you may not know what you're signing up for. There are also inherent risk factors that most retail traders don't know until after they have experienced some losses. The goal of this training is to help you avoid these problems and to know what to do next. Often there is some confusions as to what is a trading strategy and what is a trading style. So let's go over that. A trading style defines the duration of the trade. How long are you going to hold it? What chart time frame you will use. Is it intraday, day, week, whatever? And you may use a combination thereof. I encourage my MetaStock students to do that. The hidden and inherent risks that you may not be aware of, because 80% of the market is off of the exchanges nowadays, so you don't have access to all of the information that the 1990 guys who were day traders had. You don't have that anymore. The share lot size minimum you should be trading. The type of support and resistance that for that specific trading style, stop loss and trailing profit stops set appropriately based on technical analysis in your MetaStock charts. You need to use technical analysis for your stop losses, not percentages, because all the big boys know that you do percentages and they can figure that out and they can see you. You can't see them. Candlestick entries and exits, you must use pure price as your entries, not an indicator. I'll explain that later. Stock and technical indicators you should use for that trading style. Market condition analysis and how that impacts that trading style. Trading conditions, who controls price? Every day, there is someone controlling price. There are 12 market participants. It's not just all these investors are like a big herd of cows and they're running this way and then they're running that way. That's not how it works. Every market participant group has a completely different set of agenda and money and everything else that goes on with that. Regulations you must adhere to that are new or are coming soon based for that particular trading style. Margin requirements and other restrictions that you must adhere to, or you're going to be surprised one morning and have a margin call, which is very, I've never had one, but some people I knew had one. It was very unpleasant. Okay, your trading process. Today's training is to help you choose the best trading style for you, not what's popular, not what's the hot new trading strategy or the hot new trading style. No. The trading isn't about ego. Trading is about making a lot of money, just like professionals do. Professionals make the 6 and 7 digits that some of you dream of, and most of you should be trying to attain. The more successful you are, because you're a huge group, the retail groups are huge, massively huge, millions and millions of them. Well, the big banks, there's like 6 big money central banks and 3 financial services. That's all the sell side, and the buy side institutions. There's about 25 top giant ones. So they're all minimal numbers, but they have huge capital reserves where you have smaller capital. So you have to understand that. There are many trading styles, not just day trading or swing trading. If you would like more information about trading styles, just email us for more information at info@technictrader.com, and I'll be happy to send you some articles I've written about it or show you a couple of videos that you can watch for free. After you select your trading style, you need to develop a trading process based on the rules governing your trading style. There are rules and regulations you have to follow, and most of you have no idea you're supposed to be following those. Maybe you've gotten away with it for a little while, but suddenly you'll get whacked with a big fine or something because the SEC is buckling down on retail traders because you impact the market. This is a step-by-step trading process. Is a step-by-step procedure you follow every time you initiate a trade, whether it is a day, swing, option, or whatever trade. When you follow a step-by-step procedure and you do it every single time you trade, all the emotion goes out of your trading. Everybody's always writing me in for saying, how do I get the emotions out of my trading? How do I stop being anxious and nervous? You have a step-by-step process and you adhere to that no matter what. That's what professionals do. We all trade and have this process and we follow it and we adhere to it no matter what is going in the market, no matter what news is coming through, we follow that. That's why we make so much money. A trading process is what most of you lack in your trading. You're trying this strategy and you're trying that strategy. And oh, Billy Joe over here said this would be a great thing to do. And so you're all over the place. If you want to test drive things, do it on a simulate trade, paper trade, and test and see how it works. And you need to do that for a period of time, and you have to do forward testing. You can't do back testing because you'll probably be back testing in a completely different market condition. There are 6 major market conditions, and each one is different. Right now, we're in a platform building market condition because the retail crowd is not fully active yet. Once you have your trading styles and process, you choose which trading strategy is ideal for that market condition and the trading conditions, also known as who controls price. On any given day, one of the major 12 participants will control price. It might be the retail investors and traders. It might be the buy-side institutions and dark pools. It might be big banks, but somebody is controlling that market at that time. A strategy is the last piece of your trading process, not the first. So if you've been trading strategies, you got to go back and fill in the holes in your education, put together a trading process and procedures, and then you're going to find that your trading is fun, it's easy, and you make a lot more money. When you have a complete trading process and the right trading style for you, it is easy to select the right strategy for the market at that time for optimal profits. HFTs versus retail traders. HFTs, or high-frequency trading firms, are companies that use the most sophisticated and fastest computers available. They're spending hundreds of millions to billions of dollars. They're classified by the SEC as either market makers, the giant ones, and this includes a couple of hedge funds, or maker takers, the smaller HFT companies that are run by 1 or 2 people or several people. Their role for the exchanges is to provide liquidity by staging orders based upon supply and demand before the market exchanges open in the US for that day. So they're processing their orders and filling the queues with orders to counter what's been coming in, and they can move price in huge ways. They can have gigantic gaps up or gigantic gaps down and then runs following. Here's an example. We had a very quiet day, and we have some pro traders in the last few minutes of the market. They have what's called the open cry, but it isn't. But it's a end of day order auction for professionals only, floor traders, independent traders, that sort of thing. And they knew that there was some news that was coming out that you have never heard about until the following day. Your news is always late, so it's worthless. So they got in here and they're just sitting there waiting. Okay. And then HFTs get that news. That's an HFT, huge volume surge. Boom, up it goes. And then boom, up it goes again, because we have smaller funds who use VWAP orders, and their VWAP orders trigger on high volume. Now, the reason small funds use VWAP orders is because they haven't figured out that dark pools do not move price, and that huge volume surges are HFTs, not dark pools. They're trying to chase the dark pools, and they're making a huge mistake with it. But our TTQA is one of our proprietary indicators that we built just for Metastock years ago. Works fantastic. It shows us that there's a high level of smaller funds buying in after the HFTs gap it. You want to get in here with the pros because there's a lot of money between here and here and here and here. And you can make more money. And it's just, you just sit back and ride the piggyback. I call it piggybacking the pros. The HFT is a pure day trading system that is run completely on automation based on complex algorithms formulated to take advantage of HFT strategies. The HFTs have 4 primary strategies that they use. One is technical analysis, another is news. And I have a whole course just on that. They operate directly with the exchanges. They feed right into the exchanges. They have the fastest execution possible. It's on the millisecond. So they can trade 60,000 times in a minute. You're on the minute scale. You can't see what they're doing. You see why you need to get in before them. This is a friend of mine's HFT trading desk that he has in his office. And he has a couple of guys that work with him. And this is all of the programming. He's hired several very sophisticated programmers. You can't compete with this. I know there's things out there on the retail side that says, oh, algos, here we go. You don't have to do anything. It's easy peasy. You just follow the signals, and it tells you when to buy, and it tells you when to sell. You don't have to do anything. And from those are red light, green light systems that failed in the 90s and the 2000s, and now they're bringing them back as algos. This is an extremely sophisticated system that's monitoring several different markets, financial markets, and covering all kinds of things as the HFTs trigger on stocks, bonds, currencies, crypto, everything. They're everywhere now. They've been in the market for 20 years and they're not going anywhere. So you need to learn how to piggyback and get with the pros to take advantage of the HFTs, because they're just computers. They could care less what you're doing. It's not a human being. Day trading and HFTs. If you choose day trading for your trading style, you will need to learn everything you can about the HFTs, because you will be trading in their path and they will be way ahead of you most of the time. You must thoroughly understand how HFTs operate. They're on the millisecond. If you do not recognize HFT front run pattern setup, it will be like being run over by a freight train going 1,000 miles an hour while you are on a bike. And this happens all the time. What happened? This was a great trade. This was a great trade. What happened? HFTs. You need to know which algorithms they are using at that time for that market condition and what strategies they are using with those. HFTs use retail trading as a leveraging strategy to front run most retail day and swing trading activity. So the more you know about them, the better you will be. Professional traders are able to front run HFTs all the time because they have it all figured out. HFTs are the integral part of the stock market and other financial markets, including forex, bonds, commodities, options, futures, ETFs, and derivatives markets. HFTs are everywhere and they're here to stay. They're not going anywhere, and the SEC knows all about them and keeps an eye on them all the time. HFTs are computer-generated mass quantities orders. Most of these orders are canceled before the orders can be filled by the exchange computers. However, the quantities move price. So their orders can just fill the queues on one side, cause a huge gap up. And they'll cancel all these orders up except for a few and make a huge profit, and they get their maker-taker bonus, because they made a huge liquidity thing. And here's one. We have this huge gap up, and we can see the huge volume spike. That's HFTs. Whenever you see enormously high volume above the average, we use an exponential moving average for my students, because it helps tell you what's super high and what's not. It gives a visual. We also use a green for an up day and red for a down day or intraday. And we have our TTQA indicator down here showing who is selling. Some smaller funds were dumping right there, and then it goes up again, and then it settles down and patterns out. So during the day, liquidity is quite light. You have to be very careful that if you want to day trade, that you have sufficient liquidity, and that's usually about 500 shares, 1,000 shares traded a day. A lot of companies are getting 50,000 to 100,000. It's not enough to day trade, and if you're trying to, you can have whipsaws. And that's why, if you're having whipsaws, that's why. Swing and momentum trading with the pros. Swing and momentum trading with the professional traders makes this style easier than day trading and much more fun. I have a lot of day traders who switch to swing trading because it's just more lucrative. You make a lot more money. The goal to find the professional floor traders and proprietary desk traders footprints on the chart. They are hit the penny traders, Their action is always going to be very small because they're striking the penny, because the spreads can be so tight on the professional side that there's no spread at all. And they're hitting the penny. They have the information that they know, and they just sit in the wait. And then other traders will move that price up, and they will be able to get a lot of money. Once identified, the swing trader uses this strategy to enter the stock with the professionals. Risk is low, stop can be set fairly tight, and then you wait for the HFT to drive price up with either a gap or a long white candle. And here again, we have a gap. Very common to see gaps like this, or a long white candle can happen also. Most pros will sell into the gap or run, or they sell after the smaller funds VWAP orders triggered, because the VWAPs are automated orders that the smaller funds use because they're one-man shows or two-man shows. They're really, really busy. They don't have a lot of money. They are every small fund that has less than $3 billion in assets under management is considered a small fund by the SEC now, and they are no longer classified as professionals. They're classified as retail. That's important to remember. Pros swing trade a stock several times as it moves out of a bottom sometimes. So they may be in and out of it as well, buying and selling. And that's something you can learn to do. Swing trading with the pro is all about identifying their entry signals and following the indicators that we have taught when you take one of our courses and trading with them. Now, we have quite a volatile market right now. And what I mean by volatility is one day it's up, one day it's down, one day it's up, one day it's down. So you really need to know how to get in with the pros. This is a pro setup, and then it moves up, and then they're selling right there. So you have to learn these candlestick patterns. They're not your reversals and continuations. All of you learn candlestick charts. You know all about candlestick charts. They're great and wonderful. And the Japanese candlestick and all the fancy pretty names and all that is well and good. But it's all about making money, right? How much money are you worth an hour? $50, $100, $200, $500? Most professionals consider their net worth per hour at $500 an hour. So they have to make a lot of money to make it worth their while. If you're taking $100 off the market and saying, okay, I made $100, you have lost money because you weren't able to pay yourself whatever wage it was against the hours that you put into it. Even if it was just a few minutes of trading, you were either going in a chat room or looking for recommended stocks and setting it up and placing the order, and you pull off $100 in a day trade, you're losing money. You are losing money. Okay, so be aware of that. Okay, so day trading or swing trading comparisons, day trading, SEC FINRA requirements, yes, lots of them. Capital base right now is 25K minimum. It's going to be going up. Most retail day traders use at least 100K to 3 million. I have day traders who trade 3 million shares, and professionals I know that trade 5 million to 10 million. Broker platform, level 2 screen, ECN, routing to exchanges is ideal. A charting software, full charting software program is mandatory with a complete list of indicators, custom scans, sorts, explorations, and complete day trading technical analysis in real time or after hours. But you have to be able to get in there and see the software. Metastock is software I recommend, and I have many students using it. It's excellent. So you need to be aware of that. Do not use a retail broker's basic charting system. They are in this for the money. They're not in this to make you money. I'm in this to make you money. Because if you make money, then everything else falls into place and everybody makes more money. When you make mistakes and you swing the market around and you do whips and cause whipsaw trades, it's problematic. I'm here to get you to make more money, because then everybody I know is going to make a lot more money because you're not making those mistakes. SEC FINRA requirements, there aren't any yet. Capital base, 10K minimum. I usually advise at least 25K to 50K for swing trading. So if these are way above what you have as far as your capital base, you need to start with platform position or intermediate term trading stacks. They're much easier, and then you can build up your base to that level, and then you can do that. Because I have people who are making income, monthly income off of the lower bases, but not 3,000. Broker platform, standard retail broker platform, or built into charting system if you have that. Charting software mandatory. Charts must have watch lists, customizable scan features, customizable indicators, variable templates, and layouts for swing trading as the market conditions change. So there's some basics there. We also have day trading computer requirements. Desktop with fastest processor system available, minimum 3 to 6 monitors, real-time data, using phone apps increase risk of mistakes and big losses on scalping momentum trades. Fastest routing available, highest speed internet available, backup internet access, backup power source in the event of a power outage, direct phone access to your broker in the event of an emergency. You need to cancel an order, you can't get it through because the internet crashes. How many of you have had an internet crash recently, right in the middle of a trade? Hello, welcome to the club. Swing trading, computer requirements, fast processor, desktop ideal, 2 to 3 monitors, end of day data is just fine. Using phone apps or tablets are fine once the initial technical analysis is done on the desktop. Fast routing is ideal. You always want the highest speed you can get. High speed internet, Wi-Fi, secure. If used, it has to be secure so people can't get into your account. Backup internet power source and direct broker access. line are ideal, but not as mandatory as day trading. Analysis will be done after the markets are closed for the orders to be placed the next day. And if you pay attention, as I do, because I have 7 market condition analysis scans that I have, explorations that I have in Metastock, and I study those every day, and I make an analysis of what the market condition is, who's in control of price, and that sort of thing, and then I send that to my students. I get up at 2:30 in the morning, and it's out there by 3 to 5 in the morning so they can start the day, because I have a lot of pros cons program as well. So that's what you need. So we have our basic swing trading. This would be position trading. This could also be a position trading or a swing trading. Day trading, you might be able to get away with 3 screens, but most of them are using 6 because we need to follow and have visualization and see what's going on in other. Say you're buying day trading commodity stocks. You want to be watching the commodities. Or if you're trading ETFs that are based on cryptos, you want to be watching the crypto market as well because they impact each other. So you may need to have more screens. Then you can have more of your explorations and other things open. So you want to have that. Day or swing trading comparisons. Day trading, share lot size, typically lot size is 1,000 shares to 5,000 shares for intraday trading. Stock price is 50 to 500 is typical. The goal is large point gain in a few minutes or less. Percentage of capital on margin at risk, never exceed 25%, even if your broker lets you. That's one thing the SEC is going to crack down on is margin, because that's what's killing the retail traders. Duration of the trade, 1 minute to 10 minutes average. Trade side, buy long and sell short are possible, but you shouldn't be selling short in this market. Why not? Because this is the bottoming to platform market condition, and it's not going to go down anymore. I don't care what the news says. I don't care what the politics say. I don't care. It's done. It's done. The intermediate term correction is done. We had support of the market last year, so it never went into a bear. It dipped into the bear a couple of times, but the buy-side institutions with their $100 trillion under assets under management worldwide supported the market so that it wouldn't go into a bear, so that they could protect the fiduciary responsibilities of their mutual fund holders and their 401ks, and they did a marvelous job. Nobody panicked. Okay, so this thing is over. So don't be selling short right now, because this isn't a sell short market. Stop losses. Based on support and resistance and technical patterns on intraday charts. And you have a lot of this with Metastock. You're just not using it. You need to use it. Metastock's awesome. Swing trading. Share lot size. Typical lot size is 100 shares to 2,000 shares for momentum, velocity, or swing. And you can choose which of those you want to do. Stock price is anywhere from 10 to 50 is ideal. And the goal is to net at least 3 points to 20 points over a few days' time. Percentage of capital at margin at risk, never exceed 25%, but you should not need to use margin for swing trading. You may for day trading, because a lot of times the brokers require it. Duration of the trade, 1 to 12 days, average is a 5-day run. Trade size is buy long and sell short. You can do either, but do not sell short in a market that is not a bear market or an intermediate term correction. Stop losses based on support and resistance technical patterns on daily charts. So you have a lot going on here. Day trading or swing trading comparison. Day trading, risk tolerance. You have to be cool hand Luke. You have to be cool. You have to be Mr. Spock. You have to be someone who doesn't get upset easily, who can handle a high degree of stress and think clearly and not panic. If you don't have a very high risk tolerance, then either platform position trade, which is very easy to do, it doesn't take a lot of time, or swing trade or momentum trade. Just don't go to day trading, because you're just going to lose money. Experience at least 3 to 5 years of highly profitable trading stocks live via swing trading or other short-term trading style is what I recommend, because when you learn swing trading, the same kind of things apply intraday or day. And you also have end of day to first of day trading. Most of what is called day trading is intraday trading. You're entering the order on the same day, you're buying and then you're selling, or you're selling short and then you're buying to cover. But what the professionals do is they day trade, they go end of day auction, I will buy this stock, and at the first of the day, after the HFTs have pushed it up, I will sell that stuff. So it's end of day, buy, first of day, sell, or end of day, sell short, first of day, buy and cover. And that's how they get around a lot of the wash orders and a lot of the other orders they'll talk about in a moment. The time available to trade. Day trading requires at open trading. You're going to want to trade where the highest volume is and the biggest activity. During the day, it just kind of peters out. Even with the big stocks, it's very hard to make money intraday. That's why the means groups aren't around anymore, because they couldn't make any money at lunchtime. After market close, technical analysis is a stock pick selection for the next trading day. Average is 8 hours per day for someone who's really making good money at it. I know that some of you try to do it in a couple hours a day, but you are losing money because you are not paying yourself, and you're not planning for taxes, and you're not planning to actually make money. And the IRS calls that a hobby trade. Education and trading. 1 to 4 years with simulator trading practice and expert level technical analysis skills will get you there. You have to have a full-fledged course that you learn how to do this. I have a lot of people say, oh, can I just watch you put on your orders? It's like, no, I'm busy watching all this stuff, and it's easy to enter an order. That's not the hard part. The hard part is identifying a stock that's got pro traders in it, and you make that easier by having your explorations funnel everything down to just a few stocks that are okay. That's great to go. That's great to go. That's great to go. It's not about entering the order or closing the order. That's easy. Swing trading, risk tolerance, moderate to high tolerance. You need more tolerance than for position trading. Position trading is so forgiving. Platform position trading is for people who are just beginners, just starting out. You don't know anything. That's where you start. You get the skills, get the spatial pattern recognition, you get the visual references, you get all that down. Then you can go to swing trading. If you love swing trading and you want to go to day trading, you can pop over there. But don't start at day trading because you lose all your money. Experience ideal is 6 months to 1 year of live market trading. Experience will really start to get you cemented where you're making regular, consistent trades, and you have a 75 to 80% success rate and a very minimal loss rate. You will always have losses. There will always be trades that go against you, but you keep the losses small and minimal. Time available to trade. Analysis is done after the market is closed. This makes it easy for people who are working full-time. Orders can be placed that evening or before the market opens the next day, and you don't have to swing trade every day. 2 to 5 hours each day trading. If you're trading full-time for monthly income and you're wanting to make $100,000 or $200,000 a year, then you're going to be putting in 2 to 5 hours each trading day. You're going to be putting in 8 hours a day if you want that kind of money for day trading. Education and training requires swing trading specific education and training and simulator practice. You just have to have a swing trading background to get started and going on it. That's why I have several different courses. Beginner and novice level traders can do this, but you have to practice and learn before you go live in the market. Don't rush things. You've got all the time in the world. The stock market isn't going anywhere. It's just going to get bigger and stronger and more dominant in the digital economy that's already here. We're already in the digital economy. It's just going to be explosion. I have never seen so many new technologies and new startups, and the NASDAQ private market opening is like, whoa, this changes everything. You want to know a lot more about that? I can't talk about it because I got to get through this, but you can always ask me. Just email me. Swing trading has no specific rules or regulations from the SEC, FINRA, nor any broker requirements, generally speaking. Most swing traders do not suffer the huge losses of day trading, and that is why. Many new and novice retail traders spend tens of thousands of dollars learning to day trade, only to discover they do not qualify under the retail broker SEC new rules. Before you take a day trading class from anybody, unless it's free, you need to find out what your broker requires and what the SEC and FINRA require. You need to know what you must have in terms of education requirement by retail traders, brokers. They can require a certain level of education and experience, and you have to prove it. Capital base, SEC, FINRA, and brokers have capital bases, and they're going up. Margin rules by FINRA and the brokers, that's going down. They're not going to be able to offer more margin. Trading rules by SEC and FINRA, experience by SEC and brokers, what you have to have. You'll be filling out required forms to do this, and And you may take a trading class and go, wow, this is so cool. I'm going to make all this money. I'm going to make $200 a day. Whoa. Okay. Raise your expectations. Raise your expectations. You can do better than that. Come on. $200? Get real. This is going to take time to learn. And you deserve to make more money than everybody says that you should settle for. Don't settle for so little. The market's great. It's a fun place to be. The rules for day trading. The SEC and FINRA are currently creating more rules and regulations and for retail traders pertaining to day trading, pattern day trading, equity capital requirements, margin requirements, FINRA portfolio margin rules. These are on the SEC.gov website, and there's more coming. There's additional information that you should read before signing any retail broker as a day trader. Note, if your broker provides you with any trading training or education, the broker could designate you as a pattern day trader, which has special rules. So your broker says, oh, we can teach you how to day trade. You're a pattern day trader, and you have special rules and regulations you have to follow. You need to be careful with your brokers. They need to make money, and they're working very hard to make money off of you. SEC FINRA definition of a pattern day trader. FINRA rules define the pattern day trader as any retail trader who executes 4 or more day trades within the 5 business days, provided that the number of day trades represents more than 6% of your total trades in the margin account for that same 5 business day period. A lot to consider, a lot to figure out. I don't have time to explain it in detail, but that's the rules, and you can go back over that. Day and swing traders should not note that this rule is a minimum requirement and that some brokers use a slightly broader definition in determining whether the customer qualifies as a pattern day trader. Then you have all these special rules you have to follow, and they're getting stricter. So you may be day trading right now and going, well, I'm day trading and I'm okay. You may not be in 3 months, 6 months. It is your responsibility to contact your brokerage firm to determine whether a broader definition applies to your trading. If you're day trading, a broker may also designate you as a pattern day trader if your broker knows or has reasonable basis to believe you will engage in pattern day trading, and you might accidentally. You might not really realize you're doing it, because this is a lot of complicated legal mumbo jumbo to try to sort out and figure out what the heck they mean. For example, if your broker provided any day trading training to you before or after opening the account, the broker has the legal right to designate you as a pattern day trader, and they will. And then they make more money. So you may be slapped with this and you may not even be aware, and you go, whoa, what happened? FINRA rules define a day trader as the buying and selling of the same stock and security at the same day in a margin account. There will be additional rules that are not yet implemented. This definition encompasses any security, including options. Also, the selling short and buying cover of the same security on the same day is considered a day trade. Exceptions to this rule include a long security position held overnight and sold to close the position the next day prior to any new purchase of the same security. EOD-FOD is the definition and the algorithm, the way they say it. Or a short security position held overnight and purchased by to close the position the next day prior to any new sale of the same security. So the EOD-FOD is professionals, and that's how they get around all this mumbo jumbo. And they do, because they don't want to. Margin requirements for pattern day traders, minimum capital equity requirement. The current minimum equity for a customer of that brokerage firm who is designated as a pattern trader is $25,000. This $25,000 requirement must be deposited into the customer account prior to any day trading activities and must be maintained at or above that level at all times. This may change with higher requirements. A customer cannot fill this $25,000 requirement by cross-guaranteeing separate accounts. Each day trading account requires to meet the $25,000 requirement independently using only the financial sources available in that account. If a customer's account falls below the $25,000 requirement because they lose money, the customer will not be permitted to day trade until the customer deposits cash or more securities into the account to restore the account to the 25,000 minimum equity level. Ooh. Brokers are permitted to increase this amount or to impose more stringent margin requirements at any time at their discretion. Okay? Am I getting my point across about day trading? Swing trading is the holding of a stock at least 1 day to several days, 10 to 12, or 2 trading weeks is maximum usually. If you buy and sell stock within 1 trading day, you are day trading, even if your intent was to swing trade. You have to be careful. There are swing trading strategies for day traders. Swing trading has no minimum capital or equity requirements. How much capital your online broker will require is up to that brokerage with no SEC or FINRA requirements. This is one big advantage of swing trading. So, day trading requirements, equipment requirements. In recent years, day trading on your phone or tablet has become extremely popular. I think they're crazy. And this can be done, but it poses many problems. Day trading depends upon extremely fast, reliable executions, and the phones can be cracked. Wi-Fi internet can be unreliable or switch off and on. It is difficult to read charts properly, and you need to when you're day trading. It's not about price, it's about charts. Distractions from work, traveling while trading, people distracting you from your day trading. Can you tell me where the airlines is for such and such, and you're in the middle of a transaction in the middle of the airport? I've seen it, and the person's looking like wide-eyed and glossy, and he's day trading. These can all lead to sudden huge losses and a margin call immediately. Okay, you don't want margin calls. To be successful as a day trader, you need to eliminate as many distractions and disruptions as possible and focus on what you do. It must be tunnel vision. Professionals are so focused when they're trading that you can walk right past them at their workstation and they will not notice I have done so. I have been to many trading floors, and pros are so intent on their trading that they don't even know you exist. The majority of retail traders who try to learn to day trade fail, and most lose most, if not all, of their capital and then some owing margin. This is the reality. If you are intent on being a day trader, then be serious about every aspect of day trading and take the time to learn it well. Don't just rush into the market and think you're going to get rich quick. It doesn't kind of happen. It is not as easy as the online trading seminars want you to believe. Everybody's going, oh, it's easy to day trade. Oh, you just go in and you enter this and then it goes up. And, oh, look, this is very wonderful. It's easy on a simulator. Oh, here, I'm going to show you how I trade. I'm on the simulator. It's easy. Very easy. It's not easy in the real market. This is one of my friends. Her name is Kathy, and this is her day trading system. She uses mostly option trading, and this is what she has laid out so she can follow her stocks and her options trading. And I just thought you'd like to see a real human being's professional trading desk, and there it is. So thank you, Kathy. Swing trading is significantly easier than day trading. It takes less time to learn and simulated practice to hone your skills. Swing trading is suitable for anyone who has 2 to 5 hours a day or even less. You can swing trade occasionally, but you may not be able to make a big income monthly. I have swing traders who trade once or twice a week, and they make good money, but they still are working. Day trading typically requires more than 8 hours a day for high income that it can produce. It can, but it takes more time. Swing trading can be done part-time with good income results. Day and swing trading are not a group activity. If you need to have lots of people around while you're trading and you need to talk to them and get their advice and stuff, then platform position trade or do something else, or don't trade at all, because the market is not conducive to that kind of thing. You need to be focused when you're trading and pay attention to what you're doing. If you need a crowd consensus or buddies to back your decisions, then consider an alternative trading style or do some other kind of trading, because this is really a loner's game. This is something that people who are accustomed to be so focused, I can be so focused, I have no idea that 2 hours have gone by. It's that fast. Traders who join chat rooms or trade reviews groups are seldom successful because they're not learning to trade on their own. I retired before the age of 40, and I came back to and started doing education because I felt like, come on, you guys, you can do better than this. You can do better than this. What are you doing? You're taking these tiny pennies off. Oh, I made $25 this day. Woo-hoo. You can do better, and you mess up some really great charts. So you need to raise your expectations. You can be so much more. You can contribute to the market. The market is what runs our economy, folks. It's the business of businesses. So learn to be self-reliant. Learn that you can do this. And that's what I teach. You can do this. You can learn this, and you don't need to have somebody telling you what to do. You can do it. There isn't anybody in my students are very successful. You must be an independent individual who's able to make decisions on your own, oftentimes quickly, with confidence. And this comes from your trading process, your trading procedures, having a strong swing trading or day trading or platform position trading style, understanding market condition. When all that happens, you are confident. You know, you look at a chart, you go, oh, this is a sweet entry. This is so sweet. This is going to work. You see it, and you recognize it, and you can move. And you actually have less trading, but higher profits. So you have more time to do golf or fly your plane or learn to fly a helicopter or whatever it is you want to do. Highly emotional individuals should consider other styles of trading that are slower paced and not as stressful. Remember, the shorter the duration of the hold time of the trade, the higher the risk. People think, well, if I just hold this day trade for just a minute, the shorter the duration of the time you're holding the trade, the higher the risk. It goes right through the roof. Okay? Do you understand that? Skill number one, swing traders need. The number one skill you need to make a high figure income is not how to set up your broker account or platform or how to enter an order, nor is it how many newsletters you read or chat rooms where retail traders share ideas. It is not about whether you use desktop or tablet to enter orders. Success is not dependent on how many seminars you attend or how many times your mentor watches you enter an order. Whew. These are peripheral aspects of trading. The most important skill you need, when you want to be a successful day or swing trader, is spatial pattern recognition skills, also known as visualization analysis. That's the next tier of technical analysis. You'll learn, oh, I'm invoking what? Oh, a resting day. Oh, a little push. Oh, a little morning start. Okay, you can see all that stuff, but that doesn't tell you anything. You have to say, oh, this was an entry. This is pro traders pushing the stock back up. And you need to identify where the pro traders are when they start taking profits, so you can get out when they get out. So spatial pattern recognition skills is like having a magical algorithm, because you can see it yourself and you can act on it instantly. You're not waiting for something to come through or some recommendation service or something, and they're making money while you're selling, because all recommendations have this little sticky, cute thing that they have to tell you. Anybody who recommends stocks has to tell you if they own the stock. Okay? Warren Buffett, all the famous gurus. Okay. So, I own the stock. I bought the stock. I'm buying the stock. Guru, great guru. Okay. Yeah. And then what happens when everybody starts buying it? There is no rule that says that they can't sell as the stock moves up and you move it up. And of course, the guru is always great and wonderful because he's always right. Because millions of people buy when he recommends it. So it goes up and he sells. Makes money. And he looks like the magnificent guru of the universe. So annoying. So just be aware that that's what they do. Summary. This webinar is just a snippet of the training and Technitrader courses teach. Our education is unlike any other, and that is not something I say. It's what all my students who've taken other courses say to me. Oh, Martha, I had no idea. Why did I wait so long to take your course? Yeah, I looked at you 3 years ago. I thought, no, I don't want to do that. I want something fast and easy. We are credentialed professionals, which if you do your homework, you will find is very rare in the stock market trading education business. Very few people are credentialed as we are. I am SEC licensed in the Series 86. to educate, and to analyze. What you already know is the beginning. You've learned a lot. Or if you're a beginner, you haven't learned a lot, but come to us and you can learn a lot. We have a lot of free training. What you already know is the beginning. And it's great. And everything you've learned is good. There's nothing you have to throw away other than anxiety, emotional stress, feeling like you have to trade too often, all the negative things. We can get rid of those bad habits. It's a beginning, so you build upon that. Are you ready to take the stress and frustration out of your trading while increasing your profitability? And that's what I do with people who've been trading for a while and are frustrated. They're day traders, they know they can make money, but they keep losing it. Precision entry and exit candlestick patterns are far superior to anything you have ever learned. And that's what we teach. We have a course on that that's free on the website. Take your trading to the next level. And so we have free mini courses. So you get to test drive, or like when you're learning to fly an airplane, you fly the airplane in the simulator at first. So you get to test drive this first. You can come, these are free. All you have to do is register. We don't harass you, we don't bug you to death. If you are really interested, you'll complete this, you'll go and you'll look at a course outline and you'll say, wow, this is so great. I'm going to get into this because this is going to make my life so much easier. I'm going to love trading again. I'm going to love Metastock because I'm going to learn how to use it so much better. It's going to be awesome because we have all these things for Metastock and it's great and wonderful. And you will enjoy the experience because this is how we teach. And so you get the experience. How do we teach in these little mini courses? They're very short. They don't take very long to get through. And we have a webinar special just for you. So it's available through May 1st. And it is free access for 1 week once you register. And it is about what I talked about today, high frequency trading. You need to learn more about high frequency trading, and it's a full hour of training that you will take on this little mini course. It's set up the same way so that you can follow along and study the course. And it will be a great introduction to high frequency trading. You'll learn a lot more than what I was able to present today. Because today I wanted to show you the day trading problems, the swing trading, and how you can work this through. Because if you're day trading and constantly losing money, you may want to consider with the new regulations and the new rules coming and all of the stricter things that they're going to have in the next 3 to 6 months, that maybe swing trading would be a better deal for you because most of the time it is. I don't really care what the students choose. What I care about is that they're successful, they're happy, they have fun at it, they enjoy trading, they contribute to the stock market because they're making money. When everyone is making money in the stock market, the economy goes up, prosperity goes up, everything is better. When somebody's losing a lot of money in the market, that's a negative for the economy and everything. The stock market is the business of businesses. It runs the economy. We are in a digital economy, and more people are going to be needing to trade stocks or whatever to make money to stay in the middle class of whatever country they're in. Because I know Metastock covers all the countries, which is awesome. And you can trade your own countries, and you can trade the U.S. as well. So I'll take a few questions if I have a little bit of time here. I think I do.
Hey, Martha, thanks for a great presentation. Let's give everybody a moment just to put those questions in if they have them. I'm just going through and posting the links to the course in chat on both GoToWebinar and YouTube.
Oh, thank you so much. Yeah, that makes it easier for them.
Yeah, it's a little easier to click. And then again,
it'll be worth your while, guys. You will really love this course that we put together. So if you haven't taken it, you should. And if you have taken it, you should take it again because you'll slow. Oh, I learned so much more the second time around. You can watch it as many times as you want. And every time you watch it, you'll learn more.
Let's see. And I'm just typing in those codes as well for the discounts. Okay, I've got both of those up.
Great.
So, question coming in, Martha, what do you see as the biggest challenges coming in for new traders is what I'm getting on the other side here. So how do you, I guess, we laid out really, really well how each type of trader should spend their time. What do you see as the biggest challenge for a new trader coming in?
Too much misinformation. Right now, the internet is just a plethora of information. A lot of it is outdated. It's 20 years old. We had the pandemic changed everything. The market structure went into hyper mode where they were changing everything and restructuring the whole thing. And a lot of you go on the internet and you try to learn this stuff on your own, and it's all well and good, but a lot of it is misinformation or this information that's no longer valid or useful. And so, a lot of day trading companies are teaching scalping, and I'm going, you can't do that anymore. You can't. It's impossible. So I think that misinformation, not having somebody that you can trust to give you reliable information. If you can find somebody that's credentialed, has an educational background like I have, my family has been in education for generations. Howard's family was in education for generations, and we put this together with that background and our trading experience. We had to trade the floor for a number of years before we decided I wanted to retire. Then he talked me into this. Let's teach everybody, but I so love it. So you can prowl around my website and get a lot of information, and get a lot of things to get you started. And you can also join one of my core spaces if you want. There's a lot of different things you can do. We also have social medias all over the place, and we post regularly things that are information. But be careful where you go. Be careful how old the information is. A lot of times there'll be a big website. It's very famous. Everybody goes there. It provides all this information. But I'm reading this information. I'm going, oh, this is so outdated. They need to revise it. It's like if you use Wikipedia, somebody is going in there constantly and updating and making sure that the Wikipedia information isn't out of date. Well, that doesn't always happen with the investor and trader financial websites. They are upgrading, and a lot of it is really, really old. And so you get this information and it's not right. And that's my biggest concern with beginners, is if you get started the right way and you get started with a good education, you're not going to start out losing money. You're going to start out making money, and that builds confidence like you cannot believe. And then you don't have the bad habits. You don't have to retrain. You don't lose the money. It's just a whole lot easier if you bite the bullet and get your education first. Invest in yourself. Get them at a stock charting. Awesome. And just know that you're going to have to spend money to make money. You're going to have a full service charting software program. You're going to have a good broker. You're going to have an education.
Let's see, a couple other questions coming through. The screen says webinar special through May 1st, 2024. Is that supposed to be 2023?
It should be, it says Metastock April 2020. Oh, yeah, no, it's 2023. I'm sorry. That's
okay. Yeah, so yeah, if you're taking advantage of the offer, it's only good through May 1st, 2023, just to be sure.
Yeah, I should probably
Doug is asking, what is the typical cost of the education course module at TechnoTrader?
It depends on what education you need. And I take each person and I say, okay, what courses have you taken? How long have you been in the market? What have you been trading? How have you been trading? And all of this. And then I try to custom tailor it for them. My lowest cost course is $99. That's what this high frequency trading one is. You're getting it for free. And then for my professionals, the highest one is about a little under $5,000 for my pros. Most people don't need that kind of expense because you're not wanting to qualify as an accredited retail trader, accredited with the SEC. You would need that. Or if you wanted to be a professional floor trader or work for an independent professional floor trader, then you would need the more expensive modules. Yeah, if you wanted to go the full things. Because I'm running the gamut from brand new, never done anything before, to somebody who's been a stockbroker and now wants to be a professional trader.
Let's see, one other question that looks like it's coming through is, what you talk a lot about the dark pools and things like that in your presentations. Do you have a class that you recommend people trade? Do you recommend people trade primarily equities, options, futures? Do you have a guidance where you think people should go?
Okay, I always recommend that you start first with stock trading. Once you learn stock trading, it's easy to trade bonds. And bonds is another big market that's open wide up that we haven't had access to before, that's available for retail. You will have cryptocurrencies that you're going to be trading. But the thing is that on the stock market, every single thing that you might want to trade is in the stock market. If you want to trade cryptocurrencies, we have ETFs. If you want to trade real estate, we have REITs. If you want to trade other things, you have that full gamut in the stock market. And stock market is most forgiving. Forex is tougher. So you want to start with something that is not so hard to learn. You take the easy one and learn that, because once you've learned stocks, you can go to commodities, you can go to futures, you can go to E-minis, you can go to Forex, you can go to cryptocurrencies, you can go anywhere you want and you can trade. So I always say start with stocks and learn that first. And my friend who is an options market maker says, yes, have them start with stocks and then learn options, because it will be better. So I have quite a few professionals I tap into. I am part of the buy side. I'm part of that membership there with my CMT status, and then what I do. So I keep track and I pay attention to all the activity that's going on the buy side, and the dark pools are on the buy side. And then I also keep track of everything that's going on with SEC and FINRA. Every day I get this huge list of activities that is going on with the SEC and FINRA. So I share that with the students, so I'm keeping up to date. And then we will, as cryptocurrency becomes more and more prominent and is brought into the financial markets, because we have mainstream financial markets, stock market, bond market, options market, futures, swaps, all the different markets. We're going to be bringing crypto in, and it's happening right now. Right now, professionals are test driving all the rules and regulations for crypto, and then that will be folded in with all the other financial markets, and then it will be easier to trade. It will be safer, it will be more secure. It will be decentralized, of course, as it is, and it will change everything about how our monetary system trade everything. So start with stocks, because you can trade crypto right now using an ETF, and it's simpler, it's easier, safer.
Great, perfect, Martha. It looks like that is the end of the questions. I know from the feedback that we get on Martha's courses that they are so robust. People really enjoy them. So I really, for $99, and you get the free access for a week to this course, take advantage of it. Go try it. See how it fits your trading styles and your needs. Martha, again, thank you as always for coming. We love having you here. Thank you for your time today. I'm going to go ahead and take back the presentation from you and dismiss you, if that's all right.
Yep. Bye, guys. Thanks for taking with me. Bye.
Let's see. Make presenter. And dismiss. Oh, sorry, okay, here we go, maybe. Well, it's not going to let me just, oh, there we go. Okay, sorry about that. Got to have a little technical glitch in there somewhere. Okay. Well, thanks again to Martha for the wonderful presentation. Martha's always great to have in the room. Coming up next is Anne-Marie, but just a few quick things before we get to Anne-Marie. Again, if you want to take advantage of the Metastock Summit Traders Pack, you can go to metastock.com/summit deal, or you could give us a call at 800-882-3040, or metastock.com/sales chat. The Traders Action Pack will get you the Steve Bigalow CPS training and add-on, the GoNoGo Complete, 3 months of RMO ATM, and the training. Anne-Marie's Target Rich Trades, which you're about to see an introduction to, which is a phenomenal product in itself. 3 months of LearnMetastock.com, 2 years of Stocks and Commodities magazine, and the Unleash the Power of Metastock book and video. So there's a lot of value in that Trader's Action Pack. You can also pick and choose different things if you need them. If you have parts of it and you want to get a certain aspect, just contact metastock.com/sales chat, and they can help you get the best deal on whichever product you're interested in. Again, thank you to our sponsor, Stocks and Commodities magazine. Since 1982, they've published over 17,000 trading articles, over 1.2 million subscribers. All registrants today get a free copy of Stocks and Commodities magazine. All you need to do is take advantage of that is to go into metastock.com/traders-summit. You can see that URL at the bottom. Register for that. Take advantage of any of the offers today and get a 5-month subscription. Spend $300 or more and get a complimentary 2-year subscription. So claim your free issue at metastock.com/traders-summit. Finally, again, we are Metastock, the host of the event today. You can scan the markets, test your trading strategies, forecast, real-time alerts, commentary, and signals starting at metastock.com, starting at $59 a month. Go to metastock.com/traders-summit 3-for-1 to take advantage of that offer. Okay, well, let's bring on Anne-Marie. I always enjoy having Anne-Marie in the room. Her take on the markets is always so good. I always take notes, make sure I'm kind of following along with what she's saying, looking at what she's kind of looking at. She's got such an interesting take on the market, and I love the name of her product, Target Rich Trades. I mean, think about the concept of that, of identifying trades that are target rich, ready to pop, ready to give you that signal. I'm excited for another session with you, Anne-Marie. You there?
I'm glad to be here. Yeah.
All right.
To be here, Kelly. I apologize for not having a live video. We had, of course, a very big hurricane here last October, and you might also be hearing some banging in the background. We actually just got the guy in to start doing the floors because they've been so backed up for thousands and thousands and thousands of homes. So on top of that, the internet gets a little wonky, and normally I have live video going, but it's been disconnecting me all day, and I don't want that to happen to us.
Oh, yeah. Well, I will say never turn away a contractor when they're ready to come work.
Exactly. Exactly. All right. So
you should have control.
Thank you. I want to say to you and the Metastock team, congratulations for, the decades and decades of hard work that always puts you guys on the top of customer service and best customer service. I wanted to actually start with the Refinitiv platform and then get into Metastock, because Refinitiv gives us all the information on the back end to fill up our Metastock space. And I want to tell you that it's a marvelous place to go, especially in the height of earnings, because this is the flow that we're going to talk about. This is a very big week. I'm excited to get to be here with you guys today, because this week, 42% of all the S&P will report in 1 week. So it's going to be incredibly news heavy. And we're also with a lot of other details, starting with a Fed meeting next week and just a bunch of things going on. And you're always going to get that information using your Refinitiv platform and bringing you right up to speed with everything. And so what I have here are the companies to watch this week. And they were talking about, this was over the weekend where the Bed Bath & Beyond decided they were going to file Chapter 11. I think that's protection from creditors. And 13 maybe. I don't know which one. Coke reported today, really big, did very well, and the markets are buoyed by that. So one of my things to do, what I like to do, is use the earnings week ahead tab And that gives me a really nice understanding of, oopsie, let's go to.
Hey, Anne Marie, I am not. I'm seeing your desktop, but I'm not seeing anything else. I'm just seeing your background is all I'm seeing.
Huh. Click. People can see your screen.
Do you have two monitors?
I do. Let me see.
I bet it's showing the other
monitor.
monitor is what's going on.
Yeah. Okay. Let's see what screen it's showing. Nope. There we go. Ta-da. Sorry about that.
There we go. Got it.
Okay. Yeah. Thank you so much. I apologize about that. So here we've got, let's go to our earnings roundup. We've got, this is a favorite page of mine. It just helps me with what's going to be happening as motion comes into the following week. And we've got Coke that just reported, but everybody is looking at Meta, Google, Microsoft, and Apple, because those are the ones that have been buoying up the market. So that's going to be super, super important. So the first thing that I want us to take a peek at once we get our earnings diary in play is the broad market. Now, forgive me, Kelly, I normally look at things very specifically, but do you have the ticker for the S&P 500? What is that? INX?
Yeah, .inx is an easy one to pull up. Yeah.
Oopsie. It's not
and maybe you don't have the exchange for that one.
I might not. So that's okay.
So probably just SPY would probably be the.
Yeah. So I have that certainly. Let's tab that. We'll look at the SPY. The SPY's in a super interesting place. And of course, this is the absolutely, there's no way that I could have put this vision of what I wanted this software to be with anyone else besides the team at Metastock. And I can say that definitively because I've tried and nobody does it as good as you guys do. And the team that you have there that is so bright and so willing to step into my brain space and pull all the pieces that I have out. So what I'm looking at right now is SPY, and I want you to realize there are a couple of very big things happening right now. This is our volume. We're tracking volume on the bottom here, and it's very important to notice that volume, even as prices go up, volume is getting very quiet. So the question might be why? Why is it that we are holding a lower level of volume, and what might we need to extrapolate about that? And so here's the big thing. When charts and markets stop having a big group of participants, what that ends up meaning is big money and traders who are not in the fray of moving in and out of trades intraday, they are sitting by the sidelines and they're waiting for a catalyst of motion. So what might that catalyst be? It could be something as simple as, what the tech earnings are, but it could also be something a little bit more overall important in terms of what interest rates might be, what the Fed might say next week about another interest rate rise, which we think is going to be another 25 basis points or a quarter point relative to the most of us. And those things all together put us in a space that is a wait state. Now, we listened to Martha just a little bit ago. I got to hear quite a bit of what she was talking about. And my take on that is entirely similar in the sense that, hey, listen, there's a lot more skill that's required for intraday trading. But the wonderful thing is that having a piece of software like Metastock and the opportunity to have all those add-ons plus all of the data for that absolutely fantastic price gives you one more resource that you can use with a place that, well, you simply can trade their money instead of your own. And that really is moving a lot more to the fore as things move ahead. And certainly we'll be talking about that, particularly as we get into our next summit. So stay tuned there in terms of saying, hey, how can I start with less capital and use the tools that I'm getting from Metastock and my platforms to really go to the next level. All right, so from there, what I want you to pay attention to is that this volume tapering off tells you that traders are waiting. So let's say you've got a very sensitive system and maybe you're looking at it on, this system is really quite sensitive. And so let me move it to something like a 30-minute. You're going to see it's going to have a lot of signals because it's a very fast time frame. Let's widen this out. Right, so sensitivity here is really wide. And so what we want to do is, oh my heavens, operator error, of course. What we want to do right, are we sitting here? It's giving me March. What we want to do in these kinds of spaces is really pay attention to the strength or power of a signal. And when you've got a very noisy market, you're going to, wow, these are wicks that shouldn't be here. So sometimes we have to move them out. Nope. That won't do it.
I think you might have pre and post market data on, and that's what's showing there.
Oh, giving it a little bit of wonkiness there.
Yeah, pre and post market data is kind of wonky. That's kind of the way it rolls sometimes.
All right, so how do I take that off? Because well, you know what? I need it for the ES. So let me just get back to the thing that I trade the most, which is the future space, and we'll talk about that instead. It'll give us all of the motion. So let's say in a market like this that's extremely sideways, we decide we're going to look and say, hey, I'm going to trade intraday, and I'm looking for my signals to do that. What you'll notice in this kind of formation, you're going to notice that you're going to get a lot of signals back and forth. And so the thought process when you're staring down information that is giving you a level of sensitivity that says, hey, listen, I'm going to go long off of these, and then my short setups are going to move on these edges into frontline support and back up, you're not going to have a really good time with that, right? And it's really because at the end of the day, what you want to see is how big traders are positioning. So if you look at a sideways day and you say to yourself, you know, I really wish the price action was giving me better signals, going to smaller time frames is not what you want to do. You want to stay on those bigger time frames, and indeed, you want to look where support floors hold and where resistance floors hold, and realize that this sideways motion is something that is easily identifiable, and it's a place you can trade. So if you're staring those sorts of things down and you're saying at this point of the day, what do I want to look at to tell me where the market's going? Well, the first thing we're going to assume is that the market is going to tell us something in the near term. So what might those somethings be based on the overall formations? And so here in Target Rich Trades, I've got it on a 2-day cycle because the 1-day cycle is too noisy because there are too many wicks. And so what we want to talk about strengthening is this notion of understanding intraday volatility and then looking at broadline volatility in itself. So just for a moment, we're going to slip over to Kelly's screens, and we're going to look at three instruments. First thing we're going to look at is the VIX, the VIX. Then we'll look at the VVIX, and then we'll look at a brand new product, the CBOE, just released today, and that's the VIX1D, and it shows you intraday volatility. So let me give that back to you, and let's see. Yeah.
I'm assuming you want to start with the VIX.
Yes, absolutely. And you know what? The best thing here would be to take all of the, actually, you know what? How about putting that on a 2-day cycle for me, please? Thank you so much, Kelly.
Of course.
Okay, so a lot of people are saying, hey, the VIX is very low. We really need to buy the VIX when the VIX is very low. So this is a misnomer. Martha just said something about it just a little bit ago. She said, wow, you know, there's a lot of misinformation or disinformation sitting in this realm of market trading that we sit in. And fact of the matter is, if you think something big is going to happen, buying VIX calls, which is essentially insurance, when the VIX is going down, notice it's underneath both of these averages. And 2 days ago, we had a short trigger set up, and the bounce into the edge of that short trigger gave us the long coming in today. And you could see the VIX continues to fade. So the one thing I want you to throw out of your head is, I don't want to buy the VIX because it's low. What you really want to do is buy the VIX when it's high and stay with it until it breaks down. And so what is that number? That number is about 32 to 35. That's the number. Put it on your list and say, hey, give me an alert when that gets up above that 32 to 35 area. It's time to short, okay? And so you're going to get it up, it's time to go long if it stays out of the break. Now notice, all the way over here to the left, it broke out and then collapsed. But what this is telling you is if it breaks out and it doesn't immediately continue to the north, you get out of your trade and you don't hang on for the wing and the prayer. It absolutely, whoops, sorry about that. It absolutely will not give you any dividends if it breaks up over 32 and it does not keep running. So you can easily go, I'm out. All right. Next thing we want to look at is the VVIX. And so what the VVIX is the volatility of volatility. Now, this is something else people are talking about on the streams, right? You see a lot of information out there, and the VVIX, this is not a vehicle that you can trade easily. There are instruments that are proxy, but not so much here. What we want to look for is, does this continually bounce? And if it gets up over 100 and it keeps going, you stay short whatever is going short in the market, and then you can turn right around as soon as it loses 100. And so look at what happened today, as a matter of fact. It's rejecting that 100 mark. So everything is really telling us, listen, this is not a place to go buy protection for your portfolio. That being said, over the next couple of days, you're going to see earnings for Apple, Meta, Google, Microsoft, the whole slurry of them. And if they don't tell us that earnings growth is going to be something to look forward to even after they've cut back on all that staff, the market is going to fade, but there are buyers underneath. So I'm going to take the screen back, if I may. Thank you. Is it still showing the right screen? Yes. Okay, great. So here's the main premise of what I want to share with you. One, I love the fact that those of you that are here are absolutely tuned in to what it is that's going on, but we are getting ready for some sort of large move. So the question might be, what move might this be, and how can I confirm that this is what I'm looking for? So for the 2 days, I have this on a 2-day cycle for target rich trades. You can see the setups are much less and go for much longer, right? So they go for days and days and days. Here was a short setup coming down into the place. It comes up over here as soon as it breaks down. And now here we had the buy setup. The buy zone has been sitting here since 323, and it's finally saying, hey, take a little profit. Now, anytime you go into old resistance, that's this right here, you're going to see profit taking events. And so as it pulls back, you want to think to yourself, where does this need to hold if I want to buy SPY or I want to buy the Qs? And that's going to be no matter what system you use, GoNoGo, mine. Wow, what was the other special one that we were being offered in the space? I cannot remember. Steve Bigelow's? Yes. Any of those things that are showing you support structures, wait for them to come into the support structure, test it, and then move forward. That just is simply what's necessary in these price formations. Why? Because we're making higher lows. Now, we're not doing very well pressing to higher highs, but it's important to note that if you're looking at the chart, your mind should always go to, what is everybody doing? And here's what I notice. 4,200 in the E-minis. I trade the futures every day. And so 4,200 is a threshold where people cannot seem to get over and stay over. The last time we were there was sometime at the 1st of February. We tried it last week. We couldn't break 4,200. And now we are sitting down in this space where we gapped down, but we are above the open. So the traders are clearly telling us, listen, if you come back into this zone, anywhere at the 4,100 area, it's a long, but you better not hold it and go off to the beach. It's telling you there are sellers sitting above you. And so the deep dips remain the buying zones, but as soon as you lose the floor of this area right here, and that's the 4101, it tells you you have to step to the side and wait for price action to recover if you're long. Now, is it worth it to go, hey, I'm going to go short? Not really, in my mind. My mind says, wait a second. Let's take a look at the last 4 weeks. I have low, high, higher low, higher high, higher low, higher high. Definition of trend by Charles Dow, a series of higher lows and higher highs. We've got 3 weeks of motion. Now today, in the pre-market, we gapped a little bit below that area, so it does cause concern, but it is still telling me that buyers are looking at the pullbacks, and every single formation you look at, you want to make sure that you say, all right, can I see my current candle and then 2 candles to the left? I'm going to try and retrace with reference to the 2 candles to the left almost exclusively with my price action. And so notice, and we can look at any chart you want, you're going to see this kind of behavior. Old resistance equals new support. New support is not getting broken. And if it gets broken, it immediately recovers. So that's what you're looking for in these formations. Now we have tech reporting, and so let's take a peek at the cues to see what the cues look like in terms of relative strength. All right, so here we go. Come along, Fred. All right, so notice the difference. Okay, here's a 2-day chart for these guys. Everything's triggering short action here. So if I'm thinking about tech reporting this week, and we know from our Refinitiv chart that big tech profit growth over the last 8 quarters, take a look, Apple, lower than the last quarter, right? Amazon, higher than the last quarter, but you know, still terrible because Amazon works on volume, not gross margins. Google continually trending down, all of those EU things in trouble. Microsoft really holding steady, and then Meta also having to say, hey, maybe this, you know, AI thing isn't ready for prime time just yet. This kind of information says, you know, people are really not pricing in anything gloomy from tech. So let's say we're looking at this price action. We go, well, you know, people aren't really being gloomy about that. Maybe I think that this chart is going to be good for long, right? Here's what it tells you. From this formation here, it tells you you've got to get up and over. Come on, Fred. There we go. You got to get up over 323 or so to get yourself in line with what this chart is saying as the breach of resistance. What could happen, folks, is the following. Remember, we have a lot of people who are very concerned about missing a big run-up, a lot of them, because they missed the run-up in 2021, they missed the rollover in 22, so everybody got smashed. That's why gross tax receipts are down from the Internal Revenue and the Treasury Department. It says they're down like 30%, and that's capital gains tax. So everybody had these losses. And so they're thinking to themselves, I don't want to miss out on a brand new run to the top. And so they're sitting here waiting. So my supposition is the following. The first thing that traders are going to try and do, if somebody comes in and it is terrible, the market's going to retrace and come down into, guess what, which is what I absolutely love about this system. See the last arrow right here? It's going to come in maybe at the 302 to say, what's this resistance number? $309. That's the region that we're going to look for price action to come in, and the traders go, you know what? I'm going to try and take the long. And if it bounces, it's going to be in good shape. Now, for those of us that trade options, we could say, hey, I want to take a butterfly, put butterfly, I'm going to charge a nickel. That's a whole other story. But what I'm saying is it's not unreasonable to assume that buyers are going to come in as this chart pops into support. So when you're thinking about volatility like this, you see that the VIX itself is low. You see that the VVIX is rejecting resistance. What the CBOE, which is the Chicago Board Options Exchange, they've given us another tool that tells us about intraday volatility and daily volatility, because the VIX is an implied 30-day volatility event. And so I'm going to ask our dear host to put us back into the VIX 1 day. If I'll give that back to you, sir. Thank you. VIX 1D. Now this one just started trading today.
I have it on the 2 days. Is this not what you were after?
Oh no, that's perfect. Oh, that's perfect. Except that, oh, this one just went live today.
So this isn't what we're looking for then.
But no, it says CBOE 1 day. My thought is, I'm wondering if they've been tracking it and then releasing it just today.
Very possible.
Yeah, so let's look at a weekly on this one down here. Okay, so wow, again, this is showing a breakdown. So it's really telling us that right now, people are buying the floors and selling the ceilings. So as we move forward, getting more and more data in terms of this CBOE 1 day vol, it's going to start showing us much more interesting information in the grand scheme of things, in my mind, anyway. So right this minute, it's really affirming, hey, you don't want to really buy any puts here, because the second that the market dips, people are going to start buying again. So this is how you can look at a broad market and go, wow, do I need to have protection on? And the answer is definitively no. Now, the problem is sometimes volatility happens all at once. But the great news is, even if we get up and we go, holy cow, look at what just happened, because there are so many dip buyers, the market's in good shape. So let me tell you why there's so many dip buyers. I'm going to take this back again, if I may. And I will, whoops, we don't want to go live there. Let's see. Aha, there we go. All right. If we take a look at, let's go here. If we take a look at something like this, which is where the small caps are sitting, the small caps are sitting on a fade that's right down at the baseline of support. And so when we realize that, oh, wait, do you happen to have, I think Refinitiv does this. Let me go here one time. Let's look for, where's my, yes. Traders, yes. Only for, okay, so here's something very interesting, of course, and this is on the Refinitiv platform. And we have, we don't want to use food. Let's look at, these are all softs, and softs have been doing very well. No, I was just looking at those softs. All right, so not really giving us what I want to see here. In
What are you looking for?
I'm actually looking for the commitment of traders for the futures, the forward futures, to see what is net long or net short.
Go up to the top where it says grains, and on the down arrow.
Oh, of course.
See there, then you should be able to switch to what you're looking for there. I think if you go to summary, I think it takes you back to the main page.
Ag
Oh, no.
grain, softs. Yeah, this is just giving me the, I don't remember where I found those future summaries. Food and ag. Yeah, in any case, I know it's sitting in here. I just can't remember where I saw it last. So the commitment of traders tells us that traders are net short the entire market. And so being net short the market is telling us the following. If traders are net short and the market drifts downward, the first thing they're going to do is buy to cover, okay? And if they buy to cover, that means that their price action events are going to turn the floors into buying opportunities, okay? And so this is happening a lot in the broad market right now because a lot of big money traders think that the market is going to roll over. The problem is if we get in front of a trade, how many times have we gotten in front of a trade? We're thinking to ourselves, I know this is going to break out. I know this is going to break out. I know this is going to break out. And it actually breaks down. Then you're running for cover. And the same, this happens to us all the time. I know anybody who's been trading who wants to get in front of a move and how to go against them. This is exactly what is happening with the big traders. They are getting in for this big short. Every time it comes in to a support floor, they have to buy. And as soon as they start buying to cover, it moves right back up into the resistance zone. So every day they come in, they try a brand new short. They can't break the support. They have to turn around and buy it back up. And that really is what we're seeing day after day after day. So that being said, it's better to wait for these earnings to come through, let them fade down into support, and then we'll watch that support hold, or we'll watch it break. So one of the big ones that I am looking at that's coming out, we have two of them that are coming out, Boeing, and then I think Boeing might be day after tomorrow. I don't know. Is it BA.O? So bad at these.
No, it's just BA.
Yeah, okay. Yeah, it's Amazon.O, right?
Yeah.
Yeah, okay. All right, so let's take a look at Boeing. Take a look at this. These guys are getting ready to report shortly, I think a couple of days. And we can see that Boeing essentially has been in a trend since January. It's been in a square box. So here's the thing. If you're looking at Boeing and you're thinking, man, I'd really love to buy this because if we're going to end up spending a lot more money in the defensive sector because we've got saber rattling across the world, I'd love to buy that. You don't want to buy it before earnings because it's very likely that this chart is going to do some fading. Very likely. The great thing is, because it's sitting in this sideways formation, you can actually wait for it to come back into the breakout area and then go with it because the market just does not have a lot of oomph behind it. And so the key thing about making your portfolio balances head higher is really completely due to you saying, can I be patient and wait for my setup to actually trigger? And so if we're looking at something like this, look at how noisy this is. You see short setup, sell zone, weak setup. I mean, it's telling us it's time to short, but it's very choppy. Anytime it's choppy, zoom out. And when you zoom out, you're going to get much more information about the range of a position. So you can see, oh, it came in here. So If it triggers a buy up here, I know everybody's been selling. My moving average is flat. It's much better to wait to come down here for price action to do what it's supposed to. So using the power of price, you actually get to achieve a lot more with your signals, because your signals say, wait, heads up. And then you can use that inductive reasoning where you take some stuff from outside with all your learning and you go, you know what? I'm going to buy the floor here. I'm going to wait for it to come into my level. And 8 times out of 10, it will do just that. It will absolutely do just that. Okay, so what I want to do, Kelly, is sort of back it out here. And if anybody's got any questions, any charts they want to look up, analysis, anything that you want to focus on, realize this. The market is, I think it's in a tough space right now. I think there are a lot of traders who believe that we're going down, a lot of traders who believe that we're going up, a lot of traders who have no idea what's happening, and a lot of traders who are saying, listen, I'm just going to trade the range that I see in front of me each day. If you have to choose which one of those guys that you are, and you could be right if you're in any one of those camps, just so long as you wait on the pattern to tell you what's going on in the chart, and don't be afraid to wait for price to come to you so that risk is always properly managed.
Well, let's see. So I think I just put in there to go ahead and put symbol requests into the chat box if there are certain things that people would like to look at. In the meantime, I do have a question for you. So,
of course.
Obviously, one of the big things going on right now is regional banks and some of the issues with regional banks. And this comes up a lot. So I was wondering what your take is on things like, FRC, Wall, Zion, things like that, and how the regional banks appear to you based off your technicals and what you're looking at.
Okay, so the main problem that I see with regional banks, and can I do .KRE, or will that, let me look for it. That's I think that's an ETF kind of thing, KRE. Yeah, here we go. So this is the regional banks coming up here. The big problem that regional banks have right now, besides this thing about, credit risk, right? They've got credit risk associated with, what would we say, commercial real estate. And the big thing for them is outflows. So not to get super wonky, but here's what's happening. In a macro space, because of what happened with Signature Bank, everybody has now said, oh my gosh, you mean I could put my money in a money market and make 4% instead of having it at 0 in Truist or Washington Mutual or whomever? And the answer is yes. And so what this is causing is an outflow in these regional banks. So the goal and anchor of the regional bank is to lend money. That's the goal of the regional bank. The big monolith, too big to fail guys, they're making money doing deals, having investment houses, doing all kinds of things that these regional banks who really support the anchor of small business, that's what they're worried about. So the only way a bank gets to lend money is if it has money on loan, quotation marks, where it'll take your money that you've used to deposit and lend it out so that somebody can build a business, buy a new house, XYZ. Now, when somebody moves their money to a money market, it removes itself from the groups of cash that you can use to lend money out. So there is, I believe, a big bit of trouble brewing with these regional banks. And so although it looks like they're at these very nice spaces where you could go, wow, you know what, if I bought XYZ, wait, give me one of them that you said. Let's go to.
Let's see, a couple of them were WAL or FRC.
FRC, that's First Republic and Washington.
Yeah.
Something. Okay.
Washington Alliance, I think, is something
Yeah.
like that. Western Alliance, there we go.
Washington Alliance put out something the other day that made a few people fairly happy about X, Y, or Z. But my gut is this, Kelly. There's another storm brewing for these guys. And it's because of the way they run business, where they have to run business. Their backbone is lending money. And if they don't have enough deposits, they can't lend any money. And so what they can do is take their long-term collateral treasuries that they might hold, give it over to the Fed, and the Fed goes, hey, listen, we'll lend you cash. And then with that cash, you can go lend money, except for the fact that these regional banks don't have a ton of those treasuries on their books because they're not used to going to the Fed windows asking for that kind of stuff. So I know that's really macro, but I think it's very, very important. Here's my suspicion on this Western Alliance. This bounce is going to release all the trapped buyers that came in at these lower edges or came in at these old support zones and said, don't worry, we're going to be fine. And they bought, and now they're all trapped. And so that's the first thing that's going to happen with these guys. So my strategy, if I were to invest in these folks and looking at how much they've come off the floor, which is pretty significant, we realize that one, over here to the left, we've got a ton of heavy congestion. And so this is where everybody's thinking, hey, I better hold. So if you're saying to yourself, you know, on a down day when tech has come in and brought the market down really hard, this Western Alliance might be a fair buy somewhere around the last buy zone here, right? Here's the buy setup. The buy zone is right here, but because of the way my system works, if you're looking at the buy zone and it triggers where an old sell zone is, it absolutely means that you've got trapped buyers here. So there are trapped buyers here. If it moves up over the edge, it's going to come all the way back down. So my suspicion is all of this area back here in Q3 of 2020, where it had a dreadful time, just put an alert there, wait for it to come into you, because it likely will. And if it doesn't go, then you arrest your stop using this as the floor, right here, the low edge at 27. You can buy at that 30 area, so you're looking at 10% on the risk event, but then it easily, if it holds that area, it could easily come back into the 40. But this one looks bad. I mean, it really does. To me, it does not look good at all. It does not look like it's going to crash. Plus, I know how these guys are making money, and unless the federal government comes in and says, hey, we're going to do something for you, it's going to be a rough road for these regionals. It is. They are being cannibalized by the giants. Unfortunately, it's how it goes. Now, for this one, you could look at this one and say, well, wait a second. I mean, I've got something that says, I've got something that looks like it's rounded, but again, look at the slope. Look at what happened when everybody was buying and how First Republic still could not hold. See, this right here is investors having no confidence. This is no confidence in the chart. All that's sitting here are bottom pickers. And what's going to happen, wow, I can feel the evil eyes from here. What's going to happen is as it bounces into these 21 regions, all the trapped buyers are going to go, you know what, I'm done. I'm done. And regrettably, this is what's happening with all these regionals because their deposit outflows are gigantic right now. The macro data on what's going to happen to the regional banks are terrible, and Janet Yellen does not care. She really doesn't. She's like, well, we need less banks anyway. But see, regional banks, they're what make small businesses grow. And they are absolutely being hamstrung by what's going on with these outflows from interest rates.
Well, you know, one of the other things, actually, I learned something about banks I did not know there during that brief discussion. So thank you. See, I told you when we started that I always keep my notepad out when Anne Marie talks because I always learn something and I always pick up something new. I love it. So one of the other things we talked about in the last session that you were in was UNG and natural gas. Yeah. And I wonder what if your take on that has changed since the last time. Last time it was stay away.
Yeah. Okay, so, and I'm super glad I said stay away because it's still a train wreck. The problem, golly, the problem with nat gas is twofold. One, we've begun to flare it off as oil gets its traction, right? And so we have Brent crude, we have WTI, and nat gas is actually a byproduct during the process of pulling out oil from the ground, unless you're doing fracking. The problem is we have an administration that has, and really a societal movement that has poo-pooed anything that said, hey, listen, let's work with fossil fuels. So when nat gas comes out of the ground, once you start a fracking environment, the first few months to maybe the first 18 months, you're going to get the most that area is ever going to give you. And ever since from that perspective, it's going to less and less and less and less. So the backstory, if you're thinking to yourself, oh, okay, eventually this is going to lift. But right now, because of the US law about not spending money in fossil fuels, there are no new nat gas drillings at the present time. Everybody's got their old ones and they're almost completely finished flaring. On the flip side, crude, which comes out of the ground, it's starting to build traction. And so instead of looking for nat gas, which we have to use here in general, because it's the only way you can transport it is liquefied, and it doesn't make sense to send it overseas where they really might need it. It's way too cost prohibitive. Maybe one of these days, but definitely not now. So now we're flaring off all of this nat gas. We're flaring it off. And so we still have this surplus coming from the flare off, and then a lack of any new development coming from all of the old ones that are simply producing less and less. So the real question is, when's this chart going to break out and stay out? And I don't think that's going to be until it's above 10. So you might say, well, holy cow, that's a 50% move almost. So can't I trade it here? And the answer is, of course you can. So if you were saying to yourself, I believe that I want to trade nat gas because I'm thinking it's at the bottom. What we have to look at is it basing? And so basing means setting a floor and holding it. So if we look at this 2-day space, we really have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have about 20 days of basing. Notice the last time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, we had 30 days of basing here, and then we fell and made a brand new floor. So right now, we still have about 6 more days of basing before that lifts. So if you're taking a gamble and you're saying, you know what, I know eventually it's going to go up. It just is. Listen, that's a fact. It's going to go up. The question is, can you get it somewhere near 650? And can you hold on to it long enough for it to move forward? Or do you say, hey, if it comes into 650, I'm going to buy it. But if it loses 6, I'm done. That's a nice, clean way to do it. Once it recovers that area, you can try it again, just so long as it does make a significant newer floor. A lot of people think it's going to go to 4 before it starts rolling back up. I'm not really one of those people, but you know, you never know. You really never know. We could have some kind of geopolitical distortion and it could shock things around, but that is my supposition about nat gas. It is still very dangerous to go long. You're sitting at a nice floor, but we were also sitting at a fairly nice floor here and it still collapsed. So, I mean, it's worth a nibble at this point, in my mind. Just make sure that you don't hang on to it underneath this 410 low, which is 630, right? So you say, hey, it's 715 right now. Let me put something in. Let's see if it'll cover at 7. And then here's the first place it's going to go and then sell off, because everybody here was like, woohoo, we're basing. And they're looking at these levels and it gets to 9 and it begins to sell off, right? So the number up there is 938, begins to sell off. So my thought is, hey, listen, once it gets up there, take some profit because you're going to run into sellers. And if it comes back in around your 7 and it starts holding there, then you're going to add in and it's going to start running and it'll run right back up. It's coming, folks, but it's not quite yet, especially if these recession woes that we're hearing come into the space.
Let's see, it looks like we have one more question that we have time for. This is from Andrew. He says, thank you, Anne-Marie. I know you've advised against gallivanting headlong into a gold rush until it's had a bit of a breather. Wondering if you have any thoughts on a potential long-term support resistance area if the bull run were to be sustained at a reasonable pace in the coming months.
Okay, so that depends on what instrument that you're using.
And then he said,
yes.
he said gold futures and long-term physical holder.
Oh, great. Okay, so long-term physical, listen, long-term physical is great, but realize that's your doomsday event, right? Your long-term physical gold, I mean, you're not going to be able to take it to the market and buy a chicken, okay? You can't. Nobody's going to do that. But if you're trading the futures, I think we're in the M contract right now here for gold. My suspicion is we're going to come in and we're going to fade right around the 1900 area. My thought is this gap fill. Yeah. This is my suspicion. I believe the dollar's going to bounce a little bit. That dollar short trade is way too big, way too heavy. But I do believe that this level around 1950 is where people are going to start inching back in. My thought is trade the future cycle. The only way physical gold ends up paying for you is if our government collapses. Then you're going to have to go take that gold and go, hey, let me see if I can go buy myself some eggs and a bushel of corn. So we really don't want that to happen. That being said, watching these cycles and trading support to resistance is going to be a good idea. And right now, gold is very overheated, but people are still going to keep buying, particularly the futures market. And then, you know, spot silver also. That really is the one a lot of people are spending more time in there. The problem is, you know, if you're in the futures market and you go, I'll take delivery, people aren't going to, there's not enough silver in all of the places that they keep silver ingots to actually deliver on the speculative buying for silver. That's great, except if you want the silver, that's very bad. So my thought is let it come in. It's going to take a couple of weeks, maybe even more. You know, I think the Fed speak next week is going to matter a lot. It's going to matter a lot.
Anne-Marie, what are some good ways people can get hold of you? I know that Twitter is a good place that you're out there a lot.
Yeah, I'm there on Twitter a lot. You can hit me up on Twitter, Stocktwits. Listen, I love engaging with traders. I love talking about markets. I love talking about charts. And I do it freely and very often. So hit me up there, show off a Metastock chart, give Metastock some love because they're totally worth it. And, you know, let's let some more people know about how great this platform is. So hit me up on there on Twitter, Stocktwits, and, you know, let's start running through some of these on a more active space. I love engaging with these price patterns. They're phenomenal, and I love having my feet to the fire. So all of that's fantastic.
Well, like I've always said, Anne-Marie, I always love listening to you. I always keep my notepad out. I always watch for your tweets and stuff. You are fantastic. We love having you in the room.
Really. It's very kind.
And it's at Anne-Marie Trades, if I remember correctly. Is that right?
Yes, ANNEMARIE Trades. Yep, that's it.
And the website is thetradingbook.com?
It is. It is.
Okay.
Yeah.
Well, make sure to follow Anne-Marie on both of those and get out there. Anne-Marie, thank you so much for coming in today, joining us, sharing your wealth of knowledge. It's always absolutely amazing.
It's my pleasure, Kelly. I absolutely love stock. I love Metastock. I really do. I love all aspects of it. It's so robust, so many forms. And you know what? Anytime I need help, I can pick up that phone and I've got tech support right there. And they walk me through everything. And I cannot tell you how much that is worth to me. It's worth everything. I really do appreciate it. Love you guys.
You're awesome, Anne-Marie. Thank you. Thank you so much again. I am going to go in here and make myself the presenter so I can tell people how to get your awesome add-on here. And then if it's okay, I am actually going to dismiss you just so the room doesn't get shut down accidentally. All right. Okay. Thank you, everybody. Thanks for your questions there. We love having questions. Jacqueline, I'll have you on in just a second here. I just wanted to go through, show everybody a little bit about Anne-Marie's system. You've seen her system here as she goes through and talks about the market. You've seen her setups and her layouts. She does a great job of really defining the market. And we've talked about having a checklist as you go through a trade. And Anne-Marie's system, I was just looking at some charts while we were talking, and you can see with her system, let's go into the commentary, she does a great job in her add-on of a checklist and helping you see what you should be doing with a particular stock or future, whatever it is, as you're trading it, and giving you a full checklist, where to set your stops, where to set your targets, and really understanding where to go. And the great thing about hers is, again, is the scanning. So you can come in here, you can look for long signals. It'll give you a confirmed long, a week buy, recent inflections, and then also short and weak shorts as well. So you can look at all those, scan the market. Here's just a quick report that I ran. So you can look at the buys, you can look at the weak buys, the stops. And what I love here is in the scan, so I can see my close is at 105. It tells me my target. It hasn't confirmed the full trade yet, but if I was in a trade, I could see it. And here's my stop once I enter it. So once I've entered, and then tomorrow, if you were to run the scan and see it, it would give you the target. So it's actually very, very cool that way. So if I re-rank it here, there you can see I'm not in a current buy, but here's my stop and here's my target because I'm in a trade right now. So it's really unique in that way that you can actually manage your portfolio from the Explorer and be able to see what's going on with it. So Anne-Marie's system is normally $499 is a one-time cost, very inexpensive add-on. Here you can get it for $397. If you don't have Metastock, you can get a free trial for it. Of course, you get our white glove installation, our support, our help, all of that with it. You can go to metastock.com/sales chat, or you can go to 800-882-3040, or visit metastock.com/AnneMarieA is a great way to pick that up for that offer. It's also part of the Summit Action Pack. So in the Action Pack, you can get Steve Bigelow's CPS training, the GoNoGo Complete, 3 months of the ATM, the Automated Trend Modules by Rahul, plus his 3-course masterclass, Anne-Marie's Target Rich Trades, which you just saw, which is an awesome package, 3 months of Learn Metastock, 2 years of Stocks and Commodities, and then Unleash the Power of Metastock book and video combo. Usually $5,500, get it for $23.92 here at the Summit. Go to metastock.com/summit deal, 800-882-3040, or visit metastock.com/sales chat. Let's go ahead and bring on Jacqueline. Jacqueline is coming to us from the Mad Hedge Fund Trader. I am excited to hear from Jacqueline. This is her first time in the room with us. And I've got to say, I'm excited. We've never had a Gillaroo come in and talk to us. Jacqueline, are you there? Let's see, I just sent you the request to become the presenter, but I cannot hear you. Can you hear me? Let me try this again. Okay. Jacqueline, it looks like we are not hearing you. Can you hear me?
Can you hear me now?
There we go. Now I can hear you.
Great.
All right. You should have the control request at your desktop.
Mm-hmm. Okay, so Zoom is highlighted, Team Viewer is highlighted. Do you want me to click on Go to Meeting?
Yeah, here, let me take back the control.
Mm-hmm.
And then I'll put it to you again. So what you're going to see is you're actually going to see a pop-up that comes up that says, would you like to share your screen? So you should see that coming up right now.
Okay, open system preferences, correct?
It should just say share my screen is what it should pop up on your screen.
It says grant access to this application.
Oh, yes, do that.
Yeah. Open system preferences.
Okay.
Okay. So can you see my screen?
Not yet, no.
Oh, okay.
Well, let's see, you're in GoToWebinar, correct?
Yes.
Okay, so you should be seeing it. Let me try and send you the request one more time here.
Okay.
Hold on. Let me take it back here. All right, so it's going to send you a pop-up asking you if you would like to share your screen.
So I get GoToWebinar would like to capture this computer's screen.
Okay.
And it says either deny or open system preferences.
Let's see.
It doesn't say share your screen.
Are you on a Mac?
Yes.
Okay. Yeah, so you have to go into your system options there and allow GoToWebinar access in order to be able to do it, is what's going on.
Okay, so highlight that.
So yes, go ahead into the system preferences.
Okay.
And then it should list the apps that you have available. And then you need to find GoToWebinar and then allow.
You may not be able to record the contents of this screen. Reopen. Leave or end webinar.
Oh,
We don't want
yeah,
that.
just close that.
Close. Cancel.
Yeah, cancel. Yeah, we don't want to close the webinar.
Okay, so on the side here, it says show, stop showing screen, change presenter.
Okay, so on the side there, it's saying stop sharing screen or show
Yes,
screen.
it's not highlighted.
Okay, so there should be a view. Here, now that you've allowed it, let me try and take it back and then give it to you again. Here, hold on.
Okay.
All right. Here we go. It's sending you the request again.
Yes, you've been made the presenter. Can you send it again? I think I clicked the wrong button.
Oh,
Sorry.
sure. Nope, no problem. Not a worry at all. Here, let's see. Let me back and then. Okay, here it comes again.
Okay, show my screen. Can you see that?
Nope, not seeing it.
Okay.
Let's see, we have a couple of options. Is everything you're doing in PowerPoint?
Yes, yes.
I wonder if I just have you email me your PowerPoint and then I can just share it and you can tell me when to go through slides, or we can try again, whichever works better for you.
Okay.
Here, let me try and take it back again and then give it to you again and see if we can get it to work here. Okay, you ready? Here it comes again.
Mm-hmm.
Okay, that should be popping up on your screen.
It's got show my screen.
Yep, click on show my screen.
Okay. When I click on my screen, nothing happens.
Okay, let's see. Let me try it this way.
Oh, wait on. Show my screen. Is that better?
Oh, there we go. So now
if I bring my, can you see that?
Yes. So now I'm seeing it in the in the view, the presenter view. So if you hit slideshow and begin slideshow, we should see it. Start. Yep.
That
Yep.
it?
There you got it. Way to go.
Oh, fantastic.
All right. I'll go ahead and get out of your way and let you get started.
Okay. Thank you. Okay. Thank you, Kelly, for sorting all that out for me. Great help. Hello, everybody, and thank you for joining me today, and thank you for giving up your time to listen to my presentation. There've been some great speakers. I've really learnt a lot this morning. And as Kelly said, it's my first time speaking at this event. So without further ado, let's jump right in and crack on with the show. We're going to be talking about crawling out of the crisis, and that crisis, of course, was all about the regional banks. So I want you to take out, I want you to take out a pen and paper and take notes because I want to take you away from your 9-to-5 grind and into a different lifestyle. Okay, so why listen to me? Sorry, this is going to jump around. I've got 40 years experience in the markets, 10 of those with the Mad Hedge Fund Trader. I have an MBA qualification. I've run a self-managed super fund for 10 years, 30 years experience ESL teaching, which means I'm very experienced at imparting knowledge, 10 years as an office administrator at a hospital in Australia, 1 year as a Jillaroo, which you probably call a cowgirl in the US, in the Australian outback, and 1 year baking treats for a coffee shop in Herne Bay in Kent. Okay, you probably think, well, what's that got to do with the markets? It just means when you're trading, you've got something awesome to eat. Okay, so through my time of trading with the Mad Hedge Fund Trader, it's completely changed my life and enabled me to travel all over the world and bring my son with me. And this, I mean, this could be you too. I mean, if you just take the step and try it, it will absolutely change your life. So on the left is me here hiking in Switzerland while my son attended a French language camp. In the middle is my son and I in the Solomon Islands, and I wanted to particularly show him how the other half lives and without a restroom in their home. On the right is myself beside the Thames, having a spot of lunch and checking my trades. So a little bit about me. I grew up in Toowoomba, Queensland, Australia, and Toowoomba is the largest inland city, about 2 hours drive from the golden beaches of the state. It holds country charm and is known as the Garden City, with many parks and gardens and an annual Carnival Flower Spring event, which is held in September. I mean, at the bottom here is the house I grew up in. And on the left are two of my gorgeous pets who I grew up with, the dachshund Lucy and my beautiful cat Pepper. And the top picture shows the beautiful range view down towards the Brisbane Valley. My childhood was spent about being active. I was on a swimming team and a tennis team, and I also did ballet. I did secretarial courses after leaving school and then was sent to the outback as a Jillaroo or cowgirl, as you called it in the US. My mother was always trying to push me out of my comfort zone. So apart from riding horses, mustering cattle, fencing, assisting cook feed the jackaroos, I also helped 2 children with their schoolwork. Windora was a 1-shop, 2-pub, 2-tennis court town. For fun, we watched movies that were screened against the house and played polo matches on the weekend and enjoyed barbecues. With no technology here, but it was really good fun. So I came back to the city and got a job at the Toowoomba Hospital as an administration officer in the psychiatric and alcohol and drug unit. And actually what I saw there was enough to turn me off alcohol for good. I started studying for my Bachelor of Arts as a mature age student while working, and I did this for the next 10 years and ended my study with an MBA. My mother introduced me to the stock market when I was in my teens. Her rule was very simple: buy shares and never sell them. Never ever sell your capital. Only use what that capital makes. So that's what I did. I started buying shares in my early 20s, and I held my stocks through every market downturn we have had. Yes, even in the 08 downturn. So at market bottoms, I just bought more. Now I advise others how to do this. And I find one of the biggest obstacles we face is to successful trading is the psychology, the buy low, sell high theme. We are all hardwired to do the opposite. Fear and greed take over. So I'm going to ask you, if someone told you when to buy and when to sell, would that make a difference? So now I spend my days trading, finding trades on the beach, in the garden, traveling, or enjoying time with my son, Alex. I love helping people gain new skills, and it is a great satisfaction taking someone from a $3,000 or $5,000 account to a $50,000 account. On the right is a picture of my son, who was 8 years old, and that's his first day starting at Ludgrove at the boarding school in the UK, where he was for 5 years. And actually, I would never have been able to send him there if I hadn't made the profits I had from the Mad Hedge Fund Trader. This is the beautiful school he attended, Ludgrove, for 5 years. And these are the fees, $9,500 per term, and there were 3 terms. This is the Trade Alert performance for the Mad Hedge Fund Trader. 33 out of 36 trade alerts profitable. In March, we made 20% plus, and in April, we are on pace for at least a 10% average. This is the Trade Alert performance for Mad Hedge Fund Trader, 103.2% trailing 1 year return. And this is our average annualized return, 48.26%. So to the markets. 5, the inflation rate underlines the long-term bull case for stocks. The inflation rate should be down to 3 or 4% by the end of the year. The expectation of that will trigger a monster rally in stocks by year end. Stock markets have done a big pull forward performance, bringing normally strong April performance into the January-March quarter. April is usually the best month of the year. This year, we may not get it because we've already seen the performance with the S&P 500 here at 4,100. We're now at the top end of a high-risk range with asset classes diverging sharply in outlooks. Bonds, foreign currencies, precious metals, and energy are now discounting a recession we may not have happen. By the way, while stocks at these prices are discounting a soft landing and no recession, but I wouldn't guarantee that we're going to have a soft landing. Portfolio managers are scratching their heads, are totally confused, as the normal cues they look at are contradictory. The open production cut halted oil price meltdown. Gold and silver are aiming for new all-time highs, especially gold on the prospect of lower rates. The US dollar falls on recession prospect and will continue falling for the short to medium term. Looking for the S&P 500 to be at 4,800 by year end. Bonds will be a top performer asset of the class, thanks to soon to be falling interest rates. VIX under $20, which equals no trade. Cash is king. There's nothing to do on the new position front. So with a bit of spare time, I love to frequent fabric shops and wonderful tea rooms, which I did in the UK while Alex was at school. So on the left, we have a fabric shop in Whitstable, and on the right, we have 2 great sewing shops and tea rooms in Canterbury. Stocks are detached. We're looking for the first half, a strong second half to take us to S&P 500 4,800 by year end. Stocks will start to discount collapsing interest rates from this summer. Boeing ramps 737 production max to 37 planes a month due to demand, and in First quarter, they topped Airbus and sales for the first time in 4 years. The 737 MAX disaster is finally behind us. Chip stocks are on fire, clocking the best quarter of any sector. Stock dividends at new all-time highs, up 7% year on year. Alibaba to break up into 6 different companies, which will be listed independently at some future date. AI could be a $7 trillion business in 10 years, and I think it'll be a lot bigger and will happen a lot faster than we think. Volatility plunges to 19. Ford loses $2 billion on EVs, while Tesla makes it to $12.6 billion profits. It just shows how far behind conventional car companies are. Our analysis shows we're at the top end of the trading range and it's time to take profits. What we might do on the next sell-off, though, is not test the bottom end of the range, but have a higher low so that we can then start to establish an uptrend going in this direction. We may see a ho-hum summer in the markets, but then a ramp up to new all-time highs once we start to see those 3 to 4% inflation rates pull down interest rates in a substantial way. So this is the S&P 500, and the old sell in May and go away is, can be counted on this year as well. Oops, sorry, this is jumping around. We see the worst case scenario going down to 355, but at the top of the range, we're expecting 48,100. And you can see we've also made some very profitable spread trades as we've gone along. For a hedge on your stocks, if we're going to have massive pullbacks, you might look at SDS. If you buy a parcel of this, it can reduce downside risk in your portfolio. So while stocks are rallying, this will be very cheap to buy, and it's a great thing to buy to pay for risk for being prudent. I mean, that's what you do to protect your house from burning down as you buy insurance. VIX is the bargain of the century, measuring volatility. You buy when it's high, when the volatility is high, stocks you buy, and when it's low, it's time to go. This is the NASDAQ. It's had a heroic run to the upside, some 25%, but I would be looking to take profits here and get back in lower. We're looking for 18,000 in the NASDAQ by the end of the year, or a gain of about 40% off the lows. The barbell portfolio, and this is what we use. So all these charts I'm going to show you about identical from here on. It's, as I said, it's time to take profits for the short term, but for the long term, you can keep them if you're thinking 5 to 10 years in the long term. So we have 50% big tech and 50% domestic recovery stocks, which includes railroads, couriers, banks, construction, credit cards, event organizers, ticket sales, and retailers. Microsoft is a big leader here. An accelerating economy means more PCs and operating systems. They're also moving big time into the cloud, and with their Azure service moving to subscription services. And notice that your Microsoft bill keeps going up every year. The pandemic drove a huge rise in PC sales and gaming. So we're looking for 350 by the end of this year. Oh, and if you're wanting to have a piece of AI, and I'm not sure how to invest in it, buy Microsoft. It's just invested a large $13 billion chunk in OpenAI ChatGPT, but also just use the product. You bought Microsoft Office to enhance your business rather than just invest purely with Microsoft. Apple is topping out here, and we're looking for a pullback before we jump in again. 1 billion phones need to be replaced to move into 5G, and you can expect Apple as a major buyer of their own stock. We're targeting 200 for Apple by the end of this year. A few weeks ago, they announced new breakthrough technology. iPhones can now monitor your glucose levels if you have diabetes, which is about 11% of the US population. And that's just the beginning of a major move by Apple. and the other big techs into healthcare. And notice also that Apple has recently brought out the Apple Card with a savings rate where you can get 4% plus in a savings rate, which is a great idea. So they're not only going out into healthcare, but they're also moving into finance. Google has a near monopoly with 92% of all searches, 15% of all searches for travel. If we get a double or triple bottom here in Google, we'd be a major buyer. We're looking for $150 a share by the end of the year. Amazon is also topping out. It has a great online sales presence. We'd look to be a buy here on the dip. We're looking for $150 in Amazon. And again, all these big techs are major players in artificial intelligence, which has become the theme of the year. It seems, by the way, likely the government will file an antitrust suit against Amazon. And if they end up breaking up the company, the value of the individual pieces is worth double what Amazon itself is worth. And we certainly saw that with the breakup of other monopolies. Tesla, we love Tesla at Mad Hedge Fund Trader. If you include the federal subsidies, Tesla now holds the #1 and #2 car spots in the California car market. We bought it down here at 105, 110 level, and our target for the year is 300. The Elon Musk target, of course, for the share is 1,000 a share, and so far he's been right. But we're at Hedge Fund Trader, I'll go and stick our neck out and say that Tesla could be worth $10,000 a share in the years ahead. Tesla has topped out, and we're looking for a test of the low here, right about 160. But then I think we take off again to new all-time highs, and we could have hit a new all-time high in Tesla by early next year if we get their production up to 2 million this year. So here's the Tesla market share, 64.7% of the car market. NVIDIA is topping out as well. It's another great play if you want to be involved in AI. It's expanding into this space at a rapid rate. Palo Alto Networks, also great for cybersecurity, and hacking never goes out of fashion. So I'd always have this in your portfolio and buy on dips. Salesforce, the sector that's growing exponentially, just announced major staff cuts and cost cutting. We want to buy this one on the dip after its 50% gain from October. We're looking for 250 in a share in Salesforce. Here's the ROM, the ETF technology, which holds a basket of the major technology shares. After a pullback, we're advising people to get into this wonderful ETF. The second half of the barbell bets on a domestic recovery in Q4. Some of these stocks have not moved for 5 or 10 years, and we're focusing on economically sensible cyclical industries. It actually makes a great counterweight to heavy growth technology, and we could spend all of the next year rotating between these two groups. So Boeing has been one of our favorites for a while. We got the bottom here back in October, and since then the stock has more than doubled. We are up about 120%, and we expect a long sideways move, maybe a pullback to 190 or so. Eventually, we expect the stock hitting 450, and the 737 MAX is flying again. Caterpillar is in buy territory now, having hit that wonderful moving average, and it's raised its dividend by 50%. So it's a great stock to hold in any portfolio. Freeport-McMoRan, we bought at the last bottom right at the 200-day moving average. And you want to try and get into the global copper crisis because you need 200 pounds of copper for every EV that's produced. You also get industrial demand from China with its economic recovery. Walmart, we don't want to get involved in retails yet because there's a recession risk out there. Delta Airlines, travel is in mode again after a big chop along sideways. But, you know, today it's travel is messy. You can't get a seat on a plane these days. You have to book everything 3 months in advance. And you have to pay double what you used to, and you get treated like cattle. They've cut back so much on services in the airline industry. So you almost feel like you're in a herd. The healthcare sector has already taken off as a defensive play for a recession. It's also a contrary trade to the technology industry, which is selling off. To the financials, we love the banks at Mad Hedge Fund Trader, and we've actually just taken, last Friday, 10 profitable spread trades off, and most of these were in the financials that we bought at the bottom of the banking crisis back in the March 16. So we really got the bottom there. The banks love rising interest rates and falling default rates. They are hugely overcapitalized now, moving into online banking and closing their expensive branch networks to cut costs. So, you know, if you walk into a branch now, all they seem to say to you is, do you have our app? And you can do this transaction on it. So, I mean, the first thing they want to do is show you how to use the app. So banks really don't want you in their physical buildings, but they absolutely do want your money. So all these charts I'm going to show you in the banking industry all have similar patterns, just different volatilities. So down here, you can see there's a sort of head and shoulders on this pattern, and it's going to be similar for every bank stock I show you going forward. Morgan Stanley is the same. We have a head and shoulders. It's actually inverse head and shoulders pattern up there, which is prime for upside takeoff. JP Morgan Chase, similar, and it actually produced a wonderful earnings report last week, and it moved 6% in a day. First Republic, okay. So the banking industry wants to rescue Republic as it fundamentally is a great business. You just must get through the current crisis of confidence with small banks. Republic should at least double or triple from these levels. And notice how the major banks took a lot of the regional banks' business. And this is a shame, but I think once the banking crisis works itself out, I think the regional banks will get back to some normality. But you know, when people say there's going to be a soft landing, I actually wouldn't count on it. Visa is another big winner of inflation, catching exploding online commerce, COVID-19 recovery. 15 of all the credit card charges are for travel charges. And like last summer, this coming summer, we'll see one of the epic travel booms of all time. And all that goes on credit cards. We've had a big move since October from 175 to 235, and we're looking for 300 by the end of this year. Berkshire Hathaway is looking for new highs also. It's actually a one-stop barbell portfolio. It has heavy weightings in the banks and industrials, and they're the largest outside owner of Apple. We've had a nice $60 move, or 25%, from the October bottoms. Berkshire is a massive buyer of its own stock whenever it trades at a discount like it is now. So we're targeting 400 a share in Berkshire. So to bonds, it's another major asset class we play. We're probably the only service that makes bond recommendations. And as a result, we almost have the market to ourselves. And we make a ton of money on the bond trades for our customers. So bonds are entering buy territory at the bottom of the range, driven by the debt default warning. We're looking for a 2.5% yield by the end of 23, and TLT should reach 120 in 2023 without any political interference. That'll probably happen after the summer. We're advising to keep buying TLT calls, call spreads, and leaps on dips. And you can also buy 90-day T-bills, which has a 5% risk-free yield. Junk bonds, it's a wonderful way to participate here because JNK and HYG have a wonderful yield of over 8%. So here's the TLT chart, and what we're looking for is a pullback here before we jump back in and put on another call spread trade. And you can see we've already taken several spread trades, very profitable spread trades in the recent times. And here's the yield, and it got up to 4% and has eventually given that up and is heading all the way down to 2.5. Junk bonds, another way, as I just said, to earn a wonderful yield, 8.3%. And how you want to play that is look at JNK and HYG. Foreign currencies, Japan holds on to easy interest rate strategy, pressuring the yen dollars. It's all about recession fears. Japan inflation hits 4.4% high. So Chinese lockdowns will keep the yuan lagging, but it will eventually join the rest. Strong currencies will also deliver major bull markets in emerging market stocks and bonds. The dollar sell-off may accelerate after the quarter-point rate rise on the May 2nd and 3rd. Any strength in the dollar will be temporary because the next rate rise is the last one for the foreseeable future. We're looking for new dollar lows by the end of 2023. So you want to be buying FXE, FXY, and FXB on dips. So this is the Australian dollar. And the Aussie economy with their major commodity exports and food exports is essentially a call option on the recovery of a global economy. And the best way to play that is by buying FXA. Japanese yen will also do better after its 5% pullback. We're looking for a 25% gain in the yen. The euro, we're looking for 25% gain here, even though World War III is on its doorstep. British pound, we're looking for a recovery, even though, it might only be 15% because it's lost about 10% of their performance to Brexit, which will be a drag on the economy for the next few decades. Market currencies, emerging market currencies will also be huge performers and could go up 40%. And the way to play that is with the ETF CEW. Now, for anyone, we've got any Bitcoin loyalists out there, we're looking for actually a pullback to at least maybe 6,000 or 7,000 in Bitcoin. That don't let it scare you off, but that would be the price I would be jumping in before a major rally in Bitcoin. And that could actually be sometime next year. So, the thing to do with Bitcoin is to average in as it comes back down. Energy and commodities, production cut by OPEC is the big deal here. 500,000 barrels a day. That had to do it to keep it away from the prices crashing to 50. Long term, this stuff goes to zero, even though it may take 30 years to get there. And on the way, of course, you'll get several doubles or triples. So it is a trading instrument, not an investment. Okay, so the Chinese recovery is providing some support for oil prices on the back of herd immunity. The US is now the world's top oil producer, followed by Saudi Arabia and Russia. That puts the US in the driver's seat. Uranium demand is surging with the nuclear renaissance, and now the US is reinstating plutonium production for the first time in 20 years. We will have to wait to see lower gasoline prices, and the big oil moves will have to wait for a global economic recovery, especially from China. So as I said, these trading instruments, not long-term holds. So here's the oil chart. It's up to quite a high in the range. So we'd probably be looking for a pullback here before we jump back in. ExxonMobil, we wouldn't be buying here as at the top of a range. That's why I say stocks are all overbought. Natural gas, which Anne-Marie talked about just before, we would be waiting for a slightly lower rate to get in and almost agree that it's going to have a big jump up to the upside. And we already have in place a leap on natural gas expiring in January 2025. So just wait for a small pullback and then you can slap on a leap. Cameco, the uranium play, I would be accumulating on dips. This is going to be a long-term play. The US government is about to become a major buyer of uranium. Okay, precious metals. Gold moves to 2% of new all-time highs, and that's driven by the prospect of falling interest rates and the demise of crypto. And once we break to the old highs, you could get an explosive move all the way up to 2,300, 2,500, or even at a stretch, 3,000. GDX and silver miners are also on fire. Russia and China still stockpiling gold to avoid Western sanctions. Lithium prices have dropped by half, which is why Tesla has cut prices 3 times this year. And Tesla can operate very quickly, far faster than GM and Ford, because it is almost run like a technology company rather than a car company. So it can act really quickly. So here's the gold chart. And look, don't be surprised if gold pulls back to around 1950 or even 1920. But here you should definitely be a buyer. Here's the market vectors gold miners, GDX. Wait for a pullback definitely and jump in here. And if you notice, looking at the RSI at the top and the MACD at the bottom, we're at the top of the range. So don't buy here, wait for a pullback. If you like gold, you'll want to buy the world's largest gold miner, which is Barrick Gold. We see Barrick moving from $16 to $50 by the end of 2023. That's a 230% gain. We put on Barrick Gold leaps during the end of last year. They're probably up around 500% by now. And the same with Newmont Mining. Silver is another big play. It has roughly 2 times the volatility of gold. We're targeting a move from $17 up to $50 an ounce by the end of the year. And wheat, which I don't have a chart here for, is also expecting a big bullwhip move. Precious metals, wheat and precious metals, similar here, waiting for a pullback before we jump in. Real estate, we do have a commercial real estate crisis in the works. $1.5 trillion commercial real estate coming debt is a threat to all asset classes. Manhattan office vacancies hit record highs, and office vacancies in San Francisco are now at 30%. And that's because of the working out of home trend. Big companies don't need offices if everybody works at home, or even if just a third of their staff works at home, which seems to be the trend. New home sales grew 1.1 in February, assisting home sales 14.5, and that is anticipating a monster rally in the housing market by the end of the year. Pending home sales are flat. Case-Shiller loses gains in January in the National Home Price Index, dropping from around 5.6. Annual gained about 3.8, and the price has been dropping for 7 straight months. Here's the Case-Shiller Index, and the index here is adjusted for inflation. So what this means is that home prices have been beating the inflation rate by a margin of 2 to 1. So houses have been a fantastic investment and will probably continue to be one, with a structural shortage of 10 million houses in the US. Here's Crown Castle International. It's very attractive and with a close to 5% yield. This is one we would be buying right now with such a great dividend. So what do we do about all this? Stocks buy the dips at the bottom of the range. Bonds buy dips, sell extreme rallies. Commodities buy dips. Currencies sell dollar rallies, buy currencies. Precious metals buy dips. Energy buy dips. Volatility sells short over 30, and real estate buy dips. So you could probably do okay just buying all the stocks I mentioned. However, the reality is that conditions change for these companies every day. And as you know, companies are always viciously competing to put each other out of business. If you don't get updates on the daily fundamentals, you could easily get wiped out. Today's winner could be today's loser. So that's why you need someone to guide you through the thicket. I gained independence for life, and so can you. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living anywhere, anytime, and supplement your income. The harsh truth is the majority of individual traders lose money. They lack the correct training and discipline to succeed. And most brokers' offices suffer grievous bodies of interest because the brokers are out for themselves and their company. Wall Street is about moving money from the uneducated to the educated. So the solution is to get educated. You need a pro to take you through the maze. 95% of it can be completely ignored. They're just a few great sectors. And you can earn a 10% profit on the great ones, but can very quickly get wiped out by the losers. So let a 40-year veteran, take you by the hand and steer you to safe waters. Here is our secret weapon, the market timing profit predictor, a market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators, and took a team of mathematicians 1,000 hours of calculations to create. Anything approaching 80 is a strong sell, and anything approaching 20 is a strong buy. The next move is likely to be back down to 20. Why do you need an algorithm? Any algorithms have become a dominant fixture in the market. You should never trade without one. It does the work of a 100-man research team department in seconds, runs real time, and optimizes returns with the addition of every new data point for faster than human can imagine. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. And I'm not the only one using algorithms. Some 80–90% of all current trading is algorithm driven. So here's 3 years of profit predictor performance. Lots of buys at market bottoms and lots of sells at market tops. It just becomes a money-making machine. So Richard made millions religiously following mad hedge trade alerts. Now he spends his retirement restoring vintage aircraft and flying them over the California coast. And Greg turned his $100,000 into $1.5 million simply on mad hedge funder trade alerts. He bought a home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough left over to send his 3 kids to college. And this is my son, Alex, on the shores of Lake Tahoe, where we spent some time with our Mad Hedge Trader profits. And here he's looking over to the beautiful snowy mountains at Lake Tahoe. So the early 2000s were the hard decades for making money. The 2020s and 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials become big spenders over the next 15 years, while 80 million baby boomers fade from the scene. We're at the beginning of an economic boom that'll last another decade, starting in 2023. The last time we had a demographic push, this is how the stock market did. We went up 20 times in 18 years, from 600 to 12,000. So the question is, are you ready for a replay? If we get the same kind of performance, you can expect stocks to go up 20 times from the 2009 bottom in 18 years to take us up to 120,000 by 2030. And if you think we're crazy, we're already 3/4 of the way there. This is where we are now. If you superimpose one chart on the top of the other, except this time it's different. We have a tech supercharger technology hyper-accelerating across all fronts simultaneously, and the pandemic will greatly speed up the rate of change. The development of quantum computers means that the computational ability is to about increase 1 trillion-fold at no cost. The world's major computational challenges will be solved. All major human diseases will be cured. Barbell stocks dominate in this scenario, so the future looks great. To play the next 90,000 Dow points, sit with the Mad Hedge Fund Trader and Global Trading Dispatch. Tap into a top-performing trade mentoring service. Follow Mad Hedge Fund Trader, research and trade alerts, and you will rake in the profits. Let a jack of all trades steer you toward great profits. We trade single stocks, options, ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month. We do about 200 trades a year. 95% of them are profitable. It's just a matter of time before barbell stocks break out to new all-time highs, so get ready to make profits on your trades. So here's how our algorithm works. It predicted an imminent breakout in Tesla when it was back at $66. So we sent out a trade alert. It said buy Tesla at 67 or best. And here you have 49 shares, which gives you a $10,000 weighting in the stock. What happened? We had a 63% move in Tesla in 20 days, up to 109. So we sent out another trade alert saying to take profits. And on this particular trade, we made 6,258 in 20 trading days. What do we do after that? We buy the dips in Tesla and we ride it all the way up to the old pre-split adjusted price of 445. So here's a history of our major Mad Hedge 10 baggers. For Zoom, we got in at $60 and traded it all the way up for a 16x profit. Lam Research, we got in at 51 and made it 6 profit. NVIDIA got in at 38, 16x profit. Square, we got in at $10 and made a, which I can't see, a 20% profit. Tesla, we got in at, jumping on. Moderna, we got in at the lows here at $20 and we made a 40x profit. And Tesla, we got in at just over $2 and made 180% profit. Okay. So what do we get at the Mad Hedge Fund Trader Global Trading Dispatch? You get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. You get live bi-weekly strategy webinars with an interactive Q&A, just like this one. Special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, and access to a 14-year database on investment ideas. It's the one-stop shop for individuals who want to understand what is happening with their retirement funds, for people who want to learn how to trade for a living, for smaller institutions and financial advisors who want to get in before the next melt-up begins. When you join Mad Hedge Fund Trader, you will receive global market comments newsletter 5 days a week. You will also get Mad Hedge Hot Tips, the 5 most important things that happened today. For this service, we're not going to charge you $100,000. This is what our big hedge fund clients pay. And it's absolutely worth it for them because they make millions of dollars from us. We're not going to charge you $10,000, and that's what we charge our concierge clients. We're not going to charge you $3,000, which is the lowest price you will find on our website. So only through this webinar, you can receive our service for $9.97 for 6 months, which is a great deal, but only for today. It's a limited time offer. We can only take 25 new subscribers at a time. It's first come, first served. So just click on the chat box on the right, and there will be a link to a dedicated sales page, which you can only obtain through this webinar. So if you subscribe, you will get right now, after, you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good profits on the table. 95% of these trade alerts make money. And here's the chart that you will receive. Can you actually guess what this chart is? You'll have to subscribe and find out, and then you can take advantage of putting on this trade. But if you subscribe today, you could also receive a special report on Tesla resulting from our tour of the Sparks Nevada Gigafactory last week and Tesla's long-term AI strategy. So if you click on the chat box on the right, here's the office you can't refuse, 6 months for just $9.97. Let me show you how to make the money to pay for your subscription. And that is Alex and myself at the Louvre in Paris after he just returned from a French language camp. So click on the chat box on the right. It's 6 months for just $9.97. Okay, I'm just going to my email here to check if we have any orders. Okay, let me just have a look here. Okay, we have Rodney from Sydney, Australia. Hi, Rodney. Thanks for joining us. It's great for you to be a member of our community. I'm sure you have great fun making money, building your knowledge, and having fun with us all at the same time. We also have Jay from St. Petersburg, Florida. Karen from Cody in, I think it's Wyoming. Also, let me see, Eric from Flagstaff, Arizona. Oh, and we have Adam from Durham. I think it's Durham. Is it Frank from Columbus? Is it Idaho? Michael from Corpus Christi in Texas. Okay. Peter from, let me see, is it Shreveport? I'm not sure how to pronounce that, but from Los Angeles. Okay, so I see a question coming in here. What do you do before making a trade? So there are actually about 100 factors that go into every decision on trade alerts. Several of them are technical in nature. Obviously, we look at the 50 and 200-day moving average, whether the RSI, which is the relative strength index, is overbought or oversold. Plus, we have our own in-house algorithm, which aggregates a lot of these, but a lot depends on fundamentals. I mean, if you don't understand the fundamentals and if you don't know what's going on with fundamentals, it's really hard to pick a good stock to trade or even to one to hold onto in your portfolio. The fact is, making money, Trade Alerts use every single tool they get their hands on. I mean, fundamentals are great to have as the long term, but the technicals you use to enter and exit the trades. We spend a lot of time on doing technical research, meeting with companies, and getting to know technologies. And a lot of time with these companies are the ones that the Mad Hedge Fund Trader has been covering for 50 years. And think companies like Boeing, Freeport-McMoran, Apple, and Tesla. Let me see, there's the question here, is there a 12-month option? You will be grandfathered in at this price. So at the end of 6 months, you can renew for the same $9.97 or upgrade to our other services like the technology letter or the biotech letter, or to our concierge service, which is now $12,000 a year. But there is a definite waiting list for our concierge service, and we want to make sure that you really know what you're doing before you go to those higher levels. How do we know when to get out of a trade? We provide exit levels, so you don't need to be concerned with when to exit a trade. And if the trade doesn't work out, we put out a stop loss alert quite quickly. Usually happens about 5% of the time, but we tend to stop out very quickly, usually when the loss is only about 1% of your portfolio, because it's much easier to dig yourself out of a small hole than a big one. There's numerous questions here, but we're almost up to time. Let's see, we're getting close to 25 here. So if you're basically in at like 90.97, you're in at that price for life. And a lot of people have joined at that price many years ago in the past. So I think I'm up to my time. So if you join our community, have fun while you learn, make money, and change your life. Thank you for listening.
All right, Jacqueline, thank you so much for coming in today and spending your afternoon with us. I know you're down in Vegas, so I appreciate you kind of taking some time away from that and sharing some knowledge with us.
My pleasure.
So I'm going to take the presenter back from you. Let's see. And then I will dismiss you so the room doesn't get shut down automatically. I did put the links into the chat box for everybody, so they are there. So if you haven't had a chance to click it yet, you can click it right from the chat box. All right. Thank you so much, Jacqueline.
Thank you.
All right, so let's see. Now I'm sharing my screen again. Let me just kind of go through a few things before we bring on our final presenter for the day. Again, I'd just like to take a moment to thank our sponsors, CMT and Stocks and Commodities Magazine. CMT, obviously a great organization that's designed to help educators be more help traders be more successful by educating them on the markets and how the markets work. So in their courses, they do talk about risk management. They talk about systems development, portfolio management, and also the behavior of the markets, which is something that can be a little interesting. So they're great things to research if you're interested in bettering yourself or your trading. Check out the CMT, cmtorgassociation.org or 646-652-3300. All right, just again, we are Metastock. We're the hosts of the Trader Summit. You could take advantage of a great Metastock trial offer by going to metastock.com/traders-summit 3-for-1. You can see that link right on your screen there. And then I'd like to just go again over the Traders Action Pack, where you can get the full action pack, including everything we've talked about today, including our next speaker coming up here, Kevin Nelson's training. So you can get the Steve Bigalow CPS plus his training, the GoNoGo Complete, 3 months of the RMO ATM plus training, Anne Marie's Target Rich Trades, 3 months of Learn Metastock, 2 years of stocks and commodities, and then the Unleash the Power of Metastock workbook and videos. All that, normally $5,500, you can get it for $23.92 today by visiting metastock.com/sales-chat, calling 800-882-3040, or going to metastock.com/summit-deal. All great ways to take advantage of it. And if there's pieces of those different things that you're interested in, contact our sales guys. They are more than happy to talk to you about which solutions would be best for you from what you've seen today. All right, well, let's go ahead and introduce our last speaker of the day, Kevin Nelson. Kevin is, well, I know Jeff tells this story, but I get to tell the same story because Kevin was actually the one that gave me my job here at Metastock as well. So I guess Kevin did all the great things before he left. But Kevin is an amazing educator. He worked here for quite a number of years and really saw the need to be able to help people to understand Metastock at a deeper level. So he developed LearnMetastock.com to help people actually take the most advantage of Metastock, how to use it, and how to apply it in their trading. There's a lot you can learn from videos and things like that, but having these training sessions, these live training sessions from Kevin, plus the ability to go back through them over and over again, will help you really take the advantage of Metastock and what it can do. So let's go ahead and bring Metastock on. You are Metastock, Kevin. Let's bring Kevin on. Kevin, are you there? Oh, Kevin just left. So we're going to give Kevin just a moment to come back into the room, and then we'll dive into Learn Metastock. So I know Kevin's going to be talking about an indicator today called the Super Trend Indicator, and he's going to be showing you how you can put it into Metastock, how you can use it and apply it inside of Metastock. So there's going to be some great information there. So let's see if he pops back in. All right, looks like Kevin's logging back in right now. I can see him coming into the room. Kevin, I can see you, but I can't see your camera, but I can see you're in the room, but I cannot hear you. Oh, Kevin left again. All right, we're going to give Kevin just a second. While we're waiting for Kevin, let's just go back here and let's bring up, somebody had a question earlier about gold on Target Rich Trades. I think we just wanted to bring that up. Somebody had asked for it. So we were just going to bring up the continuous contract and actually show that here while we're waiting for Kevin. So here is the Target Rich Trades in works, showing you that this is the gold, this is the continuous contract using the GCC1 contract. And we can see here that we had the sell zone up here just a few days ago, and then the pullback right after that. So we were up above that $2,000 level and now have pulled back down back below the $2,000 level. Oh, let's see, Kevin's actually texting me. Okay, so Kevin says he's working on it, trying to get in. That's fine. We've got a few things. Now, while we're waiting for Kevin, if somebody has any Metastock questions or anything like that, go ahead, put them in the chat. I'm happy to bring up anything, show you anything over what we've learned today, review anything. Okay, just texting Kevin back. Makes it look like I'm doing something fun on my phone now. Over on YouTube, somewhere in the Rockies is telling us that he can't wait to hear Kevin. Kevin is always great. I always love hearing Kevin too. Okay, so let's actually pull this closed. I'm going to go back to a question earlier today. Let's just pull up Apple. And let's pull up the RMO. Now this is the standard RMO, not the RMO ATM that was talked a little bit about today. So here on the standard RMO chart, there were a couple of questions about RMO and things that you can do with RMO. One of them was if you can use the RMO with candles. So I wanted to show that. I'm just going to go ahead and double click here. And if I change this from bars to candlesticks and hit OK, so then it'll change the RMO to candlesticks. Now, once you've done this, you can actually change it and actually save the template so that way you can apply it anytime. So we're going to go File, Save As, and we're going to change this to template down here. And we're going to call this RMO with candles. So now if I were to close this and bring up, let's say, Tesla, okay, and then I apply that template and I go look for RMO with candles, that will make it so you can use candlesticks with the RMO. So it's actually something really easy to do. Kevin, as soon as you're in, just go ahead and turn on your volume so I can hear you, and then I'll know that we're ready to go. The other question that somebody asked about RMO earlier was the volume on RMO. So we have volume down here. And then what you can see here is you have the 50-period exponential moving average. So he's applied the 50-period exponential moving average to the volume. Now, this isn't a moving average of price. This is a moving average of the volume. So it's actually something pretty unique that you can do. All right, Kevin, I can see you in the room. What I'm going to do is tell you, it looks like it's not recognizing your microphone. So try unplugging your microphone and plugging it back in, and that should get you back up and running with your audio, if that's what the problem is. So somebody's asking over in GoToWebinar, can you also lay the super trend indicator on the price chart so we can see the RMO and the super trend? So I'm going to let Kevin show that here in just a minute, but I'll show you how to overlay an indicator in Metastock because Kevin has the super trend. So let me actually bring up a clean chart here. Let's put on a clean template. If you wanted to do this moving average overlay yourself. All right, so if I have volume, let's put the volume up, down here at the bottom. And then you wanted to do a moving average of this volume. So what you could do is actually just come in, find your moving average. And one of the tricks to Metastock is when you're pointing at something and you're going to calculate on that, it will turn purple. So if I click on that or point at that, it will turn purple. And then you'll see, and it'll ask me to calculate here. And then we can go ahead and hit OK. And then I've made a moving average of that volume. Okay, so what I'm going to do here is I am actually going to go and put you on mute, and then I'm going to call Kevin and see if I can help him out really quick and see what's going on. So give me just a moment. Let me just bring up a video. I'll show the video for a moment, and then I will be right back with you. All right, we're just doing some final work here to get Kevin up and going. Kevin, can you hear me okay? Kevin, you can't hear me? Okay, let me try and make you presenter, Kevin, and let's see if that works here. All right, you getting that pop up? I can see that it's popping up for you. Well, let's see. I mean, I could put you on speakerphone and have the microphone pick it up from here. That might be our option if you can't get your microphone working. Okay, can you try and unplug your microphone and then plug it back in? That'll work. That'll fix it sometimes.
There. Kelly, can you hear me? Okay. All right. Kelly, am I coming through okay? Well, this is, hang on for just 1 second. Do one more thing. Okay. Okay. Kelly, you're just going to have to send me a message through the chat window if you want to say anything, because I can't hear a thing.
Okay.
All right. Wow.
You're good, Kevin.
Okay. All right. Well, my apologies, everyone. I've only done about 1,000 webinars, and for some reason, I had technical difficulties beyond belief right there. So hopefully everybody can see me okay now. So basically what I'd like to do for you here today is first of all, apologize for that. My apologies. But what I'd like to present for you today is just called the Super Trend Indicator. Now, what we do at Learn Metastock is we help people with whatever it is they want to get out of their Metastock program. And one thing that we do is we do a lot of different types of classes, whether, depending on the type of training that you want to cover and so forth. And we take trading strategies. We'll show you how to duplicate them. We write formulas for you, do a lot of different things here, to say the least. So what we're going to be doing again today is we're going to be doing a class, what I call the Super Trend Indicator. And how this whole thing came about is one of our customers asked about this particular indicator. And it was something that I had never heard of before. So I actually did some research on it. And after researching, I found out that this has actually been an indicator that's been around for quite a while and is actually really popular. So basically what I'd like to do then is just kind of show you what I put together here. Now, this particular indicator called the Super Trend Indicator is a trend following type of indicator. And obviously when it works very well is in a trending type of market. What's nice about this particular indicator is very easy to interpret. And another thing is that it automatically adjusts for volatility. One of the indicators that it uses in the formulas itself is an average true range. And an ATR indicator, what that helps you do is that actually will adjust based on volatility for you automatically. And that's, of course, just one of the indicators that's built into it. Now, in addition to that, you'll find that it's extremely customizable. So if you need to make it more sensitive or less sensitive, you can always do something like that. And there's a ton of training available for you. And of course, as everybody knows, up on YouTube, there's a lot of different training available, and this is no different. And what I found is I found a lot of different things that really helped me get up to speed with it. Now, in addition to this, whenever we create a strategy or try to teach somebody how to use a particular indicator, what we do is we create a number of different tools for people. And what we did for this particular one is I created an indicator for you, an expert advisor, 2 different system tests, and also an exploration. So let's go ahead and jump over to it, and let me show you how this works. So to get started, let's go ahead and just open up a chart here, for example, like the SPY. And with this chart now, what we're going to do is we're going to apply the indicators that we've created here. Now, once you've installed the indicators directly from the Learn Metastock website, you'll find all of our indicators begin with LMS at the very beginning of it. And the LMS actually stands for Learn Metastock. And you'll scroll down to that group of indicators, which in this case, the one that I want to grab is this LMS Super Trend indicator. So I'm going to drag it directly on top of our price charts. And what you'll see is when that pops up, it's going to ask you for two different things. First of all, it's going to ask you for the length of the average true range that you'd like to use. So you'll see the default here is I've got 7, and here we'll leave that for now. And then for the multiplier, we're going to leave that as, again, the default for 3. And then we'll click on OK, and it'll ask how we want to display it. And what's important here is we definitely want to merge it with a scale because we're going to plot it directly on top of the price bars. So I'll click on OK, and that'll plot our indicator directly on here. Now, as I was saying before, this is a really easy, simple indicator to use or to learn how to use. And all you're really doing to interpret this indicator is looking at what the prices are doing in relation to the indicator. And that is, are the prices above the indicator or are the prices below the indicator? And more specifically, you're looking at the closing price of the security. So in this case, as we kind of scroll back here a little bit, you can see that when the prices tend to move in one direction, this indicator, and again, we're just using the default here, tend to follow it very nicely. And then what happens, excuse me, is then what happens is then when the prices close above this upper line, for example, then that'll indicate a reversal of a position, and then you're looking to possibly go long at that. Vice versa on a short side, once the prices are moving up and then they close below that lower line, then you'll see that this indicator acts at almost like a trailing stop. And then, of course, then you're looking to the downside here. So that's what I mean. It's a super simple indicator to kind of follow and interpret. And you can use it on just about anything. And what's really nice, of course, is that once the prices actually really do tend to trend over any type of length, this actually works pretty well. So now, in order to keep going with this, the next thing that I like to do here is to try to figure out how to actually modify it and how to adjust it based on what I'm looking at. Now, you've got a lot of different choices. So for example, like I could double click directly on the indicator itself, and I could manually go in and I could change these numbers one at a time and just kind of see, you know, if some periods work better than others. But as I was stating before, I created a number of different tools that'll make it a little bit easier. So the one thing I created is, for example, if you go to your system tester, and again, same thing, after downloading the formulas, you'll find that all of our formulas, again, all begin with LMS. And if you want to jump strictly or straight to these, a really nice way to do that they added in version 18 is a search feature up here at the top. You could just type in, for example, like LMS, and that will take you to that group of indicators. So this one here, you'll see that once they're installed, there's going to be two different system tests that have been created for you. One is just called the Super Trend System Test, and another one is called the Super Trend System Test with OPT or with optimization. So this is the one we're going to take a look at first. So I'm going to go ahead and double click on it. And as you can see here, this is also always going to have the formulas already written in here for you to identify exactly what the rules are to go long, where to close out that long position. And if you want to test going short, for example, if you're a more advanced trader and have shorted securities before, you'll probably want to go in and test going short as well and see how that works. But with the optimizations, what this allows you to do is rather than saying, hey, I just want to use, you know, a multiplier of 3 and a length of 7 for the ATR, the optimization allows us to put in a range of data and say, hey, I want you to test everything between these two extremes and then tell me which one actually works the best. So the one that's going to be already built in here for you is this first one, which is going to be the multiplier. And this is going to test anywhere from 1 to 10 periods in steps of 1. So it'll go 1, 2, 3, all the way up to 10. And then the last one is the length of the ATR. And this one's going to test anywhere from 2 to 40 in steps of 2. So this one's, of course, is going to do 2, 4, 6, and so forth. And if you look down here, this is going to do a total combination of tests of 200 different combinations. So I'm just going to click on OK, and we'll get this started. I'll go ahead and select it. And then up here at the very top, I'm going to go ahead and put in the symbol of SPY for the SPY. And then over here on the right-hand side, I'm going to tell it to go long only, test over the last 1,250 records. We'll tell it to test through the most recent or the current data that it can get. And then underneath our trade options here, I'll just go through these settings here quickly. But what we'll do is underneath the account is I'm going to run what's called a points only test. So the points only test is just going to return back a raw number of points that are gained or lost in the system test. And what it's not going to take into account are dollar figures. And the problem with putting in, for example, like a dollar figure is that there's a lot of different variables that can kind of come into play. And what I'm looking for is just a raw number of points that are gained or lost. So I'm going to go to the broker tab here. And by using a points only test, you'll see that it takes out of the equation any type of interest rates and also any type of margin. So it'll make the results actually a lot easier to compare them against each other. And for the commissions, I got that set up for 0. And then lastly, for the trade execution, I've got everything to be traded at the opening with a 1-period delay. So if I get a buy on Wednesday, that's going to get me or simulate that I got into the trade on Thursday at the opening, and vice versa. When it comes out for an exit, I'll get out at the opening of the following day. Now down here at the bottom, you'll see I'm going to keep 100 of the most profitable system tests. So we'll go ahead and click on OK, and then I'll go ahead and start the system test. And then if you look down here in the lower right-hand corner, this is basically going to start going through this and basically test all these different combinations. Now, the reason why, for example, that in the optimization, I chose to run 200 different combinations, when we take a look at the results, what's going to happen now is it's only going to show 100 of the most profitable ones. And then what we'll be able to do is then we'll be able to sort based on whatever type of criteria that we want. Now, there's a lot of pitfalls that you need to understand with optimization, and we could go on and on about this. But one of the problems with optimization is that with system testing, you're going backwards in time and you're testing an idea on a historical data set. But with optimization, you're taking that one step further and you're saying, hey, what was the best fit during that historical data set? And the problem with that is that if you do that too much, basically what you'll end up doing is what's called curve fitting, and you're just kind of fitting the test to the system to the data. And the problem with that is going forward in real markets, if the real market doesn't behave like the previous one, you're probably not going to be real happy with the results. But again, that's probably a subject for another day because we can go on and on about that. But I'll click on view results. And what this is showing us now are 100 of the most profitable system test results that we just took a look at. And what we can do, of course, is now we can sort on any of these columns. So for example, like if I sort on the net profit, for example, I can very quickly see which ones were the most profitable or for the least profitable, the number of trades and so forth. So for example, like the first one generated 150 points. It traded 9 times and there were 5 winners and 4 losers. And the average profit to average loss is 329. Now what that means is that for every point that I lost on a losing trade, I made over 3¼ points on a winning trade. Now, this is actually a really important concept that hopefully most of you understand how this works. But whenever you create a trading strategy, if your average winner is roughly about the same size your average loser or a little bit less, statistically, if you trade something like that long enough, basically it'll wipe out your account. So when developing a trading strategy, what you want to do is you want to concentrate on creating something where the average winner is substantially larger than the average loser. And generally speaking, I typically like to look for around a 3-to-1 ratio. So this first one actually looks like a pretty good number. Now, to determine what levels it uses is that if you expand these last 2 columns here, you'll see that OPT1 has a value of 5 and OPT2 has a value of 38. What that means is that it's using 5 for a multiplier and then the length of 38 for the length of the ATR. So now if we open it up, for example, double click on it, then you can see how it did, for example, in relation to like a buy and hold. And in this situation, for example, the buy and hold was 145 points, and this one generated 150. So it sounds okay, right? But, you know, barely beat the buy and hold. But the other things we really need to look at here, again, is like right here, this average profit is over almost 40 points, and the average loss is about 12. So that's a really nice ratio right there. And then the other thing I like to look at here too in this page here is this out of market timing. So this is saying that we're out of the market approximately about 450 bars. Well, if you remember that there's typically about 250 trading days in a year. So 250 trading days a year, 500 is about 2 years. So what this is saying is that a little over 3 years it took to generate 150 points, but it took 5 years of buying and holding this to generate 145 points. So that's actually a pretty important concept to kind of keep in mind too when looking at the trading results. And the other thing I like to look at, of course, is the equity curve. And this tells you how the system did over these different periods of time. And what we're looking for is as smooth of a line as possible and trying to avoid these downward moves. And anywhere that it's flat like that just means that that's basically out of the market at that time. The other thing is down here at the very bottom, you click on this plot on chart, you close this down, and then what you want to do here is that this is going to show your equity curve up here at the top. So I'll go ahead and close that down. And what you want to do is you want to make sure that whenever it is showing you a buy or sell signal of where it bought and sold, you want to make sure that you understand why it bought and sold at that point. So in this case, for example, it was using a level, I think it was 5 and 38. So what I'd have to do is I'd have to double click on that indicator and then just change these parameters to whatever it is that I tested on. So for example, like the number of periods, I would change that to 38. And for the multiplier, I'd change that to 5 and click on OK. So now what I'm looking at here is I want to make sure that when I get this buy signal here, the reason why is because the price closed above that upper line at that point, and that got us long at that point. And now this line acts as basically a support level. And then vice versa, like right here, the reason why that went long there is because the price closed above it. And what happened is the prices reversed, they closed below that line, and for that reason, it got out there. The other thing you can do is that if you hover directly over these numbers here, this is also going to give you information about that particular trade. So that's actually really helpful as well. So we'll kind of go backward here for a bit here. And as you can see here, for example, like depending on the type of market that you're trading, you can see why this is considered to be a trend following type of strategy, meaning that the more that the security tends to trend, the better something like this is going to do. And where this is a weaker system is when we start to get in a choppy market where things are just kind of bouncing around or they get caught between these trading levels. And for that reason, a lot of times you're going to get in late, you're going to get out late and so forth, right? So once I've done something like that and I've gone through and I've basically have come to some type of, you know, realization of the levels that I want to use and so forth. Another thing I like to do is I like to test it, for example, like on a little bit bigger basket of securities. So for example, what we could do is that if we go into the system tester here, now I'll do is I'll jump over to this system test, which is just called the Super Trend System Test. And if you open this up, you'll see that underneath the buy and the sell order, everything's filled out here for you. And what you can do is you can manually change these levels here yourself of the multiplier and also the length. But here's something I always recommend is that whenever you're working with any of the pre-built systems that you have inside your program and you want to make a change to it, I highly recommend that you make a copy of the system and make your changes to that copied version. That way you always have that original one to fall back on. So in this case, to make a copy of it, just right click on it, choose copy, and now you'll see I've got a copy of that system. And now I can make whatever changes that I want to it. So for example, like I'll double click on it. And now, for example, like if I want to test like a fixed set of numbers on a big group of securities, now I can manually change these levels, for example, to whatever I want. So for example, I'll change the multiplier to 5. I'll change the length to 38. And if I do it on the buy side, I also want to do it on the sell side. So it's using the same levels for that as well. So again, for the length, I'll change that to 38. And I'll change the multiplier to 5, and we'll click on OK. Now, to run this one, what I'm going to do is I'm going to run this one, for example, like on the S&P 100. I'm going to keep all the securities, all the settings over here the same. We'll just click on our Start System Test. And then, of course, this is going to begin the process. Now, in this one, for example, again, we're going to test it on the S&P 100 securities. One of the questions I get, for example, a lot of times when I'm running this is like, you know, you'll see that the S&P 100 has 101 securities. The 500 has 503 securities. Question is, well, why does it have more than the actual number, you know, of the actual index? And the answer is that what happens is some securities have more than one class of securities. So, and that's exactly what the case is here for the S&P 100. We've got two different classes of Google inside of that index, and that's why we have more than one. But down here in the lower right-hand corner, this will give us an idea how it's going through, and when it's finished, of course, click on your View Results, and then this, of course, will bring up your results here. All right, so let's take a look at this. So again, in this one, what we can do is we can then sort, for example, on the net profit and kind of get an idea, you know, how this particular system with the settings that we got from the SPY, for example, are then applied to the individual securities, for example, that make up the S&P 100. And here you can see that, for example, using that strategy here, looks like Broadcom was the best performer out of the group. And to find out more about it, you can see that it traded 7 times and so forth. We'll go ahead and open it up by double clicking on it. And you can see that it generated 330 points. The buy and hold was 400 points. So it didn't quite, you know, outperform the buy and hold. Let's scroll down here a little bit. You'll see that there were 4 winning trades and 3 losing trades. And the average winner was a little over 113 points. And the average loss was about 41 points. So that's a pretty good ratio. And then the other thing is this out of market timing down here. You'll see that, again, we were out of the market 445 bars. So again, almost 2 years of time, meaning that it took a little over 3 years to generate 330 points. Or if you wanted to buy and hold it, you would have held on to it for 5 years and generated 400 points. Okay, so that's that one. We'll go back here. And then, for example, like Netflix, for example, look at the average profit to average trade on that one. That's huge. It's almost 9 points. This one didn't trade much. It only traded 5 times. But let's open that up. You'll see that on Netflix, much different results here. Generated over 260 points. The buy and hold on Netflix over the last 5 years is a little over 8 points. So big difference here. Again, there's only 5 trades, 4 winning trades with 1 losing trade. The average profit was over 67 and the average loss was about 7.5. Again, if I scroll down here, you'll see the average, the time that we're out of the market is about over 5 years in this case. And we'll go back up here. And if you want to see the results on any of these, just click on your plot on chart down here at the bottom. And then, of course, that's going to plot it directly on here. And what's important about that, again, we want to make sure that this thing is buying and selling where it should be. So here's our equity curve here for Netflix. And if you're aware that it's flat like that, of course, that just means that you're out of the trade. So I'll go ahead and close that down. And again, what we'll do here is we'll just kind of zero in on just some of these trades here, as you can see, and move that window down and make sure that we're looking at the right parameters, 5 and 38. That's good. And again, like you can see that you got a buy signal right there at that part, and right where it traded below it, that's exactly where it got out. And so what you want to do is you almost want to go through this with almost like a magnifying glass to make sure that you're understanding exactly why it's buying and selling at these points, and make sure that it is buying at the correct points. Now, let's go ahead and close that down for a minute here, and let's go back to those system test results, because as you might have noticed here is that when we were looking at that, and by the way, if I want to go back to a report that I saw or ran previously, just right-click directly on it and go into and click on report, and that'll bring you right back to where you were before. Okay. So again, I will sort on this net profit. And what's interesting about this list of securities here is that you'll see that we've got one huge loser over here. It looks like it's Booking Holdings. It generated, it looks like a negative over 600 points, 12 trades, 2 winners, 10 losers. The average profit, average loss is actually a pretty good number, but everything else just does not look like it worked well at all. So let's go ahead and plot that on the chart, and let's take a look at take a quick look at that one as well. And go ahead and close that down. All right, close this down. I'll close that down. And then what we'll do here, this is our equity curve up here. So we know that it didn't test out well, but we'll go ahead and close that down. And then what I want to do is I want to drag that same indicator here on our chart and make sure that I've got the correct parameters on here. So the number of periods is 38, and we'll change the multiplier to 5. And again, click on OK. Make sure it's important that you always merge it with the chart and then close that down. All right. So now I'll kind of zoom in here. And one of the things that's kind of interesting about booking holdings, the question is well, why isn't, why does it work so well on some securities, and then some securities it just doesn't seem to fit at all? And as you probably know, there's, the different securities are going to have different personalities. And the one thing that really jumps out at me here on booking holdings, for example, are the number of gaps here inside this chart. So I'm going to go ahead and get rid of the indicator here for the time being. And let's take a look at this for just a second here. And what you'll see here is that this chart, it basically is extremely volatile. And you'll see that between a lot of the different bars, there's just one gap after another. And I think, again, if you're trying to trade, for example, like a trending type of strategy on a security that's not trending or is extremely volatile, this is basically what will happen, right? I mean, just doesn't seem to fit. So then the question is like, well, if this is something that you really wanted to trade and you're in love with a particular system, are there any other options for you? And the answer is absolutely. There's always options, right? One thing that you can do is that if you want to use the same strategy, or any strategy for that matter, is that you can always go back into it, for example, and inside your system editor here, one of the things that you do have available here is that you do have this choice here where you can work with different types of stops with your system test. You'll see that there's 5 different types of stops, and they all operate differently. And of course, this takes a fair amount of explanation, but one thing you could experiment with is, well, what if I put in a maximum loss? Or what if I put in a profit target? How would that affect the results here as well? And again, this is another area where you can take a real close look at to see if something like that could possibly help you out. But one thing that I've noticed here is that whenever I find a security that's extremely volatile, a lot of times what I do is I just look for a different type of trading strategy. So one thing that, for example, that I kind of noticed here with booking holdings being so volatile is maybe look for another type of strategy that basically reverses very quickly, or maybe shorten the time length of the type of indicator that you're using. But to kind of give you an idea, another one that came to my mind, for example, are the stochastic systems. So for example, like if I chose like the performance systems of the stochastic oscillator, which of course you already have available inside your Metastock program, and let's just run that real quick on booking. I'll do bkng.o, right? Oops, not 0, but O. And let's try that. We'll keep everything the same, and then I'll go ahead and start our system test. And you'll see that we get a much, much different view here. And you can see that now in this case, instead of a negative 600 points, it literally is the exact opposite. Now it's almost a 2,000 point difference here, or I mean 2,000 positive points instead of a negative 600 points. Again, the buy and hold is about 500 points and so forth. And same thing, a lot of times what it is that you need to kind of make sure that you're using the right type of system on the right type of security. Because again, a lot of them, they just have different personalities. They don't, you're not going to find one system that's perfect for every security out there. Okay. So again, that's just another idea for you, is to take a look at some of these other ones here as well. So one of the other things that I've also created here too, is that when doing some research here, when creating this particular system here, is that one thing I noticed was that there was a lot of talk about using the strategy with other indicators rather than just saying looking for the indicator to be above or below the prices. They also combined it with, for example, like moving averages. That seemed to be like the most common denominator that I saw as far as additions to the system. So then the question is, well, how would I add another type of criteria to it? So before we do that, let's go ahead and just open up again, I'm going to jump back over here to the SPY, for example, and we'll open that chart back up. And let's say that hypothetically that what we want to do in this situation is we want to combine this indicator with a moving average and say that I only want to trade, for example, long if it's above the moving average, and I only want to trade short if it's below the moving average, and the indicator, of course, is supporting that buy or sell signal. How would I add something like that to it? Well, to see it, first of all, let's go ahead and just plot a moving average here. I'll go ahead and grab a moving average. Hands down, the most common moving average that I saw when researching this was a 200 period exponential moving average. So I'll make that 200 periods. I'll choose the method to be exponential and click on OK, and that'll plot it. So the idea here is to combine this indicator. Again, like I say, is only go long if the prices are above the moving average, and only look for short positions, for example, if it falls below it. So to do something like that, we could go back into our system tester and then again, open up the copied version. And let me show you how you can make a change to this or an addition to it. So if you go to the buy order here, at the very bottom of the buy formulas here, this last formula right here is identifying the actual entry into this trade. In other words, this last line right here is identifying that the closing price crossed up above that red line right there. Okay, so if I wanted to add also a moving average criteria to it, what I could say, just very simply, is I could put, excuse me, a logical operator of and at the end of it, and then just say that the closing price, for example, is greater than its moving average. And the way that you write that would be MOV for moving average, the date array, which would be the close, the number of periods that you want to use, and then, of course, then the type of moving average. Now, I know a lot of you are maybe newer to Metastock, aren't familiar with the formula writing and so forth. But again, this is the area where we can really help you out a ton by teaching you how to do different things like this, for example. So in this case, for example, again, we'll just add like an additional line like this. We'll click on OK. And then if I wanted to test that, again, I'll go ahead and select that particular system, choose that same database. And then I'll just go ahead and click on the start system test again. So what this will do is this is now going to run through those 100 securities, but it's going to add that other criteria to it. In other words, again, it's only going to buy if the prices cross up above that red line and the prices are above their 200 period moving average. So this would be a nice addition for those people out there, for example, who always like to trade in the direction of an overall trend. And again, using a moving average is just one example. You know, we could use like a MACD criteria. We could add a Bollinger Band criteria to it. I mean, it just, of course, goes on and on and on. So, but to see it, just click on your view results when it's finished. And again, then, of course, then you can sort on it, and then you can take a look at see how that affected the different things there as well. So here, for example, right at the very top, it looks like Charter Communications now is the top performer there. It only traded 3 times, but what this is saying here is that all 3 trades were profitable trades. It didn't have any losing trades, and so it couldn't even calculate the average profit to average loss. The next one down is, well, let's go ahead and open it up real quick. But this one, as you can see, absolutely crushed its buy and hold. The buy and hold was 56. The profit was 283 by following this strategy, but again, it only traded 3 times. So let's go back. And the next one down, for example, is NVIDIA. I'll go ahead and open that up. And here you can see that it outperformed, for example. Again, at 253 points, the buy and hold was a little over 200 points. Only traded 5 times. There were 4 winners, 1 loser. The average profit was a little over 67, and the average loss was a little over 17.5. But again, down here at the very bottom, make sure and take a look at this number. See this out of market? It's saying that it was out of the market 700 bars. So now remember, there's 250 trading days in a year. That's almost 3 years of time, which means that it generated 253 points in about 2 years. Or if you would have bought and held it, it would have taken 5 years to generate 209 points. So again, this is another area that, you know, a lot of people overlook, but I think is actually a pretty important component. The other thing is I like to look at this equity curve to see what this is doing, but what this is also doing is also kicking us out of the trade at a certain point where we just are literally out of the market. So let's go ahead and plot it on the chart here for a second. And what this is doing is by adding this moving average to it, it's taking us out, for example, when the market, when it's heading down like this. See that? So the other thing that I was experimenting with here before we started our class was another idea here for you as well. And as I was saying, that we could actually, you know, put whatever types of indicators that we want, you know, together in support and so forth. But in this idea, what I thought is what if we combined more than one super trend indicator on our chart? And after doing, again, some different research, I saw a number of different examples of doing this as well. So all I did in this example is I took that same indicator, I plotted it 3 different times on our chart, and then I just changed the length and the multiplier of each one. So for example, I'll click on the red one here, and you can see that this is using a 12 and a 3. Okay. This blue line, for example, this is an 11 and a 2. And then I'll go ahead and show you the green one. Let's go ahead and select that. And that's showing a combination of 10 and 1. Now, how would you interpret something like this? Well, if you like using moving averages, for example, you'll probably be right at home with something like this, because I would probably take a look at this and just say, hey, if these things are all lined up in one direction, that could be more of a positive type of move. So example, like right here, you can see that that was basically, these are all lined up, the green's above the blue's above the red, and so forth. Again, very nice trend up. And again, every time that you see, like, for example, like where they're lined up and lined up correctly, and they're trending, it actually looks like it does a pretty good job. Now, the other thing too is we kind of scroll back here, and this is where the question is this going to trend, yes or no? Well, when this kind of happens here, what this is telling us is that we've got a lot of mixed things kind of going on, and things aren't lined up. And if you see something like that, maybe that's time to kind of sit on the sidelines for a bit. So, and again, like I say, if I kind of scroll back here, you can see that, for example, you can see a lot of different examples of nice trends and areas where, for example, like it gets extremely choppy and where you might want to get in, or maybe just kind of sit on the sidelines. Now, another thing that you can do too, which is also pretty nice, is that all these indicators that I'm showing you can be used in any time frame as well. So for example, like if you've got the real-time or professional version of Metastock, for example, and you want to look at 5-minute charts or 10-minute charts or whatever the case may be, you can do exactly that. And let me kind of zoom in here and use the same type of strategies to, you know, to maybe try something like that out, right? So now what we're looking at is we're looking at that same information, but this time it's just applied to a 5-minute time frame instead of a daily time frame. So a lot of different ways to go about this, to say the least. Now, in addition to this, if you're, you know, if you like kind of this idea and you want to go out and search for other securities that are, you know, giving you buy and sell signals, I've also created another tool here inside the Explorer. The Explorer will allow you to, of course, to go out and search for the different candidates that are of interest to you. And again, if you search, for example, under LMS, that'll group all your systems together. But this one right here, this is the one that I created called the Super Trend Exploration. And it's a real simple exploration. All it's really doing, it'll give you the closing price for your first column. The second column will give you the day of the month. And the reason why I put this one in here is because whenever you do a scan, it's really important that you're scanning on data that you want to be scanning on. And believe me, it's very easy to start or do scans, and you end up with a set of results there, but it ends up being on a set of data that you weren't really interested in. So what happens is by adding a date field in here, it's really easy to determine whether or not, you know, the ending dates are all matching and they're the ones that are of interest to you. So then column C will identify securities that are giving you a buy signal. Column D will identify sell signals, and so forth. Now, if you want to modify this one, my suggestion is exactly the same with the system test, and that is right-click on it, make a copy of it, and then make whatever changes that you want to that copied version, because that way you always have the original to fall back on. So for example, I'll go to the buy column here. And again, we'll keep with our previous example. I'll make that multiplier 5. I'll change that to 38. And again, same thing with the sell signal. I'll change that to 5, and then again, change the length to 38. And again, click on OK. Now, by doing that, we'll go ahead and run a quick scan. I'll run this one, for example, on the S&P 100 again. We'll run it through today's closing price, and I'll just go ahead and click on our Start Exploration here. Okay. So again, this will run through all 100 securities. And what this is going to look for, it just look for any securities that are possibly giving us a signal based on the prices crossing above or below that indicator right now. And here up here, you can see that I've got 98, almost 99% being rejected. So that means that I did find at least one security, and that's exactly what happened. So Intel is actually showing us that we do have a sell signal right here on the most recent data. So if you want to take a look at it, of course, you just open it up, and then you can apply the indicator, make sure that you have the correct length on there. So this is the number of periods of 38 and the multiplier 5. Click on OK. And let's see. Let me check that out. Number of periods 5 and 38. Is that right? And click on OK. Hang on for 1 second. Let me go back to here. Let me take a quick look at this and make sure that I did that correctly. That is using the current exchange date and time. Let me go back into that report for just a second. Yeah, that is giving us a sell signal. Let me go back into that scan. Oh, there it is. See, here's a good example. This is a lot of times what happens to me is I get going so fast sometimes when I'm doing these things that it's obviously really easy to make mistakes. And what I did is I chose the wrong exploration. So in this case, I'll choose this one this time, and let's see if that works. So we'll go ahead and click on that one and try that one more time here. So I'll just run it on the exact same database and see what kind of signals I get here. So there's a perfect example, and that's why I like to put in, for example, like the date column. It just helps me kind of check things and make sure that, again, like I say, that hopefully I'm looking at the right data. All right, so here we've got Gilead. It looks like I have a buy signal here, so let's try this one. Hopefully this one looks a little bit better. And again, I'll go ahead and change, or basically take a look at that. That looks good. There we go. And here you can see, for example, if I kind of zoom in here, you can see the reason why we're getting a buy signal is because it's breaking above that upper level right now, which is giving us a buy signal right there. So it's super simple to do a scan on it. If the results don't match, sometimes you just have to kind of go back and see exactly where maybe you made a mistake. And then the last thing I created here is I also created an expert advisor that will give you the buy and sell signals here on your chart. So to see that, just go back into your expert advisor, for example. And what you're going to look for here is, again, look for any of the LMS systems. So I'll scroll down, and this is the LMS Super Trend Expert. And underneath the symbols tab, you'll find a buy signal and a sell signal. And again, same thing. What you want to do is you want to go in here and you want to change the length to make sure that they're the same ones that you did your scan on and or your system test. So for the multiplier, I'll change that to 5. And for the length, I'll change that to 38. And if I do that, for example, like on the buy signal, I want to make sure and do the exact same thing for the sell signal there as well. So I'm going to go ahead and change the multiplier to 5. And again, the length to 38. And click on OK. And again, click on OK. And click on Close. Okay. And now you can see that those buy signals now will match up exactly where those prices are trading through that indicator there. See that? So again, a lot of different ways to go about this. Now, you might be asking, well, is this, am I trying to push, for example, like this super trend, formula or strategy? And the answer is absolutely not. What I'm trying to do is, my goal here at Learn Metastock is to help teach you different ways to look at the program and maybe give you some different ideas of different ways that you can put these things together. Because the real strength about Metastock is it gives you the ability to ask what if questions. What if I put it this way? What if I use this system, and so forth? And that's where we can really help you out there. So let me just take you on a real quick tour of the Learn Metastock website. If you haven't seen us before, the website is just learnmetastock.com. And primarily where we help people is we do it a couple different ways. We do 3 live classes per week on Tuesdays, Wednesdays, and Thursdays at 12 o'clock Eastern time. And I know a lot of people can't make those. So if you can make those, it's actually really helpful because, of course, you can always ask your questions during the live classes. But if you can't make them, then if you go to the video library, you'll find that underneath our live class recordings, we put up the most recent recordings that we've done there as well. So you'll never miss a class if, you know, again, like I say, if you can't make our live classes. Now, inside this video library, this is where the majority of our customers spend their time, is that inside here, we have well over 100 different, for example, different types of teaching of using how to use Metastock, different ways to use it, how to use formulas, and so forth. And basically, all you do is just open up the category that's of interest to you, click on the Watch Now button, and a lot of times what will happen is that whenever we create something to go along with the video, you'll find it over here on the right-hand side underneath this resources section. So, for example, like in this case, we've got 2 different things. We've got a download that could go along with this video, and we also have a quiz that could go along with it as well. And what's nice about a lot of the quizzes that we have with the videos is that these will reinforce a lot of the concepts that we're trying to teach you in the video. So if you're trying to get up to speed with the Metastock program, again, like I say, this can be just a really good learning tool for you. So these are the different categories that we have. And as you can see, we've got a lot of different types of categories. And as you expand them, there's a lot of different videos underneath each one. For example, an expert advisor, option scope, system testing, for example. The Explorer, this is probably my favorite tool inside the program. This is an extremely versatile tool, but I really enjoy that one quite a bit. Formula writing, I think, is actually very important depending on how much you want to get out of Metastock. Not everybody wants to be a formula writer. Not everybody wants to create their own formulas. But what we can do is we can teach you at least the basics. So you're going to have that much more faith in why you're getting a buy signal or sell signal, you know, on that system, for example. You know, we have classes just on the RMO, stops, the indicators. Probably our most popular section, though, is our trading strategy section. Excuse me. And in our trading strategy section, like what we did today, what we covered today is what we call the super trend class. But what we do is we'll take an idea out of a book, a magazine, whatever the case may be, and I'll just take my time explaining exactly how to interpret, how to use that particular system, and more importantly, how to use it inside of Metastock. And in addition to that, if I create the formulas, which I do with all the trading strategies, is that I'll make these all available for you to download directly into your Metastock program. So depending on the level of experience that you have with Metastock, I can save you a massive amount of time because I have already spent a massive amount of time in here creating all these different things here for you. But we have, you know, of course, product reviews. We do interviews. If you're a real-time trader, for example, you might want to take a look at our Zenith videos. And one last thing I just want to cover just quickly here is underneath our weekly market outlook, we just give you a quick, you know, overview of what the markets are doing for the week. We do this once a week. But one thing that we've added recently that might be of interest to you is that there's an add-on that Metastock sells, which is called the Fire add-on. The Fire add-on is an extremely powerful add-on. And after doing some research on it, what I found is that there's a lot of people that have that add-on, but maybe don't have the in-depth knowledge of really how to put it to use. It's an extremely powerful program that'll give you relative strength ratings of securities against other securities, against industries, and so forth. But again, like I say, getting to that point for a lot of people has been kind of tough. So we do 2 different things. Number one, I have a full training class on it that will tell you about every nut and bolt inside of that thing and teach you how to use it if you want to use it. And in addition to that, what I've also am doing on a weekly basis is I'm running 2 different reports and putting these up on the website for you. And what's nice about that is that if you, for example, if you click on this download report and then open up the Excel spreadsheet, what this will give you is it'll give you the report for these different types of setups. And this first one that we're going to take a look at here is just called the External Relative Strength Report based on industry. And the way that you read this is that, of course, these are the names of the companies over here on the left-hand side. Then the next column here, for example, is a closing price. And then these columns here, the 1-year change, the ERS and the industry ERS, these represent the external relative strength. So the external relative strength for the security, and then the industry external relative strength. And this number, this 1-year change, this is the percentage change of that security over the previous year. Okay, so where this actually becomes pretty powerful, first of all, this is going to basically give you this, again, like I say, on a spreadsheet type of format. You can sort, for example, on any column that you want. So say, for example, I sort on the industry. I want to just basically look at securities in the strongest industry. I can sort on that column, and then I can look at the individual external relative strength of the individual securities. And also I can see how much they've changed over the last year. Now that's going to give you a lot of really good information, number one. But this other report here, this is a 20-point gainer report. And if you click on this download and then open this one up, I'll go ahead and open this one up. What this one's going to do, it's going to take that same, all those same securities, for example. Oops, let me move that back over. It just jumped over to my other screen. So let me drag that back over here. So this one, again, same thing. We've got our securities over here on the left-hand side, the external relative strength, and what the external relative strength was approximately about a month ago, so 21 days ago. Remember, there's typically about 5 trading days in a week and about 21 trading days in a month. So this is what it's saying is that the external relative strength a month ago was 6. It's currently at 36. The price is 588. And the 1-month change for that security is 107%. That security has moved up over 107% over the last month. So same thing, if you want to sort, for example, on any of this data here, you can sort on any of this information and look for securities that are just starting to move, for example. So this is another report that we're providing now inside of the Learn Metastock website there for our members there. And I know there's a lot of people out there that have the add-on for FIRE, but maybe something like this could be beneficial there to you as well. All right. So that's what I have for you tonight. I hope that that was helpful. If anyone needs to get in touch with me or has any questions or anything else, you can always drop me an email there at admin@learnmetastock.com. I'll be more than happy to try to help you. So
Hey,
I'll go ahead and pass it back over to Kelly. And once again, thank you very much.
Kevin, can you hear me? He can't hear me. Okay, we did have a question for Kevin, but it looks like he's not able to hear me. So let's go ahead and switch the presenter over to me. Okay. Okay. Looks like we're back on me here, and let me go ahead and do this. Okay, just getting everything lined up here. Okay, we look good. Okay, so thank you again to Kevin for his great presentation today. There's always a lot to learn from Kevin and Learn Metastock. He does a great job of explaining things in Metastock very methodically, so you can really understand how to use them, why they work, and why they can help you. So one of the things I like about Learn Metastock is, you know, you've invested in Metastock, or hopefully you've invested in Metastock, and Learn Metastock helps you take full advantage of everything you're getting out of Metastock. So if you're new to Metastock, or if you've been using Metastock for years and years, it doesn't matter. I highly recommend taking advantage of learnmetastock.com. We even have new employees here at Metastock take advantage of Learn Metastock to help them learn Metastock the quickest, most fastest way possible. So highly recommend learnmetastock.com. As Kevin showed you, there's 3 live training classes per week. There's hundreds of instructional videos. There's at least 21 basic Metastock videos, 4 expert advisor videos, 3 system tester videos on stops. There's all the videos on all the different trading methods that he's put together, the interviews. Like he said, instead of taking the time for yourself to actually try and develop all these things, use what Kevin has done and get out of it. Okay, so in addition to all those classes, there's 9 templates, 62 indicators, 14 expert advisors, 28 system tests, 13 explorations. So there's a lot to take out of learnmetastock.com. So learnmetastock.com is $99 per month. We're offering a trial here where if you pay for the first month, you'll get the second and third month for free. So it's a buy one, get 2 free offer. You can take advantage of that at metastock.com/learnmetastock 3 for 1, or you can call 800-882-3040 or visit metastock.com/sales chat. And that's true to take advantage of any of the offers that we've had from the summit today. I will say we have had an amazing day of learning. Every one of our presenters has offered some type of insight that could help you in your trading. I hope you found it useful. And let's go ahead and take advantage of this Trader's Action Pack. There's so much to be had by taking advantage of this. There's so much training, so much that you can apply to your charts and take to the next level. So you'll get Steve Bigelow's CPS Plus training, that 10 hours of training plus Steve Bigelow's add-on. You get the GoNoGo Complete, which gives you all the trends, the icons, the squeeze, all the scans, all the expert commentary. 3 months of the RMO ATM, plus the 3 master classes that are coming up here in just a few weeks. Those will be starting on May 20th. You have Anne-Marie's Target Rich Trades, which we covered a little while ago. You saw her in-depth market analysis. Just imagine being able to do what she does and look at it on a chart-by-chart basis. 3 months of Kevin's LearnMetastock.com, 2 years of Stocks and Commodities, and the Unleash the Power of Metastock workbook and videos. Plus, if you need Metastock, we'll give you a free trial if you get the Summit Action Pack. So give us a call, 800-882-3040. Visit metastock.com/summit deal, or go to metastock.com/sales chat. And any of our reps will be happy to help you answer any questions about any of the products you've seen today. Thank you once again for joining us here at the Trader Summit. I know I've learned a lot. I hope you've learned a lot. And keep on watching. Thanks, everyone. And if you're watching on YouTube, make sure to like and subscribe. Thanks, everyone. Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.